Hey warriors, welcome back to part number 2 of this marathon. I hope you have enjoyed the marathon part number 1 and you have had a good understanding on all the topics. If you still have any doubts, please feel free to reach out to me. But beyond that, I'm really looking forward to your responses and the confidence that you've already built up in part number 1. Now, if you have not seen part number 1, please pause this video, go back, complete part number 1, get that confidence. Then let's get into part number 2 because part number 2 is going to be the most interesting part of your series. We're looking at part number 2 covering 7.5 hours worth of discussion on 3 most important topics for your examination. Topics which are going to cover your question number 1 and question number 3 together, which is your PGBP, IFHP and capital gains. Now, major of the 7.5 hours is going to be dwelled upon in PGBP because we had, like I said, 80 odd adjustments to be covered in PGBP. So a good amount of time has been given in PGBP. Approximately 4.5 hours will go into PGBP itself. Looking at the questions, people, if you're looking at only the marathon may probably be for an hour and a half. But yes, the questions together made it about 4.5 hours. Along with it, we had IFOS and capital gains as well. So yes, this video is going to be capturing all the 3 things. I hope this video helps you as much as it did help the students who were sitting on the face-to-face setup as well, because at least what response I got from the face-to-face students was they understood everything really well and they now feel a lot more confident in these 3 chapters compared to what they were in the past. So yes, happy learning to all the people who are looking at this video. I'm sure that this video is going to be as fruitful as possible to you and you're going to have an extreme amount of confidence in this video no matter what. Now, before I close, let me also clarify this one thing. People, PGBP in this topic has been provided in an adjustment format so that you understand the concepts on a PGBP level. But please don't worry about it. The format of PGBP, the comprehensive question format, is also part of the discussion, is part of part number 3. You will see that in part number 3, we'll have a comprehensive question, at least 2 questions solved with you in the class itself, so that you have a good understanding on how question number 1 will look like. But yes, please use this video to understand PGBP properly and to trigger how the adjustments work out in PGBP so that you have a better clarity if any question or adjustment comes in examination. Thank you everyone for watching this instructions. Looking forward to your responses very soon. Have this video ensured and enjoyed as much as possible because you are going to have it wonderfully done for yourself. Take care everyone. I will see you all in the part number 3 of the video very soon. Alright, people, we're going to start some really important topic for our discussions. Keep this attention in mind because at the end of the day, this chapter is going to carry a lot of weightage in your examinations. Comprehensive, MCQs, separate individual questions, any of the sorts can be expected in this question. Yes, we're looking at the topic called as PGBP. Yes, now I've made some very simple notes for you. We discussed it together in the class, so we're going to read it from the notes. Let's make it easier enough to that extent. Yes, we're going to be discussing about this topic called as PGBP, people. And to start PGBP, the first thing you need to know is the charging section. There are a couple of things in PGBP which are taxable and you need to keep those things in mind. Item number 1 on the screen is PGBP. So items which are taxable under PGBP, first item itself is PGBP. Item number 2 is sale of any indirect tax licenses. You can get profit on sale of importer entitlement license, duty drawback license. All those licenses if you sell will be taxable under PGBP. Third one says compensation which is given for termination or modification of any business contracts. Any modification or termination happening for business contract will become taxable under PGBP, while traditionally this is the capital receipt, but income tax says please tax it under PGBP. Fourth one says any kind of remuneration which is received by a partner from a partnership firm. Look very carefully, I'm looking at remuneration, people. Only remuneration is taxable under PGBP. If it is share of profits, exempt. Yes, but also note that when you say remuneration, remuneration also includes interest. So which means I talk about interest and salary. Interest and salary both are taxable under PGBP. Share of profits is fully exempted. Yes. Then we moved on to understanding what is called money received under Human insurance policy. Next one was government grants. I gave you an understanding on this, people. If you receive any government grants, we will ask a question. Is the grant relating to an asset? If it is relating to an asset, accounting standard comes and tells reduce from the cost of the asset. Income tax agrees. So income tax also says reduce from the cost of the asset. If you tell no, grant is relating to a normal item, then I will say account says tax it off. I will also say tax it off, matlab charge to PNL. Charge to PNL. That's what government grants looks like. Yes. Then we moved on to understanding the last thing, people, the most important one for exam, which is called gifts, benefits or perquisites relating to a business activity. Please note, if I get a gift from an employer, I have a limit of 5,000. If I receive gift from non-relatives, 50,000. If I receive gift under a business, no limit, fully taxable. No limit with a fully taxable. So be very careful on that. Yes. How does a question come in examination? It will basically say value of incentive received. Value of incentive received, you will take it and you will say simply fully taxable and leave it there it is. Yes or no? Yes? Good. Now to understand PGBP format is fairly simple. There are 4 adjustments that you're going to make. You're always going to start from net profit. You're always going to start from net profit as per accounts. You're going to start from net profit as per accounts, make 4 changes. One is disallowance, next is addition, third is allowance, fourth is reduction. We gave an English understanding on this, people, so be careful. If something is there in the P&L and I said don't want, if something is there in the P&L and I said don't want, which means I'm doing disallowance, meaning you claimed as an expense in P&L, I said not allowed and therefore disallow. Second is addition. Addition matlab it is not there in P&L. Income tax says bring it now. Bring it now matlab add. Matlab add. Third one item is called allowance. Allowance matlab it is not there in P&L and I'm saying give it off. And I'm saying give it off. And item number 4 is called reduction. It means something is there in the P&L and I'm saying it's not part of PGBP. It is part of other heads. So simply remove it off. Simply remove it off. So notice what we have done. We have done disallowance. Disallowance matlab expense is there in P&L but income tax says don't want and therefore I will disallow. Addition says it is not there in P&L. I am saying add it off. Add it off. Third one says allowance which is not there in P&L. Not there in P&L and I am saying claim it as a deduction. And fourth one is there in P&L but I am saying don't want because other heads. People, the treatment is fairly simple. Disallowance matlab plus, addition matlab plus, allowance matlab minus, reduction matlab minus. Now, if all the treatment matches, accounts also says keep it, I am also saying keep it, no problem, then I will ignore adjustment. I will ignore adjustment, but make sure you write a note on that. Make sure you write a note on that to get the understanding. Are we clear? Yes. So 4 items, people. If I am there in P&L and I say don't want, disallow. If it is not there in P&L, I am saying add. Addition. If it is not there in P&L, I am saying claim. Allowance. And if it is there in P&L and I am saying I don't want in PGBP, reduction. If it is there in P&L, I am also saying keep. Ignore. If it is not there in P&L, I am also saying don't want. Ignore adjustment, and that's what the answer is. Clear? Yes. Come on, let's read each item one by one, people. You remember the template format we did example? Yes, more for your understanding. We then moved on to understanding the type of business models. We said there are 3 business models in P&L. One is speculative business, one is specified business, the last one is other businesses. Specified we'll discuss later. Speculative basically means a transaction where there is no delivery. A transaction where there is no delivery. In income tax, ICI says only 2 things are speculative. One is intraday trading and second is speculative itself. Question itself comes and says it is speculative, you call speculative. If not, it is intraday. People, if I tell it is futures and options, normal business. If I tell it's derivatives, normal business, doesn't matter. Yes. Now, what is the significance here? Income taxes. If you have any speculative loss, what do you have? Speculative loss. If you have speculative loss, please set off only against speculative profit. If you're not able to set off, carry forward for a period of 4 years. Carry forward for a period of 4 years to get the statement accordingly. Yes, please notice restriction is only on loss, no restriction on profit. Which means if I give you an example where I say speculative loss is 8 lakhs and PGBP income is 10 lakhs, can I set off? No, because there is a loss in speculative. I can only set off against speculative profit. No set off allowed. No set off allowed. But if I say the speculative is a profit and normal PGBP is a loss, no problem. Can I set off? Yes. Normal PGBP loss has no restriction other than salaries and therefore you can permit set offs. Yes or no? Yes. Then we moved on to understanding allowances one by one, people. From here things are fairly simple. We started understanding what should you do. Treatment is simple. If account says allow, I will say allow. If account says don't allow, I will say disallow. I will say disallow. Yes. So the first item on the screen, as you can see, is called expenditure relating for building, plant and machinery. People, what kind of expenses can you incur? Repair expenses, insurance, maintenance, taxes to be paid. All those things income tax says. If accounts is saying allow, I will also say allow. But if account says no, this is a capital expenditure, then I will say disallow. Then I will say disallow only if it is there in the P&L. If it is not there in P&L, I don't care. But notice, if it is not there in P&L, it means it is an asset. You have to claim. depreciation. Yes or no? Yes. So what does it say? All accounting rules to be followed. Ignore in PGBP, else make adjustment to rectify the error. Make adjustment to rectify the error, which means if it is paid for business reason, allow. If it is paid for revenue nature, allow. If it is expenses like insurance, municipal tax, allow. But if it is any capital expenditures, I will say disallow if they're in P&L and then claim depreciation Ha ya na? Yes, come on. Example says, people, I have a building which is taken on rent for 5 lakhs. Ground floor is used for running beverage shop and first floor is given on rent to Mr. Tada for 12,000 per month. People, same building, 2 split. Same building, 2 split. First building I am using for my business. Second building is for rent purpose. Hey, rent purpose matlab LOP HP. Rent purpose matlab LOP HP. Up whatever is coming from that part of the business, can I claim it as an expenditure? No. Notice what has happened. I said I've paid 40,000 as empty. People, 40,000 empty is paid for entire thing. In which case 20,000 is for business. Can I continue? Yes. Which is there in the P&L? Yes. Therefore, ignore adjustment. Therefore, ignore adjustment. The next 20,000 which is relating to LOP, can I put it in PGBP? No. I will say disallow. I will say disallow. Another 10,000 was paid as water charges. People, 10,000 was paid as water charges for both the buildings. Half of the building is business. Is it there in the P&L? Yes. Should it be there in P&L? Yes. Therefore, ignore adjustment. The next 5,000 rupees is pertaining to HP. Can I put it in P&L? No. Is it there in the P&L? Yes. Therefore, disallow. Now tell me, people, this extra 5,000 rupees of water charge and the 6,000 rupees of and the 20,000 rupees of MT, can I claim it in HP? You can claim MT in HP because it's part of the format. Can you claim 6,000 in HP? No, you will not do it, which means you will disallow in PGBP and ignore. What will you disallow? 6,000 you will disallow in PGBP and ignore. The 20,000 you will disallow in PGBP and claim under IFHP. Are we clear? Format clear? Yes, come on, keep that thought in mind. Then we move down to the important topic which is called depreciation. People, depreciation says you have to claim depreciation only if certain conditions are satisfied. There should be an asset. You should be the owner of the asset. Asset should be first put to use, except for passive usage assets like fire extinguishers. In that case, you can claim the depreciation from the date on which it is ready for usage. And you cannot claim depreciation on land and goodwill. Yes, so 4 conditions. There should be an asset. You should be the owner. Asset should be first put to use. Passive use is allowed from ready to usage, and no depreciation on land and goodwill. If you want to claim depreciation, there are certain rules you have to follow. First, you need to know the method of depreciation. You have 2 methods. One is SLM, one is WDV, whereas SLM is only for power sector. WDV is for all sectors, including power sector. Yes. Second, we said you need to know when should you start using the asset, because income tax makes it easy for you. Income tax says I am going to claim depreciation based on the usage day. Which means if you have put to use the asset before Gandhi Jayanti, or in simple words 180 days. If you have put to use the asset for more than 180 days in the first year, I will claim depreciation for full year. If you have put to use the asset for less than 180 days in first year, I will claim depreciation for half year. If in the current year you did not even put to use the asset, I will claim no depreciation, but the asset will become part of the block. Which means next year you can only claim full depreciation. Yes or no? Yes, which means it says on the opening WDV you will always claim full depreciation. On the more than 180 you will claim full depreciation. On the less than 180 you will claim half depreciation. You did not put to use, I will say no depreciation. Ha ya na? Yes, come on. Then we understood a couple of things, people. Purchasing date is relevant, not relevant? Not relevant. And second is you are going to check for Gandhi Jayanti +1, obviously, because 180 days. Yes, so Gandhi Jayanti +1, Gandhi Jayanti is 2nd October, +1 means 3rd October, which means if I purchased on 4th October, half depreciation. 3rd October, full depreciation. 2nd October is the answer. Full depreciation is the key answer. Yes. Great. Then we moved on forward to understanding the method of depreciation, and after you do that, we started finding out the rates of depreciation. Yes, help me out on the rates, people. We gave you a simple trick. A simple trick is I'll give you some rates to remember. For every other rate, you'll ask a question. Is it good for India, or is it good for India, or is it depreciating faster? Is it good for India, or is it depreciating faster? If you say yes, I will say 40%. So think about it. Building is sitting at 10%. Furniture goes along with building 10%. Temporary building 40% because depreciating faster. Plant and machinery is 15%. Vehicle is also 15%. Computer is 40% because depreciates faster. Mobile phone is 15%. Mobile phone is not part of computer list. Mobile phone sits in 15%. Keyboard and mouse 40%, part of computers. Then I said aeroplanes 40% because depreciating faster. What is good about aeroplanes? Yes, Air India is a problem, but leave. Aeroplanes is depreciating faster and therefore 40%. Books 40% because depreciating faster. Yes, less usage timelines, depreciating faster. Yes or no? Yes. Then we have something called air pollution control equipments 40%. This is good for India. Windmills 40% good for India. Renewable energy source 40% good for India. Life saving medical equipments 40% good for India. Intangible asset 25% is the answer key. Yes, that is what the statement says. So it is building of 10%, furniture is 10%, plant and machinery goes 15, car goes 15. If I am going computer, it is 40, aeroplane is 40, windmills is showing 40 because good for India. Then we have solar panels like 40, renewable energy source. Life saving equipments are 40, books are showing 40, ships are at 20, intangible assets are at 25 except for goodwills. Any doubts on the topic? Clear? Yes. Now that you have the rates of depreciation, people, the only thing left is to find out the format. Where we said WDV, the format is very simple. You start with opening WDV, add the additions which are either more than 180, less than 180, or not put to use. At this stage, what you will reduce from that is called sale value of the asset. What you reduce from that is called the sale value of asset. Don't reduce WDV, reduce the sale value of the asset. What you'll arrive in your hand is called closing WDV. On this closing WDV, I'll ask if it's part of opening, full depreciation, part of 180, full depreciation, less than 180, half depreciation, not put to use, no depreciation, and arrive at the final opening WDV of next year. Yes or no? Careful on couple of things. One, when you are reducing sale value is always reduced on FIFO logic. It's always reduced on FIFO logic, meaning whatever sale value you have, first reduce from opening, then reduce from 180 days, then reduce from less than 180 days, then reduce from not put to usage. Yes, at this stage, people, the one thing to be understood is what do you mean by the cost of an asset? Income tax says follow AS10, which means all the costs which you will incur for the asset to be put to use will be capitalized. All the costs which you will incur until the asset is put to use will be capitalized. What and all expenses will you incur? Purchasing price, freight charges, installation charges. If I have to pay GST, I can claim it as the cost when ITC is not available, because if ITC is available, it's not a cost. Yes. Then we said trial run expenses. One of the most important thing called interest on loan until the asset is first put to use. Very good. Interest on loan until the asset is first put to use will also be capitalized, and then you will start reducing two items. One is government grants because it is relating to an asset, and then sale of any trial run products because it is not asset is put to use, and therefore you will get the cost of the asset. The most important thing to be kept in mind is when you are purchasing an asset, please make sure all payments are happening by prescribed modes. Payments happening in cash more than 10,000 to a single person in a single day will be ignored. This is an asset. It will be ignored. You cannot disallow. It is not there in the P&L. Hello. Yes. Check this example, people. Question says, I am purchasing a computer of 80,000, which is purchased on 10th December by paying 60,000 rupees by account pay check and 20,000 rupees by cross check. The whole of the amount is there in the P&L. The whole of the amount is there in the P&L. There is something wrong. How did you put a computer in the P&L? This is a capital asset, which means I will first disallow the full 80,000. I will disallow the full 80,000. Now, is it there in the P&L? No. When it is not there in the P&L, I have to now claim depreciation. When I was looking for depreciation, asset was showing 80,000. But in that 80,000, 20 I paid by cash exceeding 10,000 in cash, which means I cannot take the 20,000 round. Left of amount is 60,000. Only on the 60,000 can I claim depreciation at the rate of, very good, 20%, because asset is put to use on December. Asset is put to use on December after Gandhi Jayanti, matlab half depreciation. So 60,000 into 20%, which is 12,000 as the right answer for the statement. And therefore, people, what will you do? You will disallow the full 80,000 as a capital expense and then claim only 12,000 as a depreciation. Yes or no? Yes or no? Be very, very careful and smart about this. Good to go? Yes. Careful on a couple of things. One thing, people, you cannot make any payment more than 10,000 in single person, single day, other than by prescribed modes. Prescribed modes are not there. What are the non-prescribed modes? Cash, cross check, bearer check. Very good. 3 payments which cannot be taken into consideration. These are the 3 payments to be ignored of. Any building which is of personal nature, kindly disallow. Can you claim depreciation? No, don't claim depreciation also. But people, if I am going to bring my building, my personal building into business, if I am going to bring my personal building into business, income tax says the day on which you bring the building, please calculate the WDV and only that value should be brought. Only that value should be brought. But if it is not a building, imagine if it is a car, income tax says don't do WDV and all. What you purchase, same price you can buy. Same price you can buy. Understand, people? Imagine if I bought a building 10 years ago at 10 lakh rupees. At 10 lakh rupees. Today I want to use the building for my business. People, I have to recognize this in my asset. Will I recognize at 10 lakhs? No. Income tax will say calculate depreciation for 10 years and give me what is the remaining WDV. Give me what is the remaining WDV. But imagine if I bought a car. What did I buy? Imagine if I bought a car 10 years ago for 10 lakh rupees. Today, do I have to recognize the WDV? No. I can recognize it at 10 lakhs itself. I can recognize it at 10 lakhs itself. So understand what is happening. A building of personal nature, if bought today, will be recorded at WDV. But any other asset will be brought at original cost. You will not record the WDV. This is an original cost element. This is an original cost element. Are we clear? Are we clear? Are we clear? Once you have done depreciation, people, there are a couple of things to be kept in mind on WDV level. First things I have told you, when you have a sale value, please reduce on FIFO logic. Second is when you calculate depreciation, please calculate only at the end of the year. We do not calculate depreciations in the middle of the year. Unlike accounts, you will not do depreciation for 2 months, 3 months and all. Depreciation will only happen at the end of the year, which means I will give you this format, and the format says only when you have a closing WDV can you calculate depreciation. If there is no closing WDV, can you calculate depreciation? No. Which means in that case you will move to CG. How does it move to CG? You will move to CG when the block becomes negative. The block becomes negative. How will block become negative? When the sale value is more than the cost of the assets. When the sale value is more than the cost of the assets. Yes or no? Yes, that is what we discussed of. Then we moved on forward to understanding what is called as your additional depreciation. Income tax says if you are a manufacturing sector. What sector are you? Manufacturing sector. If you are into manufacturing sector, income tax says you can now claim something called additional depreciation only in year 1. Only in year 1. You can only claim additional depreciation in year 1 on your new plant and machinery. New plant and machinery will now get an additional depreciation at the rate of 20% if the asset is put to use for more than 180 days, but will get 10% in year 1 and 10% in year 2 if your asset is put to use for less than 180 days. Notice it is 10% of original cost of the asset. It is not 10% of WDV, it is 10% of original cost of the asset. Couple of things to be kept in mind. One, how do you take out your new plant and machinery? Income tax says all plant and machinery will be taken excluding second hand machinery ones which are used in office premises, ones which are installed in residential places, ones which are not used in factory like motor vehicles, ones which are not used in factory like motor vehicles except forklift. Forklift alone is considered as a vehicle used in the factory and therefore eligible for additional depreciation. And finally, any assets on which you can claim 100% deduction like scientific research and specified businesses. Yes or no? Yes. But notice second, people, additional depreciation is only under ATR. You cannot claim this deduction under DTR. Yes, which means DTR, this deduction will be denied to you. Now, does it make a difference on the asset value? No. You can still claim the depreciation in normal route. Just that you cannot claim additional depreciation. Yes, help out people. Additional depreciation is eligible for manufacturing at the rate of 20% on new plant and machinery, not including second-hand machinery, office machineries, motor vehicles except forklift, assets which are used for 100% deductions only under ATR. If you are using it for less than 180 days, please claim 10 in year 1 and 10 in year 2. Keep that thought in mind, and that's how the depreciation works out to you. Yes, if you are going to follow SLM logic, income taxes, forget block concept. Do it individual asset wise. And play a very simple game. Follow accounting policy. In accounts, what will you do? You'll calculate depreciation and each asset will give you profit or loss. If you get a loss under accounts, this loss under accounts will be allowed in income tax in the form of terminal depreciation. The same loss in accounts is the same loss in income tax. Terminology changed to terminal depreciation. In simple words, you can claim it in P&L. If you make a profit in accounts, income tax will also say profit in income tax, but now call it balancing charge and tax it in P&L. But if at any point of time your profit goes more than the cost, in that case you have now made a problem. You are not using the asset for business, you have now used the asset for sale purposes, which means I will move to CG. In my example, people, if the asset was worth 8 lakhs, and I have now been able to make a loss of 1,40,000, I made a loss of 1,40,000, income tax will say this is terminal depreciation, claim deduction. If I made a profit of 0.3 lakhs, income tax says balancing charge, put in P&L. But if I sold the asset for 8.2 lakhs, a profit of 2.6 does not just come from business. In that 2.6, 20 pertains to capital gains and 2.4 pertains to PGBP as balancing charge. That is what we wrote off, and therefore we have confirmed 1.4 is terminal depreciation, 0.3 becomes balancing charge, and 2.6 becomes balancing charge till 2.4, and 20 becomes capital gains. Are we clear? Yes, I have already told you people, SLM does not come in exam very much. It's completely fine. Power sector is not expected. Let it go. Yes. Balancing charges and income. Yes. Clear. Then we moved on forward to understanding the last thing, people, which is called unabsorbed depreciation. Income tax says if you are going to make a loss in business, the first set of loss that you make should be allocated to depreciation in the form of UD. Because you have a special benefit. Any UD that you have can be carried forward for a period of infinite years and can be set off against any head except salaries. Whatever other losses you have will be carried forward for 8 years to be set off against any head except salaries only in the current year, because in the future year you can only set off against PGBP profits. Check karo. So if I have given you a loss of 8 lakhs and your depreciation was 15, I will say how much is your loss? 8. Allocate the whole 8 to depreciation, which means UD became 8 lakhs. In the second scenario, my loss is 2 lakhs, depreciation is 5 lakhs. How much is your depreciation? 5. How much loss do you want? 2. So depreciation became 2 lakhs. In the third case, my loss was 10 lakhs, depreciation is only 7. Income tax is 7 became UD. Extra 3 is your PGBP loss. PGBP can be carried forward for 8 years. UD will be carried forward for infinite years. And last case, I made a profit. People, if I have a profit, is there any UD to claim? No, ignore it off and move forward. Are we clear? Yes, this is how depreciation looks back to you. Any doubts? Yes. So what did we discuss, people? We first discussed methods. SLM, WDV, more than 180, full depreciation, less than 180, half depreciation, not put to use, no depreciation, add to the block, add to the block. If I am going to claim books, 40%, computer goes 40%, mobile phones are 15%, plant and machinery 15%, windmills are going 40%, building is going 10%, furniture is going 10%, intangibles are going 25%. In the WDV format, you do opening plus additions minus sale value on a FIFO logic to arrive at the closing WDV. If the closing WDV is positive, claim depreciation. If it becomes negative, go CG. Additional depreciation is only given for manufacturing setup up to a limit of 20% only in year 1, or 10% in year 1 and 10% in year 2. For less than 180 days cases, I can only give this additional on new plant and machinery, excluding second hand machinery, office premises, residential premises, motor vehicles except forklift, any asset on which you can claim 100% deductions. You can claim 100% deductions. Please note, additional depreciation is not under DTR. You can't claim it under DTR. That is what the logic is. Yes or no? Yes. After this, people, things will become simpler. We are now looking at scientific research, where I told you under scientific research, any expenses you incur can be fully claimed as deduction except for land. Second thing, any donations made for scientific research can be fully claimed as deduction as long as the entity is approved. However, in-house expenses can be claimed under both the regimes. Donations can only be claimed under ATR. DTR says not allowed. And that's what the understanding comes back to you. Yes or no? Yes. People, here I gave you an understanding. If you remember, I have donated 40 lakhs to IIT for purchasing land. Hey, what did I do? I donated or I bought? I donated. He buying is not your botheration. In which case, you will get the full deduction of 40 lakhs under ATR. I have bought a building for 7 crores and a land for 3 crores for my scientific research. Can I claim 10 crores? No, I can only claim 7 crores. 3 crores will get disallowed and capitalized. If it is there in the TNL. Yes. Third one, I am donating 5 lakhs to IISc on 10th July 25. This IISc was caught in fraud and approval was withdrawn in December. People, first I gave donation, that time they were approved. Later they were found as a fraud and they were denied approval. Can my donation be denied? No, my donation will be eligible because when I gave, he was approved. And therefore my donation is still eligible for deductions, will not have a problem, only under ATR. People, then we moved on to call specified business, which we famously call as likey business. I told you there are some businesses you have to keep in mind. Business number 1, hotels with 2-star and above, hospitals with 100 beds, warehousing facility goes for sugar and agricultural produce, do not take edible oils, and finally fertilizer productions in India. For these kind of businesses, income tax says any expenses you incur, whether it is revenue or capital, claim 100% deduction except for land. Land ke tavara you can claim every asset as deduction. Sorry. Okay. You can claim any asset as deduction except for land in the scientific business. But there is one problem. People, in the likey business, if you end up making a loss, you can only set off against likey profits. But because this is likey business, you can carry forward for infinite years, no restrictions whatsoever. So likey loss goes against likey profits, period of carry forward infinite years. Please notice, huge deduction. Income tax says only under ATR. You are not giving this deduction under DTR. I am not permitted to claim this deduction. But here is where you have to understand how does DTR work. People, income tax says just because I am saying you cannot claim it under DTR does not mean you will deny the deduction. It means now I will consider this as normal business. And if I am considering this as normal business, I can claim depreciations. Meaning the capital expenditure will get disallowed and then I will claim depreciation. Please don't miss the depreciation. That is more important. Are we clear? Yes. So specified business is the data that we have discussed and that is how it works. That is how it works. At any point of time, if you end up selling your asset of scientific research or specified business, income tax causes problems. Income tax is if you are going to sell your scientific research asset. What are you doing? Selling your scientific research asset. Whatever profit you made will be taxable in your hand in the name of balancing charge. Same as SLM logic. Same as SLM logic. If you are going to sell your specified business asset, again, whatever profit you made will be taxable as balancing charge. Same as SLM logic. But if you are going to use your asset and send it off to your other business, scientific research will have no problem. They will say, it's okay, my child, you can send it off to other business, cost will be 0. But if you are doing specified business, likey business should not send away his assets to other business, not allowed. If a likey business is going to send away his assets to other business, income tax will say, I assume that you always use the asset for normal business only. I will assume that you always use the asset for normal business only, which means whatever years you hold it in the past, depreciation I will give you. Whatever excess you tried, reverse. Whatever excess you claim, reverse and tax it in the likey business, because likey business ended up claiming extra deduction. Likey business ended up claiming extra deduction. Now what is happening, people? Likey business will reverse. So asset is now alive. This cost of the asset will now become asset cost for normal business. Let's take a small example and understand this. I am giving you an illustration where I am coming and saying I have an asset worth 50 lakhs which I bought for my likey business. I used this asset for 2 years, and after 2 years I decided to transfer. People transfer where? I decided to transfer to normal business. Income tax will say you have made a mistake. You should have not transferred it to your normal business. Tell me how many years did you use it? 2 years. How much depreciation I would have given assuming this was a building? How much depreciation I would have given? First year I would have given 5 lakhs. Next year I would have given 4.5 lakhs. Total I would have given 9.5 lakhs, which means 9.5 lakhs worth of depreciation eligible to you. How much did you end up claiming? Full 50 lakhs. You ended up claiming full 50 lakhs in first year, which means you have made a mistake. How much extra did you claim? 40.5 lakhs you claimed extra. Income tax will say kindly reverse. Who will reverse? Likey business will reverse. Now likey business reverse 40.5. Normal business will say, okay, give it to me. At what price? 40.5. Normal business will charge depreciation on 40.5 is the answer. I will charge 40.5 is the answer. Any doubts? People, if I change this asset and I say this is not likey business asset, this is scientific research asset, does income tax have a problem? No. Income tax will say, beta, what did you sell it for? 0. So let the cost also be 0. Is there any balancing charge? No balancing charge. Problem is only for likey business. Check what is happening. If I am looking at likey business, it says selling in the open market, whatever profit you made, taxable. Selling to a normal business, scientific research, no problem, transfer at nil. But if you're selling it to likey asset, if you're selling a likey asset to normal business, I will say, my dear child, you should have not done that. Calculate depreciation for the period utilized, which in my case was 9.5, which means excess depreciation will get reversed as balancing charge, and the same thing will now become the cost of the asset for my normal business. Will become the cost of the asset for my normal business. Are we clear? Yes? Profit, balancing charge. Yes, same profit, balancing charge. Clear? Yes? We'll give an example. Let me do it once again for you. Yes, we'll give an example once I'm done with this. Give me 1 second. We are moving on forward to what is called deferred expenditures. Deferred expenditure means those expenditures which can be amortized over 5 years. Income tax has identified 3 assets, people. Asset number 1, preliminary expense. Income tax is any expenses you incur before the business commencement will be preliminary expense to be amortized over 5 years. Next is called VRS expense. Income tax is any VRS expenses you are going to incur will be amortized over 5 years. Please note, I am only talking VRS. If in exam I give you retrenchment expense, that is expenses incurred for you sending out your employee, will I amortize over 5 years? No. There it will be claimed direct expense in the current year itself. So notice, VRS expense amortized for 5 years, retrenchment expense claimed in P&L right away. Claimed in P&L right away. Are we clear? Yes. Last one is called family planning expense, which you and I discussed is only eligible for companies. So for inter-syllabus, disallow. For inter-syllabus, disallow. Hayana. Hayana. That is what deferred is, people. 3 deferreds. One is preliminary expenses for 5 years. VRS expenses for 5 years. Retrenchment expense for current year itself. Family expense gets disallowed. Family expense gets disallowed. Hayana. Yes. Come on. We move on forward to what is interest loan. We discussed this already. I told you when you have any loan interest, I will ask a question. Why did you take the loan for? You said, sir, I took the loan for personal reason. Disallow the interest. I said, sir, no, sir, I took the loan for business reason. Then I'll ask, what are you doing in the business? You said, sir, I'm using this loan for the purpose of my asset purchase. Income tax will say, capitalize the interest until the asset is first put to use. Same as borrowing cost standard. Same as borrowing cost standard. Any asset interest after the asset is put to use will get P&L. Will get P&L allowed as a deduction. Yes, people, if I tell, no, sir, I bought the loan for my normal business reasons, then interest is allowed as deduction. No issues whatsoever. No issues whatsoever. Hayana. Yes. So once again, people, took the loan for personal reason. Disallowed. Took the loan for business asset. Capitalize until the asset is first put to use. After that, charge to P&L. After that, charge to P&L, and that's what the understanding is. Yes. Then we moved on to call contribution to funds. Income tax is, if you are contributing to the fund, I will ask which fund are you contributing to. First fund is called NPS, National Pension Scheme. Income tax says, my dear child, in National Pension Scheme, please do not contribute more than 14%. If you contribute more than 14%, whatever extra you contribute, I will disallow. Disallow for whom? For the employer. I will disallow for the employer. A 14% of employee's salary. 14% of employee's salary. So understand, people, I am the employer, you are the employee. I will contribute for you not more than 14% of your salary. Of your salary, where for NPS, salary means basic plus DA forming part. Basic plus DA forming part, full stop. Nothing else will be taken. It's only basic plus DA forming part. Are we clear? Are we clear? Good. Then we moved on forward to understanding the most important one, people, which is called PF. Which is called PF. I wanted to understand this one. People, there are 2 contributions. One is employer, one is employee. Look carefully. Employer contribution means I am paying for you. For me, it is a expense. For me, it is an expense. Income tax says, for me, when it is an expense, it has to be paid before the due date of return filing, which is 31st October. If I don't pay before 31st October, you will disallow and allow when I actually pay. But if I pay before 31st October, I can claim it on accrual basis itself. When did I accrue? Current year. When am I paying? Next year. Can I still claim current year? Yes, because I paid before 31st October. Yes or no? Yes. People, second is called employee contribution. It is your own money you are depositing. Your own money you are depositing. Is that relevant to me? No. But what am I acting as an agent? Which means you will give me your money. I will deposit to the fund. You will give me your money. I will deposit to the fund. Income tax says, when employees trusting you with the money, please deposit this by 15th of next month itself. If you don't deposit by 15th of next month, whatever money you got will become a permanent income. Can I claim a deduction later? No deductions will be given later to you. Will be given later to you. Yes, yes, yes. So what have we discussed, people? We have showed employer contribution to be paid before 31st October of assessment year. Employee contribution has to be paid before 15th of next month. Before 15th of next month. Take this example, see if you understand it. I said A Limited is contributing 10 lakhs as PF. Who's contributing? Employer. Employer is contributing 10 lakhs as PF, where 5 lakhs is employer and 5 lakhs is employee, which means it's confirmed 5 is employer, 5 is employee for the month of Jan 26. People, for Jan 26 month, employer contribution I can pay up to 31st October 2026. Jan 26 sort of payment I can make before 31st October 26. But employee contribution I have to pay before 15th February 26. Yes or no? Yes. Look what has happened. I paid 1 lakh each on 14th February. People, employer, good. Employee, good, because 15th ke before ho gaya. Yes. Next, I paid 2 lakh rupees on 1st April. Employer will say, no problem, fine. Employee will say, you should have paid before February, which means this amount will become income. This amount will become income. 50,000 was paid on 31st October. Employer will say, no problem, leave it go. Employee will say, no, I want this as permanent income. The balance amount, which if you check is 350, which is 150, 1,50,000 has been paid on 10th December. Employer will say, not allowed, disallow as expense because you paid after 31st October. Employee will say, I will also treat as income because after 15th February. So which means for employee I will say 1, 2 and 3. For employer I will only say 1, which is 1,50,000, which is 1,50,000. Are we clear? Are we clear? Yes. So 2 contributions we learned, people. One is employer NPS limit is 14%. Then we learned employer PF 31st October. If it is employee PF, 15th of next month. 15th of next month. Yes. Good. If that understanding has been made clear, people, we move on forward to understanding a small other things. First thing is called bad debts. Income tax says if you do bad debts, follow accounting policy, which means if accounts says allow, I will say allow. 2 rules for you to follow, people. First, you should have booked sales. Second, you should have written off the debtor. If you have written off the debtor and booked the sale, I will give you bad debts. Otherwise, I am not giving you the bad debt. The most important thing, people, is that if you receive money back, this is called bad debts recovered, and bad debts recovered will be taxable under the head PGBP. Will be taxable under the head PGBP, even if your business is shut down, because bad debts was claimed under PGBP. Recovery will also be taxable under PGBP. However, notice the adjustment of exam. If the question says that the bad debt was 5 lakhs and officer only allowed 4 lakhs, and the officer only allowed 4 lakhs, next year I got 3 lakhs recovery. I got 3 lakhs recovery. I will tell the officer, sir, how much did I get? 3 lakhs. In that 3 lakhs, what happened? 1 lakh I paid you tax already. 1 lakh I paid you tax already. How? I wanted 5, you gave me 4. I already taxed 1. So I will say out of 3, I am not taxing 1. I will only tax. How much is there in the P&L? 3. How much should be taxed? 2. How much extra is there? 1. Which means 1 I will minus. 1 I will minus because it is an income. Minus because it is an income. Yes or no? Yes. Let me give you one more example. Check. People, it says sale of 70 made. Sale of 70 made. 40 was received. A 40 received, matter over. Pending account 30. The 30 was treated as bad debt. The 30 was treated as bad debt. Assessing officer, while making the claim, only allowed 25. I wanted 30. He gave me 25. I did not get 5 lakhs. In the future, I got 28. In the future, I got 28 and I put the full 28 in the P&L. I will say I put full 28 in the P&L, but in that 28, I have already paid 5. I will not pay tax on 5. I'll pay tax only on 23. How much is there in the P&L? 28. How much should be there in P&L? 23. How much is excess there in P&L? 5. 5 on the income side should be minus, and therefore I will say 5 lakhs can be claimed as a reduction. Can be claimed as a reduction. Are we clear? Are we clear? Sure about this? Yes? Perfect. With this, people, we are moving on to our last few things. First is called residuary expenses. Income tax says if nothing is given, follow simple rules. Tell me if it is allowed in accounts. Tell me if it is allowed in accounts. Accounts will allow an expense only when certain rules are followed. Rule number 1, it is incurred by you. It is incurred in the current previous year. It is incurred in the current previous year. 3, it is of revenue nature. 4, it is incurred for business purpose. And 5, it is not a offense of a law payment. It is not an offense of a law payment. 5 reasons, people. It should be incurred by you. It should be incurred in the previous year. It should not be incurred for personal purpose. Should not be capital expenditure. Should be incurred for business purpose, and should be not an offense payment of a law. If you satisfy all the conditions, I will give you the deduction. Otherwise, no deduction is being granted to you. Yes. Examples, people. If I do donation, allow, not allow? not allowed because it is not incurred for business purpose. I did CSR, not allowed because not for business purpose. I did donation to political party, not allowed because again not for business purpose. I gave gift to doctors. I gave gift to doctors. Doctors are not allowed to take gift. This is an offense of a law and therefore disallow. I made a penalty under an act. Disallow. I made a penalty to a government for delay in completing highway project. People, is this a law payment? No, it is a normal business contract. Penalty will be allowed as deduction. Interest paid under GST. Allowed. People, offense matlab penalty. Interest is not offense. Interest is not an offense and therefore interest is allowed as deduction. Compounding fees paid for avoiding jail time. Because like penalty, interest paid to MSME under 23 of MSME Act. I clarified to you, this is not an income tax, this is an MSME Act, to be disallowed, Then incentive given to articles for clearing CA final. People, is it a business expense? Yes. Can you claim an expense? Yes. Therefore, allowed. I have given traveling expenses for visiting client's son's marriage. People, this is a client's wedding and therefore this is a business expense, fully allowed as deduction. Retrenchment compensation paid to employee, payment allowed in the current year itself. Payment allowed in the current year itself, fully allowed as deduction. It is not BRS. Yes. Hey, I have incurred puja expenses for Diwali festival. Allowed because business expense and therefore allowed as deduction. Ayana. Yes, that is what the deduction we discussed about. Shall we proceed? This is the mark of allowances, people. Yes, if you remember what and all we discussed. First we discussed expenditure for building. Then we did depreciation. Then we did scientific research. Specified business. Interest on loan. Contribution to funds. NPS and PF. Bad debts recovery. Deferred expenditures over 5 years, and finally residuary list. Any doubts on this part? Clear enough to go? Yes. Smaller disallowances to be kept in mind, people. One is called related party transaction. Income tax says please do not transact with related party more than FMV. Please do not transact with related party more than FMV. Very, very important to know what is FMV. What is related party? Related party means only my side of the family. My side of the family matlab self, spouse, parents, lenient ascendants, lenient descendants, my siblings. People, in-law side is not covered. Apo any expenditure with in-laws are allowed as deduction. Any expenditure with in-laws is allowed as deduction. Doesn't matter. Expenditure with my side of the family should be at FMV. If it goes more than FMV, I will disallow. Point number 2. People, I'm only talking about expense. I'm not talking about incomes. Income in less than FMV will still be considered as it is. I don't change anything because this topic only talks about related party payments or expenses. It doesn't talk about related party incomes or profits. Yes. So careful on this. 3 examples, people. Salary paid to spouse or a sister. Salary paid to spouse or a sister. Related party, no, and therefore allowed. Purchased furniture from sister of 10 crores when market value is 3 crores. People, this is furniture. Matlab, this is an asset. I am only talking about expense, not part of the discussion. Therefore, allow. Third one, any kind of sale of goods of 50,000 to father when I should have sold for, sorry, I have sold for 10,000 rupees, whereas I should have sold for 50,000 rupees. Any problem? No, because sale transaction is not covered. Only purchase transactions are required to be checked. Ayana. Yes. So if you want to cover something under this chapter, 3 things to be kept in mind. It should be a purchase. Purchase should be from related party and should be in the P&L. It should not be capital, should not be from in-laws, and should not be a sale. If that happens, I will ignore the transaction. Are we clear? Yes. Come on. Next one says cash payment. Anything in the P&L. Purchase matlab P&L expense. Yes. Second thing is called cash payment. We have discussed this multiple times, people. We have said any payment made to a single person in a single day other than by prescribed modes like account pay check, account pay draft, electronic clearing system, and any electronic modes like debit cards, credit cards, UPI, RTGS, NEFT, and IMPS with Beam, Aadhaar Pay will all be considered as permitted modes. Unpermitted modes are cash, cross check, bearer check. These three payments should not be made more than 10,000 in a single person in a single day. If you do, I will disallow the expense. I will disallow the expense. People, if you have expensed it off in the past year, if you have expensed it off in the past year and current year you're making payment in cash, current year you're making payment in cash, is the expense there in the P&L? Is the expense there in the P&L? No, it is not there in current year's P&L, but you have done a violation. Because you have done a violation, income tax will say treat as income in the current year. Treat as income in the current year. So understand, if it was expense, I would have disallowed. Because there is no expense, I am treating it as income. I am treating it as income. That is what the conversation is. Notice, any expenses booked earlier and paid in the current year will be treated as an income in the current year. Income in the current year in the year of violations. In the year of violations. However, yes, people, I do have some exceptions. I do have some exceptions. Exceptions where you can make the payment in cash. Exception number 1, payment made to farmers. Exception number 2, payment made in a city where there is no bank. Exception number 3, you are sending your employee to a station where there is no bank and he is going more than 15 days. He is going more than 15 days. 4, if I am giving any termination payments to my employee less than 50,000. If I am giving termination payments to my employee up to 50,000, maybe you have not written, not important, it's okay, let it go. Yes, and the last one is, if you are going to have any set of payments, if you're going to have any set of payments, any receivable payables are getting knocked off, I will treat this as a permitted transaction. I treat it as a permanent transaction. Yes, people, how do we cover this? Cash payment should not go more than 10,000, but yes, I do have an exception. If you're a transport operator, limit becomes 35,000, single person, single day. Single person, single day. Are we clear? Are we clear? Yes, come on. Last one, people, the most important one, which is called TDS, defaults. Income tax says, if you are going to have a transaction where TDS is applicable, please do 2 things. Deduct before 31st March of the PY. Deposit the TDS before 31st October of the AY. Yes, deduct before 31st March of PY, deposit before 31st October of AY. If you do the conditions properly, I will give you the expense. If you violate any one of the 2 conditions also, I will disallow the expense fully for non-resident, 30 for resident. 30% will be disallowed for resident, 100% will be disallowed for non-resident. It's not a permanent difference. You can claim it in the year in which you deposit TDS. You can claim it in the year in which you deposit TDS. Are we clear? Yes. So look at some examples. I have audit fees. I have audit fees of previous year 25-26. People, your previous year, previous year. Your previous year. An audit fees of previous year 25-26 was paid on 10th December 25. Was paid on 10th December 25 without TDS. People, did you do TDS? Apo, you forgot to deduct. If you forgot to deduct, I will disallow. Disallow how much? 30%, because audit fees will be to a resident payment. Will be to a resident payment. Next, I said audit fees of 4 lakh rupees of 25-26. This year, next year. This year, TDS deduction happened on 28th March. Within time, after time? Within time. Payment made on 10th September. Within time. All conditions satisfied. Expenditure is allowed as deduction. Which year? 25-26. Allowed in 25-26. Audit fees is 4 lakhs. 24-25. Last year payment. Last year payment TDS deduction happened on 20th March. Last year I did on time. But last year I deposited on 21st December 25. Up last year I would have disallowed how much? 30%, which is 30,000 rupees. But you made the payment. No. When did you make the payment? This year. Can you claim it as deduction? How much? 30,000 will be claimed in the current year. You will not claim the full 1 lakh. You will claim the 30,000 rupees. You will claim the 30,000 rupees. Are we clear? Are we clear? Yes. So TDS default people, deduct before 31st March, pay before 31st October of assessment year. If you don't do it properly, non-resident 100%, resident 30%, allow in the year of payment of TDS, allow in the year of payment of TDS. Resident and non-resident for the other person, not for me. Yes, for the other person, not for me. Are we clear? Yes. Last items, people, is called TDS, tax payments. Income tax says any payment you make under income tax will get disallowed. Any payment you make under income tax will get disallowed. Any payment you make under other laws will get allowed, except for penalty. Which means if you notice, income tax I paid, can I claim? No. Income tax interest I paid, can I claim? No. Income tax fees I paid, can I claim? No. Income tax penalty I paid, can I claim? No. Indirect tax I paid, yes. Indirect tax interest I paid, yes. Indirect tax fees I paid, yes. Indirect tax penalty is no, because this is 37. Residuary will say don't claim, don't claim. One more thing, people, MSME interest not allowed. MSME interest is not allowed. Any doubts on this part? Are we clear to go? Yes. Come on. Last two people, it says non-monetary perquisite tax. We discussed this in salaries. We discussed this in salaries where I told you an employee will say tax on non-monetary perquisite is fully exempt, and therefore employer will say no expense for him. Employer will say no expense for him. Employer will say disallow. Employer will say disallow. So any non-monetary expenses tax will get fully disallowed in the hands of employer. In the hands of employer. Yes, yes. Then comes gratuity, where we discussed if you have any kind of gratuity payments. If you have any kind of gratuity payments, I will ask, where are you going to make the payment? Are you going to make the payment to a fund, or are you going to make the payment to a employee? If you are going to make a payment to a fund, I will give you time until 31st October of AY. If you are going to make the payment to an employee, I will give you time until 31st March of PY. I am going to give a time limit of 31st March of PY. Any payment made after that will get disallowed and allowed in the year of payments. Allowed in the year of payments. Yes. So example says a provision for gratuity is 6 lakh rupees which has been debited to P&L account in current year. In current year. Out of the same, 2 lakhs was paid in the same year and balance was paid to employee within the due date of ROI. Can I claim? Can I claim? No, because employee is only till 31st March. I have to pay it by 31st March. Failure makes disallowance. I can only claim 2 lakhs. Everything else will get disallowed. Everything else will get disallowed. Yes, come on. Next, people, is called other payments on cash basis. 43B. We discussed there are some payments where income tax says you can only claim deduction when you pay before 31st October of AY. There are some payments which you have to claim only by 31st October of AY. First item is government payments. Example, tax and interest. Second is called bank payment. Example, interest on loan. Third payment is called employee payments like bonus, commission, contribution to funds, leave encashment. People, am I covering salary? No, salary can be delayed also, not a problem. These are the three payments which has to be made on time. Which has to be made on time. Fourth one is railway payment, which is use of railway assets. If you don't make these payments before 31st October of AY, I will disallow. Allow in the year of actual payment. What are the payments, people? Tax, interest on loan, bonus, commission, leave encashment, contribution to funds, and railway asset usage will be paid only by 31st October of AY. If you do it by 31st October AY, you can claim it in the current year. Otherwise, disallow and claim it in the future years. Claim it in the future years in the year of actual payments. Yes, that leaves me with the MS payment alone. MS payment ke before one conversation we had, people. If at any point of time the question says, I have some pending interest. I have some pending interest which I converted into loan. Can I claim the deduction right away? No. Income tax will say, please pay the loan, then I'll give the deduction. Please pay the loan and then I'll give the deduction. Matlab, if I have 1 lakh rupee and I converted the 1 lakh rupee into a loan. Now I have only paid 10,000 from the loan. Can I claim full 1 lakh? No, I can only claim 10,000 rupees as a deduction. Yes, that is what we wrote, people. If you remember, any kind of interest, if converted into loan, can be claimed as deduction only when it is what is paid? Loan amount is paid. Loan amount is paid. Loan amount matlab the actual loan amount or interest loan amount? The interest loan amount. The converted interest loan amount should be paid before claiming the deduction. Yes, that leaves me with MS payments, people, where income tax says if you have any micro and small enterprise, please notice only micro and small. I am not covering medium enterprises. Any micro and small enterprises are to be paid on time, and time means as per MSME Act. MSME Act says when you have a written agreement, please pay before promise date or 45 days, whichever is earlier. If it is an oral agreement, please pay before 15 days. Delay from your side, I will disallow next day itself. I will disallow next day itself and claim it in the year of actual payments. Yes or no? Yes or no? Look, people, I am giving you a small example. See if it works for you. Yes. Example is I sold on 20th March. I promised him 5th April. I sold on 20th March. I promised him 5th April. I made the payment on 3rd April. Any problems? No, because if you check 20th March to 5th April, 45 days ke andar hai, which means promise date is taken. Promise date is 5. I made on 3rd. Time limits have been satisfied. Matlab payment is allowed. Therefore, ignore. Yes, sir. Yes. 20th March I did the transaction. 30th April I have promised. 30th April I have promised. Tell me, am I within timelines? Yes. Yes. I have paid the payment only on 1st May. People, I made payment after the due date. If I made the payment after the due date, can I claim deduction? No. I will disallow when 20th March. I will disallow. 20th March I will disallow and allow on 1st May. 20th March is your previous year. Matlab disallow in your year, allow in next year. Allow in next year. Next one, people. 20th March I have promised. 17th May I said I will give it. 17th May I said I will give it. Will you allow? No, because it is after 45 days. So I calculated 45 days and that became 4th May. Yes, I have made the payment on 15th May. Tell me, can I make the payment? No, income tax will say disallow in the current year, allow in the next year. Next one, 20th March is the sale. I have promised 17th May. Can I allow? No, I allowed only 4th May. I made the payment on 30th April. Is it within the due date? Yes, therefore, ignore transaction, not any problems. Not with any problems. Yes or no? Yes. Then came in 20th March. I said I will not promise you anything. People, if you don't promise anything, this becomes oral agreement with a promise of 15 days. Due date became 4th April. I paid the payment only on 19th April, which means I have delayed the payment. I will disallow, allow in the next year. This is the critical one. People, I transacted in 1st January. I promised him 20th March. I promised him 20th March. Check 45 days. Check 45 days. Way more than that. Way more than that. So the promise date became 15th February because of 45 days. I made the payment to him on 31st March. I made the payment to him on 31st March. I made the payment after 45 days. Will you disallow? Will you disallow? Why? Because I incurred into the same year. So I disallowed also same year. I paid also same year. So I allowed also same year. Net effect is 0. Therefore, ignore transaction. Ignore transaction. Are we clear? Are we clear? Are we clear? MS has nothing to do with due date of return filing. MS only talks about 45 and 15 days. You will allow it in the year of actual payment. Doesn't matter. When you pay, you claim it off. Simple, straightforward. Are we clear? Are we clear? Yes. This is how your PGBP computation looks like, people. This is how your PGBP computation looks like. Just to finish this off, small theoretical topics. Theoretical topic number 1 is called presumptives. People, the only way to remember presumptive is always check for turnover. Always check for turnover. If the question says your turnover is up to 2 crores, you are eligible for presumptive. If your turnover is up to 50 lakhs in a profession, you are eligible for presumptive. Income tax says at any stage if your turnover is up to 2 crores or up to 50 lakhs, then in that case you are eligible for presumptives, in which case you can ignore the whole PGBP. You can ignore the whole PGBP and do a direct computation. What is a direct computation? All transactions you did by permitted modes, I will tax 6%. All transactions you did by non-permitted modes, I will tax 8%. All transactions you did not even get the money, 8%. All transactions you do not get money, I will tax 8%. Once again, people, all transactions by permitted modes, 6%. By non-permitted modes, 8%. Money not received, 8% is the answer. Yes. Now the one mistake you're horribly going to make in exam, 6, 8, whatever you do is your PGBP income. The 6, 8, whatever you do is your PGBP income. It is not your total income. It is not your tax payable. It is your PGBP income. Matlab you will take the PGBP income, add all your other incomes. You will arrive at total income. On the total income, you will pay tax. On the total income, you will pay tax. So if I give you an example saying my turnover is 1 crore and all transaction was in permitted modes, I will do 1 crore into 6%. Answer is 6 lakhs. Answer is 6 lakh. 6 lakh is my PGBP income. Add my HP, add my IFOS, add my CG. You will now have total income. On the total income, you will now compute tax payable. Careful, it is not your tax, it is not your income, it is your PGBP. Are we clear? Yes. Same way, if you're going profession, income taxes offer minimum 50% as your PGBP income. 50% of turnover. 50% of turnover should be offered as PGBP income. Are we clear? Are we clear? Yes. And finally, if you are going for a transport operator can claim PGBP income. Transport operator can claim presumptive if he has less than or equal to 10 vehicles at any time in the previous year. In the current year, I should have up to 10 vehicles. If I have up to 10 vehicles, I can choose presumptive. How do you choose presumptive? This time I am looking for trucks. I am not looking for turnover. I am looking at how many trucks you own. I am not looking at how many trucks you put to use. I am looking for how many trucks you own. And that stage I will come and say, take the trucks, split. Take the trucks and split. If it is heavy good vehicle, what vehicle? Heavy good vehicle. Ton should be more than 12. Tons should be more than 12. In which case I will tax you for 1,000 per ton per month per vehicle or part thereof. 1,000 per ton per month per vehicle or part thereof. If you tell me it is light good vehicles or medium good vehicles, in simple words, less than 12 tons, I will tax flat 7,500 per month per vehicle or part thereof. Hey, again, this number will arrive at PGBP. This number will arrive at PGBP, will not give you income, will not give you tax, will arrive at PGBP income. People, at this stage, you can ask one simple more question. In the business and the professional case, I gave you the turnover limit of 2 crores and 50 lakhs. The numbers can be jumped by 50%. The numbers can be jumped by 50%. Matlab 2 crores can become 3 crores, 50 lakhs can become 75 lakhs. If you can promise me 95% of your turnovers by prescribed modes, you promise me 95% of your turnover by prescribed modes, I will give you a turnover limit of 3 crores and 75 lakhs. Any change in the percentages? No, percentage remains the same. The percentages will remain the same, meaning business gets 6 and 8, profession gets 50%, vehicle gets 1,000 per ton or 7,500 per month per vehicle. Yes or no? Yes or no? People, if you are choosing presumptive, please note, you don't have to take any PGBP adjustments. You don't have to take any PGBP adjustments. It is assumed that all adjustments are done. Do you have to do audit? No. Do you need to maintain books? No. Which means your due date of return filing becomes 31st July of AY. 31st July of AY. I am telling no. I actually think presumptive is bad. I want to offer less than presumptive. You can choose to offer less than presumptive. If 3 things are satisfied, you should maintain books, get them audited, prepare PGBP statement. Prepare the PGBP statement. Give me the whole statement. Due date of return filing becomes 31st October. Business has a special rule. A person choosing presumptive business needs to continue for 5 years. If he chooses to drop out in 5 years, for the next 5 years, he cannot choose presumptive. He'll have to go normal provisions. The one thing which I probably noted down for you people to always keep in mind, if you are having any interest on capital or salaries to partners, what do you have? Interest on capital or salaries to partners. Business and profession will say not allowed. But transport operator will say claim, no problem. Transport operator will say claim no problem. Matlab in the presumptive taxation, only one expense I can claim, which is remuneration to partners. That too only for transport operators. That only for transport operators. No one else gets a deduction. Are we clear? Yes, more for CA final people, not at CA inter level, but still just for your reference point. Clear? 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 Presumptive people. Business, profession, transport operator. Business turnover 2 crores or 3 crores. Professional turnover 50 lakhs or 75 lakhs. Truck wants up to 10 vehicles anytime in the previous year. Business, if I do permitted modes, 6%. Don't receive money itself, 8%. Non-permitted modes, 8%. Professional asks 50%. Light good vehicles, 7,500 per month per vehicle. Heavy good vehicles, 1,000 per ton per month per vehicle. For every month the vehicle was owned. For every month the vehicle was owned, not used. Not used. Owned is the criteria. All PGBP adjustments are ignored. All PGBP adjustments are ignored except for one item. Remuneration to partners only for transport operators. A books maintenance not required. Audit requirement not required. Due date of return filing 31st July. If you get an audit done 31st October, books are to be maintained. PGBP to be prepared. PGBP to be prepared. Any doubts on this part? Are we sure on this conversation? Yes. If you have understood this, people, everything else we have already covered off. There is not much to discuss of. Firm taxation, I told you not to read from firm perspective, read from partner perspective. From a partner perspective, I can get 3 payments. Share of profit, interest on capital, salary to partners. Yes. If I am receiving share of profit, for me it is exempt because firm will pay tax. If I am receiving interest on capital, I will tax only up to 12%. I will tax only up to 12% because firm can only claim 12%. Hey, hello. Yes, which means people interest on capital, partner will tax only 12%. People, partner got 8%, he will tax 8%. Partner got 11%, he will tax 11%. Partner got 15%, partner will tax 12% because firm only got 12%, partner will also tax 12%. Are we clear? Yes. Coming to the salary income taxes, if a partner is going to receive salary, partner can only receive salary if he is a working partner. Partner can only receive salary if he is a working partner. Sleeping partner does not get salary. Second, if you are a working partner, I will only give you salary if it is approved by the deed. Deed should confirm you are eligible for salary. Deed should mention how much salary I am going to give to you. And deed should not give you any salary on a retrospective level. You should only get salary for the current year. You should only get salary for the current year. So check, it says there should be a partnership deed. You should have any payments authorized by this deed. Payment should not happen retrospectively and all payments are only to working partners. Interest can be given to all partners. Interest can be given to all partners. Salary should be given to working partners is the condition. Is the condition. Now, how does the salary work is not important for you people. You can choose to skip it off. It's completely fine because of late ICA gives you the question. Question will say salary received by partner allowed under firm. If the question says allowed under firm, matlab it is taxable for you. Yes. If the question says salary to the partner is 7 lakhs, firm is only allowing 4 lakhs. Taxable amount is 4 lakhs. Simple, straightforward. Leave it there. Leave it there. Yes or no? But otherwise, just to remember people, the provision is if you want to tax any salary of the partners, firm can claim a deduction only up to slab limits. Only on the slab limits. The slab limit is for the first 6 lakhs, I can give salary up to 90% or 3 lakhs, whichever is higher. Whichever is higher. Other payments ke liye, other book profit, it is 60% of the book profit remaining is the answer. Yes, what is the salary people? Salary is 90% or 3 lakhs, whichever is higher for the first 6 lakh rupees. For everything balance, you can give 60% to him. You can give 60% to him. That is the salary which the firm can give. Which the firm can give. Partner can take that salary and tax it in his hands under the head. Under the head PGBP. Don't tax it under salaries. Can you give standard deduction? Can you take 75,000 DTR? No, all taxable under salaries. Yes or no? Yes or no? That is what the conditions are. Any doubts on the conditions? Are we sure? Yes. Tell me people, cash payment limit is 10,000. Employer NPS 14% of employees salary. Interest on MSME disallow. Late payment to medium enterprise ignore because late payment is only for micro and small enterprise. Promise date for micro and small enterprise 45 days in oral and 15 days in written. 45 days in written and 15 days in oral. Bonus I have to pay before 31st October of assessment year. TDS has to be deducted before 31st March of TY. TDS has to be deposited before 31st October of assessment year. Resident TDS default 30%, non-resident is 100%, additional depreciation amount is 20%, vehicle which is allowed forklifts, vehicle which is allowed is forklift. Warehousing taken, not a specified business, edible oil. Warehousing eligible for specified business, sugar and agricultural produce. Hospitals want 100 beds, hotels want 2-star facility, cannot claim specified business deduction on and land, cannot claim specified business deduction on land. Donation made for scientific research only for ATR. In-house expenses incurred for scientific research, both expenses except for land. Intangible asset depreciation is 25%, windmills are going 40%, employer PF wants 31st October of AY, employee PF wants 15th of next month. I made payment, I accrued payment last year. Today I made payment by cash. Permanent income in the current year. Transport operator cash limit 35,000. Farmer cash limit. No limits have been confirmed to you. No limits have been confirmed to you. Capital repair expenses disallow and claim depreciation. What should I reduce from my WDV block? Sale value of the asset. I should reduce only sale value of the asset only on FIFO logic. Gandhi Jayanti before full depreciation. Gandhi Jayanti after depreciation, not put to use. No depreciation. Passive use assets ready for usage. Bad debts recovery taxable under the head PGBP. Business is not there, still PGBP. Officer denied bad debts in the past, reduce from current year recovery. Reduce from current year recovery. Interest unknown taken for asset, capitalize until the asset is first put to use. Interest unknown taken for purchasing wife jewelry. Personal expense disallow. Donation made to political party disallow. Gifts given to doctors disallow. Gift given to article assistants allowed as a deduction. Article assistants are part of the employee scam and therefore allowed as. Alright, we're looking at the adjustments, people. Let's see if you're able to understand the adjustments. I'll show you how the flow of the adjustments is first. Let's figure that part out so that you understand this carefully. I've already sequenced it off in section wise so that it becomes easier for you. But the point is not that. The point is to understand the middle column. The middle column says part of P&L, which means indirectly I'm confirming to you that this amount is either there in P&L or not there in P&L. Keep that thought in mind. Which means where and all items are not there in P&L. Where and all items are not there in P&L, I may end up ignoring it. But where the items are there in P&L, I may start deciding whether to plus, minus and stuff like that. So be very careful on how you read it off. Are we ready to read? Yes, chalo, let's go. It says transaction is value of benefits received from clients during the course of the profession. I have received value of benefits, nothing but gifts. I have received a gift. Yes, which means I have now confirmed that I have received a gift. A first line item says it is part of P&L. It is part of P&L. A PGBP says gift is taxable. Is it there in the P&L? Should it be there in P&L? Therefore, very good. Yes, next one. I am saying same conversation, not part of P&L. People, this time it is not part of P&L. Is it there in the P&L? No. Should it be there in P&L? Yes. Which side? income side. This is benefit received. This is gift received. Therefore, it's an income. Please add 10,500. Please add 10,500. Hey, you understood what is the flow of the questions? Same flow, people. Come on. It says industrial power tariff concession 2,50,000 received from government. Nothing but government grants. Nothing but government grants. Hey, government grants, we told that if you have any government grants, I will ask a question. Is it from asset or normal? Do you see an asset? No, which means normal to be taxed in P&L. Is it there in P&L? Yes. Should it be there in P&L? Therefore, ignore adjustment. Clear on the template? Come on. It says earned 1,20,000 in share speculation business and lost 1,80,000 in commodity speculation business. A speculative activity says speculative loss should be set off only against speculative profits. How much loss do I have? 180. How much profit do I have? 120. Can I set off? Yes. So I set off, leaving me the loss of. Can I set off the 60 against other heads? No, which means I will have to carry forward. Now people question says it is part of P&L. Appo 60,000 is there in the P&L. 60,000 of loss or income. Loss is there in P&L. This loss has to be reversed. Matlab first I did minus. Now I will do plus. Therefore it is plus 60,000 to be carried forward for 4 assessment years. Very good. People, you understood what I did? It doesn't matter what nature it is, as long as it is speculative, it is covered, which means a speculative loss set off against speculative profit. 60 was left as a loss. Could I have set off against other heads? No, which means I had to carry forward. Upon it being in the P&L is wrong, and therefore what was there in the P&L? I reversed. How much was there in P&L? 60 in the plus or minus? In the minus. Now I will reverse, matlab plus and disallow, plus and disallow. Please carry forward for a period of 4 assessment years. Are we clear on the template? Yes, come on. Next one says repairs and maintenance incurred of 2,000 rupees for the period October 25 to September 26. Notice the dates, something is wrong. A bit of it is part of current year, the other bit is part of next year. Mark on the dates. Mark on the dates. Whereas the problem states assessee follows cash basis of accounting. Hey, what does cash basis accounting mean? When I pay, it is an expense. When I earn, it is an income. Am I bothered which period it is for? No. Which means, tell me people, I paid for next year also. Does it matter? Because I'm following cash accounting, which means I can claim the full expense in the current year itself. I can claim full expenses in the current year itself. Hey, P&L mein hai, should it be there? Therefore, very good. People, if this question would have told mercantile system, I would have said no, 31st March alone I can claim. All payments after 31st March should be part of next year P&L. Therefore, disallow that much. Because I'm following cash accounting, it means everything I pay is an expense. Everything I pay is an expense. Up to date are not relevant when it comes to cash basis. Are we clear? Be very cautious on cash basis accountings, people. That is where you overplay it. Yes, as an accounting student, you have a problem. You never understand what cash basis looks because you have been dwelled upon with the fact that you are following mercantile logics. Yes, doesn't work always. Be careful. It says total expense of the car was 78,000. Car is used for both business and personal reasons. 3/4 is business reason. Problem is for 1/4 of it because 3/4 is business. Should be part of P&L. Yes, is it there of P&L? Yes, therefore ignore. Problem is with the 1/4. 1/4 is personal. Can I put it in my P&L? No. Is it there in the P&L? Yes. Which side is it there? Expense, which means I will reverse. How much will I reverse? I will reverse 1/4 into 78,000. Answer is 19500 to be plus. 19500 to be plus. Are we clear? Sure about this? Yes or no? Anyone with a doubt? Good to go. Yes, come on. Let's go on the depreciation, people, the bigger ones. It says depreciation as per income tax rules is 28 lakhs, which also includes an additional depreciation of 1,50,000 on new plant and machinery. And the question says it is there in the P&L. People, it says depreciation as per income tax rules. Do I have a problem? No. Already there in the P&L. Should it be there in P&L? Therefore, very good. Therefore, ignore. But if you're a little smart, you'll figure it out. What is the problem with that? What is the problem with that? People, additional depreciation is already in the list because it says including. So there is no problem. But I never confirm what regime are we following. I never confirm what regime we are following. Hey, you have told ignore on the assumption you're following DTR. People, if you are following DTR, you can only claim normal depreciation. You cannot claim additional hey, hello. Yes, which means people, if you are following DTR, additional depreciation is not allowed. Is it there in the P&L? Should it be there in P&L? No. What did I do first? Minus. Now I will do add only for 1,50,000. See if you understood. It's a very, very small, subtle difference, people, which can make a huge impact for you in examination. So understand what is happening. Yes or no? Yes or no? Yes or no? People, the whole 28 lakhs is there in the P&L. And this 28 lakhs had additional depreciation in it. When I said I want DTR, I can only take normal depreciation. Upon whatever additional I put in the P&L is wrong. How much additional did I put? 150. I will reverse, which means add 150 in DTR. Are we clear? Yes, come on. Keep the thought. Question says, I am depreciation, not including depreciation on new machinery, purchased and put to use on 23rd September for manufacturing activity. Cost of the asset is 3,10,000. P&L mein nahi hai. People, what is the question saying? It says that the depreciation which is there in the P&L missed to claim a depreciation on 3,10,000. They missed to claim a depreciation on 3,10,000. Can I give it? Yes. So let's give it off. What will I give? I will give 3,10,000 into, very good, 35%. Why? Because it's a manufacturing activity. It's a manufacturing activity. So I can claim additional depreciation. 35% is the answer number. Plus or minus? Minus 1,08,500. 1,08,500. Yes or no? Yes. Now people, I'm going DTR. This will become 3.1 lakhs into 15%. Answer is minus 46500. See if you understood. Yes, which means keeping your eyes on everything is important, people. I have not confirmed the regime, matlab you are going to confirm both the regimes. Yes, come on, easy one. It says depreciation includes 50,000 which is charged on the installation of solar lighting system on 10th November 25. I already see a trigger. This is after Gandhi Jayanti. Which is used at the factory premises for publishing books of interior designing. It does matter a lot. It's used in the factory premises. I am eligible for additional depreciation. I am eligible. Where is the office purpose here? Used for additional depreciation. Very critical, people. This was a question from Jan 26 and a horrible question, because then suddenly ICI confirms to you that publishing of materials is a manufacturing activity. Now the publishing of materials is a manufacturing activity is a confirmation which is only given to you at CA final level. It's not a topic which you know at CA inter level. At CA inter level, it is not told you what is manufacturing. At CA final level, they'll give you a complete list and they'll confirm what and all items are manufacturing, where you'll read a case law where the case law says publishing of books are a manufacturing activity. The hint here was not to focus on the publishing, but to focus on the factory. That is where the hint was. Yes, so smart on that. Next, which is used for publishing books. The cost of installation was 4 lakhs. He also received a subsidy of 1 lakh from government for installation of the solar lighting system. People, I see solar lighting. This itself is a problem, because this is eligible for 40% depreciation. It's eligible for 40% depreciation. Yes, problem does not start there. The problem starts on the second column. It says this whole transaction is part of the P&L. It says this whole transaction is part of the P&L. Matlab, the solar lighting which I bought for 40 lakhs, I actually put it in the P&L. Actually put it in the P&L. People, should it be there in the P&L? No, if it is not, should be there in the P&L. First of all, reverse the asset. Reverse the asset. How much is the asset? How much is the asset? The asset is 3 lakhs reversal. Because 4 lakh would have been gone to the left side and 1 lakh would have gone to the right side as grant. So net there is 3 lakhs in the P&L. Net there is 3 lakhs in the P&L. Can I keep it in my P&L? No. Therefore 3 lakhs will get disallowed because it is capex. 3 lakhs got disallowed because it is capex. Yes or no? Yes or no? Now people, you have it as capital expenditure. We can claim depreciation. We can claim depreciation. Tell me how to claim depreciation. 3 lakh into 3 lakh into 30%. Why 30%? 40 for the solar plant, 20 for the additional depreciation, which means again there is a problem. Again there is a problem. I have to check ATR or DTR. ATR goes 3 lakh into 30%. Answer is 90 with a plus or minus. 90 with a minus. And then I go DTR. DTR says 3 lakh into DTR is 3 lakh into 40 ka half. Can I claim additional? No, I cannot claim additional. Therefore 20%. Answer hits 60,000. This is the computation of depreciation. This is the computation of depreciation which I should allow. Apart from that, the question already has a depreciation in the P&L, which means that also needs to be disallowed. So I will add back the depreciation disallowance also. I will add back the depreciation disallowance also. Yes. Now people, because there is a depreciation of 50,000 in the P&L, there can be an alternate assumption. The alternate assumption that the asset was never part of P&L. So which means when they said part of P&L, they only meant the depreciation part. They did not mean the asset part. That can be an assumption which can be made. That can be an assumption which can be made because it sounds weird. You cannot put the asset also in P&L and the depreciation also in the P&L. Yes or no? Which means I will take either of the two. I will say if you're choosing depreciation, then 3L is not there in the capex. 3L is not there in the capex, which means I will say don't take the 3L. Don't take the 3L. This is an assumption which I am going to make. This is an assumption which I am going to make. Are we clear on this? Because question says P&L has a depreciation of 50,000, which is as per accounts. I want depreciation as per income tax. Therefore, I said disallow. I said disallow. Are we clear? Are we clear? Come on, people. Why don't you try the next one? It says by oversight did not record depreciation of 1,500 on designer equipment in the books of accounts, and considering the amount is insignificant, decided not to claim it. The person said, I forgot to claim depreciation, but still 1,500 only, no, cheap number, I don't want to claim. I don't want to claim. Can you leave it? No, depreciation says it's a mandate claim. It's a mandate claim, has to be done, which means if it is not part of P&L, I will now have to take it into my P&L. How much number? 1,500 has to be claimed as a deduction. Yes or no? Yes or no? This came in May 26, I think, if I remember this properly. Yes, 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 yes. Next one. It says purchasing a car for official use of 80,000, out of which 15,000 was paid by cash on 23rd September 25. It says part of P&L, which itself is a problem. Matlab 80,000 is there in the P&L. First, that is a mistake because it is a capital expense. So I will say plus 80,000 first because it is capex. Because it is capex. Now can I claim my depreciation? Yes, let's claim depreciation. Number is 60,000 into 65,000 into 515 It's the car and it does not say when I put to use. When I said did not put to use, which means I'm going 15% as an answer. Answer is 9,750 of depreciation. 9,750 of depreciation. Yes or no? Yes or no? Yes. Come on, come on, come on, come on. People, are you able to understand? Any payment exceeding 10,000, the whole payment is ignored. Which means I am ignoring the whole 15,000 worth of payment. Left off number is 65,000 to claim depreciation. Yes, yes, yes. Come on. It says computer and electronics purchased on 1st December 25. Do I see a trigger? After Gandhi Jayanti is 4 lakh rupees. It includes 1 lakh rupees which is paid for television and washing machine for household use. And problem is it says everything is part of P&L. Hey, 4 lakh includes 1 lakh or 4 lakh is separate. Which means, can I disallow the full 1 lakh, 4 lakhs? So let's disallow the full 4 lakh rupees as capex. I disallow the full 4 lakh rupees as capex and then I'm asking a question. How much asset is mine? Why 3 lakhs? Because 1 lakh is for personal reasons. Can I claim depreciation on it? No. So I'm going to claim 3 lakhs into 20% because it is put to use for less than 180 days. Answer is 60,000 worth of depreciation. 60,000 worth of depreciation. Check, 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 check. Yes, yes, yes. People, what were we discussing? We are moving on forward. We are moving on to the next set of adjustments. The first one I see on the screen is repairs of 1 lakh rupees, which is incurred for a building a new room. I am having repairs of 1 lakh, repairs for building a new room. People, if I am building a new room, does it look like revenue repair or capital repair? Looks like capital repair, which means should not be part of P&L, but the line item says it is part of P&L. Should it be part of P&L? No. Earlier I did minus, now I'll do plus. So I'm going to disallow. I'm going to disallow. What am I going to disallow? I'm going to disallow 1 lakh rupees in the nature of capex, but because I'm disallowing, people, this is a building, I need to claim depreciation at the rate of 10%. Very good. Come on. So I'm saying plus 1 lakh rupees to be disallowed as capex and then claim a depreciation which is minus how much? 10,000 rupees. In no facts given, always assume this is put to use for more than 180 days. Yes or no? Yes. Come on. Next one says omitted to record a trademark registered on July 15 for 2 lakh rupees where the usage has commenced only from January 15, 2026. I bought a trademark, but the problem with the trademark is I never used it. I only started using it from January, which means put to use is confirmed less than 180 days. A question says it is part of P&L, not part of P&L. Any changes to make? No. Directly claim depreciation. So I'm directly going to claim depreciation. How much? I'm going to claim 2 lakhs into 12.5%. Answer hits 25,000 ka depreciation. Agreed, agreed, agreed. Come on. It says purchase plant and machinery of 55 lakhs which he took a loan from a scheduled bank. I purchased the plant and machinery by taking a loan. People, when a loan comes, automatically clicks borrowing cost. Date of loan is 1st May. Interest rate is 11%. Asset was acquired on 1st July and put to use on 1st September. Tell me which one is relevant. Put to use is relevant, which means this is not important. Tell me, people, when did you take the loan? 1st May. When did you acquire the asset? 1st July. Tell me, when will you start paying interest from? May itself. If you're going to start paying interest from May, I'm going to calculate from May only. July is not relevant. Yes, which means the question says entire amount of interest is debited to profit and loss account. I have debited the entire amount to P&L, which is wrong because I have a borrowing cost standard. Yes. So tell me how much to disallow first. I'm going to disallow 55 lakhs multiplied with 11% multiplied with by 4 by 12 for the month of May, June, July, August also. September 1st it's done. So therefore 4 by 12 should be capitalized. 4 by 12 should be capitalized. Answer is 660 67 should be capitalized. Should be capitalized. Yes or no? Yes or no? Yes. People, now that I've capitalized this, I need to start claiming depreciation. Tell me, I should claim depreciation on. I should claim depreciation on 55 lakhs plus the 2,01,667 because asset is basically both. Yes, so I have to claim depreciation on the asset also. So it is 55 plus 201,667 multiplied with the rate of 15% put to use is 1st September, which is before Gandhi Jayanti. Therefore, it is eligible for 15%. Answer hits 8,55,250 is the answer. 250 is the answer. I hope you understand what I'm doing. Yes. So 2,167 became my capex and 8,85,000 became my depreciation. Agreed. 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 Shall we go? Shall we go? Yes, come on. It says bought a car for personal usage on 12th April 2022. People, your previous year or past years? Past years for 5,40,000. Car was subsequently brought to the business on 1st April 25 and the market value on this date is 2,10,000. You remember I told you, if you're bringing a building, I will do WDV. But if you're bringing any other asset, take the original cost. Can I take the FMV? No. Did I pay for it? No. I paid only for original cost. So I can take only the 5,40,000, which means I'm going to claim depreciation on 5,40,000 for the rate of 15%. Answer hits has the question told you that you're using it in manufacturing? No assumptions made otherwise. If the question would have told it's manufacturing, I would have claimed additional depreciation. No mentions, don't make assumptions. Yes? Yes, because it says not part of P&L. Clear? Yes. People, any doubts on the depreciation piece? No. Good to go. Come on. We are moving on to scientific research. Question says 1,75,000 was paid to scientific research under 35. Out of 1,75,000, 50,000 was used by purchasing of land by the association. Hey, tell me, did I pay or did I donate? I donated, and donated has no restriction. Any donation is allowed as 100% deduction. Is it there in the P&L? Yes. Should it be there in P&L? Yes. Therefore, ignore adjustment. But this ignorance only takes place under. Very good. I will ignore under ATR. I will ignore under ATR. But people, if I am going DTR, income tax says don't do donations. If you do donations, I will not allow expense. How much expense did you claim? 1,75,000. Will I disallow 1,75,000 or only the land piece? I will disallow the full 1,75,000 because I cannot even make a donation itself. Which means when it comes to DTR, I will say disallow 175,000. I will disallow 175,000. See if you understood. Yes, yes, yes. Come on. Sorry. It says 4,50,000 incurred for purchase of property, including a land of 2,50,000 under scientific research. I pay totally 450. Out of that 450, 250 is land. People, in-house or donation? In-house. In-house says you can claim all expenditure except land. Now look at the first line. First line says part of P&L. Part of P&L matlab it is there in the P&L. What is there in P&L? Full 450 is there. Can you claim full 450? No. You can only claim 2 lakhs because balance 250 was land. Wrong addition. Therefore, disallow. Therefore, I will disallow how much? 2,50,000 I will disallow. 2,50,000 I will disallow, which is nothing but the land. Which is nothing but the land. Yes or no? Yes. But look at the same line. It says now it is not part of P&L. People, if this adjustment is not part of P&L, nothing is there in P&L. If nothing is there in P&L, you will say claim what you want. What do you want? Which means I will say minus 2 lakhs ka deduction for the building part. You see how the answer changed? Yes. In the first case, when the whole number was there, I disallowed land because that was wrong. But in the second case, when nothing was there, I claimed only what is allowed for me. Only what is allowed for me, which is where I always keep telling you in exams, please make sure to first understand what is in the P&L and what is not there in the P&L. Are we clear? Yes, that's an important thing for you to keep in mind. Good to go?
Yes.
Come on, let's go. It says loss on sale of scientific research is 2 lakh rupees. And this amount says part of P&L. People, how on earth are you making loss in a scientific research? Is it possible?
No.
No, because scientific research, full asset you would have claimed deduction. The cost of the asset was 0. At that stage, loss is possible, not possible. Which means this loss is as per accounts. And I don't like accounts. Therefore, I will. Which means first step I will say disallow the 2 lakh rupees. Disallow the 2 lakh rupees. But here is where you have to play a little safe. Look very carefully. Read the further lines, you will make an understanding. It says, I purchased an asset for 6 lakhs in 22 and conducted scientific research on it and claimed a deduction under 35. Matlab in 22, I would have claimed a deduction of 6 lakh rupees. 6 lakh rupees. My asset cost is showing 0. My asset cost is showing 0. Right now, this asset was sold for 4 lakh rupees. That is why if you remember, accounts did minus 2 lakhs. But in income tax, my cost is showing 0. I sold for 4 lakhs. I made a profit of, income tax will say, tax under PGBP only. Why? Because you claim 6 lakhs under PGBP. Up the 4 tax should also be under PGBP only, which means here income tax will say add 4 lakh rupees as a profit. Add 4 lakh rupees as a profit, which we technically call as balancing charge. Which we technically call as balancing charge. Yes?
Only plus 2 lakh more will come.
Same thing.
Hey, total 6 lakhs or more.
That is what you have to do. You have to also remove the loss which is showing in the P&L, which is wrong, right? See, technically P&L is showing a negative 2 lakhs, whereas income tax wanted a positive 4 lakhs. Matlab what you'll have to do? Reverse the negative and then also add a positive. Total becomes 6 lakhs. I'm explaining this once again, people, look carefully. I have an asset worth 6 lakhs. Income tax, I claimed a deduction. Asset cost became 0. Today I'm selling it for 4 lakhs. How much profit income tax is? 4 lakhs. Up a profit of 4 lakhs in income tax has to be added. Has to be added. And therefore I did it on the bottom. But accounts is showing a 2 lakhs loss, which is also wrong. Which is also wrong. So I'm asking to reverse that also. And therefore I'm doing 2 adjustments. One for reversal of accounting loss. Second is taxation of actual profits. Taxation of actual profits. Are we clear? Are we clear? Are we sure about this, people? Yes or no? Yes. Be careful and smart on how you look at the understanding. Yes, this was a good adjustment which came in exam recently. Be careful about it.
Sold for 7 lakhs, so CG aayega ya?
If you would have sold it for 7 lakhs, you would have added 6 lakh in PGBP because that's your profit, and the extra 1 lakh would tax under CG. Yes, that is what would happen. Clear? Clear? Sure? Yes? Come on. Moving on to 35 AD, it says purchasing a building for specified purpose of warehousing of storage of food grains. People, storage of food grains is likey business. Can I claim deduction? Yes, likey business says whatever expenses you incur can be fully allowed as deduction except for except for land. Except for land. Do you see a land? You only see building, fully allowed as deduction. Right side says yes, it is there in the P&L. If it is already there in P&L, do I worry? No, which means I will say ignore. But the problem is I will ignore only under ATR. I will ignore only under ATR because DTR says treat it as normal business. And if you're treating as normal business, you should claim depreciation. Is it there in the P&L? Yes. Is it there in the P&L? Yes. Should it be there in P&L? No. Therefore, first, if I am going DTR, I will say first disallow how much? 4,50,000 as a capex. Then claim how much? 45,000. Then claim 45,000 as depreciation. Did you understand? Did you understand? Did you understand? Why additional? Building pay, why can you give the additional depreciation? You can only give additionals on Plant and machinery, forget manufacturing. Plant and machinery is the problem. This is a building, you cannot give additional depreciation there. Yes, yes. People, second statement, same item, I'm saying no, which means it is not part of P&L. Hey, what is not part of P&L? 4,50,000, and ATR says should be part of P&L. Matlab minus, so I will say minus 4,50,000 under ATR. Minus 4,50,000 under ATR. Yes or no? Yes. But people, I'm going DTR. DTR says asset and depreciate. Yes. Hey, is it an asset? Yes. Did you put it in P&L? No. No problems. Directly claim depreciation. Very good. Directly claim depreciation, which is 45,000 of depreciation. So directly claim 45,000. Directly claim 45,000 of depreciation. Check if you understood. Check if you understood. Yes or no? Yes, come on. It says Unit A has commenced operations on 1st April 24. People, 1st April 24 is your previous year, previous year. You commenced operations that year and you claimed a deduction of 100 lakhs for 2 buildings of 50 lakhs. 2 buildings of 50 lakhs. Matlab that year you purchased 100 lakhs worth of building and you claim depreciation on, sorry, you claim deduction on both, which means asset cost is showing 0. Then in 2026 February, people, 2026 February is your previous year. In your previous year, you decided that one of the building will be transferred to non-specified business. A likey business has given an asset to normal business. Are you okay with this? No. You will say, I am sorry. You should have not given it to normal business. You have cheated me. Up, I will assume from day one it was for normal business only. You should have only claimed depreciation. People, are you having problem with both the building or only one building? Tell me how much depreciation this one building would have got. 5 lakhs, because only 1 year, no. Yes, so you would have got depreciation only for 1 year, which means 5 lakhs worth of depreciation you could have claimed. You ended up claiming 50 lakhs. You ended up claiming 50 lakhs where I can only give you 5 lakhs. You extra claimed 45 lakhs where I will ask you to reverse. I will ask you to reverse 45 lakhs. I will ask you to reverse 45 lakhs as a balancing charge. Hey, who will reverse this? Very good. Likey business will reverse this. Likey business will reverse this. Yes or no? Yes or no? Now tell me people, likey business ka ho gaya. I am now moving to normal business. Normal business got the asset at a price of 45 lakhs. So normal business will ask for depreciation on 45 lakhs at the rate of 5%. Why? People, it was not even part of my block. It has now only got into my block. It just now got into my block and therefore it is depreciating for 5%. Hey, had this already been part of my block, I would have given full WDV. But this is never even part of my block. I can only give 5%. Answer hits 2,25,000 of depreciation. 2,25,000 of depreciation. Yes, sir. Yes, sir. People, now you understand this adjustment? Yes, come on, be smart. Question says, I am purchasing a warehousing building of 20 lakh rupees in rural area for storing agricultural produce. DTR will not apply in this case itself, no? How would have you claimed deduction if it was DTR? Yes, no deduction for DTR, people, not possible itself. Come on, I am looking at purchasing warehousing building for 20 lakh rupees in rural areas for storage of agricultural produce. Tell me, good business, bad business? Good business. This was made available from 15th July 25 and the income from activity of 22.5 lakhs is credited in the profit and loss account under the head warehousing charges. Too many information, one by one. People, I see two numbers right now. One is 20 lakhs of building, the other is 22.5 lakhs. Now I am confused. Right side says not part of P&L. What is not part of P&L? People, 20 or 22.5? Yeah. 20 is not part of P&L. 22.5 is part of P&L. How do you know? It's given very clearly. It says credited as warehousing charges. Matlab it is already there in the P&L. Matlab 20 lakhs is the only problem. Hey, do I have to change anything in the 22.5? No, I will first come and claim my deduction of 20 lakhs. Hey. Yes, 22.5 is already there in P&L. Building I have now purchased for Likey business. Likey business says whatever you have purchased can be 100% allowed as deduction. Is it there in the P&L? No. Can I put it in P&L? Yes. How much do I want? 20 lakhs. So I put 20 lakhs under P&L, under ATR. Correct. But what if this question asks for DTR, people? Can I do anything about the 22 lakhs? Leave it as it is. Coming to the 20 lakhs, I will say let's give depreciation. Number is very good. Number is 2 lakhs. Depreciation under DTR. 2 lakhs depreciation under DTR. Hayana. Yes. People, all these adjustments were part of one question. And what logically you had to do is you have to first complete ATR. You have to first complete ATR and then come and say, okay, whatever I did in ATR, reverse. And then claim what I want. In simple words, you would have completed ATR by claiming 20 lakhs ka deduction. When you do DTR, what will you do? You will first reverse the 20 lakhs because you claimed it in ATR and then claim 2 lakhs ka depreciation. Yes or no? Yes, it is better that way, people. Otherwise, you'll have to sit and do both the ATR and DTR. Stupidity. Correct? Yes, when we do comprehensive, I'll show you how to approach it that way. But now this is what the adjustment is. Good to go on 35 AD? Yes? Come on. Smaller adjustments for you to finish. It says some of the employees opted for retirement under VRS scheme. 3,40,000 was paid on 1st January 26. What scheme? VRS says allow over 5 years. But the question says part of P&L. Hey, what is part of P&L? Full 340 is part of P&L. Can I put it? I can only put 1 by 5. I can only put 1 by 5, which means extra 4 by 5 should be disallowed. Very good. So I am saying disallow 3.4 lakhs multiplied with 4 by 5. Clear? Come on. Payment of 50,000 by using credit card for fire insurance. Hey, one by one, tell me the trigger area. Fire insurance. People, if I'm looking at fire insurance, tell me personal expense, business expense. Fire insurance is business expense. People, if it is business expense, that is no more a trigger area. Trigger area number 2, credit card. Mode of payment is confirmed. Mode of payment has been confirmed. This is permissible mode, which means no problems whatsoever. Allowed as deduction. Is it there in P&L? Yes. Should it be there in P&L? Kindly ignore. Template clear? Come on. VRS says you can allow expenses only over 5 years. Deferred expenditure rules. Yes. Next one. Commodities transaction tax paid on sale of bullions. Huh? Why? Very good. This is a non-speculative transaction. A non-speculative transaction is a normal business expense, and normal business expense is allowed as deduction. Is it there in P&L? Yes. Should it be there in P&L? Kindly ignore. Commodities transaction tax is not income tax. I only disallow income tax. Other taxes are allowed as deduction except for. Very good. Remember indirect taxes? I told all indirect taxes are allowed as deduction except for penalties. This is not direct tax. Careful. Yes. Please mark it as important in case you're making an error on this. Clear? Yes. Come on. It says securities transaction tax, which is paid in a recognized stock exchange by a dealer in shares and securities. Again, same thing. Same thing. Is it part of P&L? Should it be part of P&L? Kindly. See, some 84 adjustments. We'll finish it off in seconds. Yes. Employer's contribution to PF for the month of March 26 was deposited in June 26. People, whose contribution? Employer, I can pay up to 31st October 26. Did I pay 31st October 26? Within due date, income tax says allow as deduction. Is it there in P&L? Yes. Kindly. Very good. Once again, amount received as employees' contribution to PF for the month of February 26, 10,000 rupees was deposited after the due date of the relevant tax. They have confirmed I deposited after 15th. After 15th. This is employees contribution to be deposited after before 15th of next month. Failure to deposit will make it a permanent income. Is it there in the P&L? No. Should it be there in P&L? Yes. Is it there in P&L? No. Should it be there in P&L? Yes. Therefore, kindly add.
पेमेंट किया उसका माइनस करना
Permanent income. Employees contribution is permanent income. No deduction even if paid after the due date. You remember this. Employer's contribution, if you don't pay by 31st October, you can disallow and claim it in the year of payments. Employees is a permanent income. Careful. Sorry. If it was in P&L, I would have ignored it off. Yes. Clear? Yes. Come on. It says mediclaim premium paid to GIC by Mr. Lomesh for his employees as a draft on 27th December. Tell me the trigger area. It is a payment for employee, which means it is a business expense. Then I will ask mode of payment. Draft. People, nothing given. It's assumed as accounts pay draft. All are permissible modes. Is it there in P&L? Yes. Should it be there in P&L? Yes. Kindly ignore. Yes. See, the point is very simple. You need to understand where the trigger comes from. Yes. What is the trigger? You'll always get the right answer. Come on. Yes. Medical expenses of 80,000 appearing in income and expenditure account was incurred for the treatment of father. Father is 72 years old, not covered by health insurance. Payment is done through account pay check. Trigger is father with the personal expense. People, can you put it in P&L? No. Is it there in P&L? Yes. Kindly disallow. How much? 80,000 will get disallowed as personal. 80,000 will get disallowed as personal expense. Can someone tell me what else to do? Very good. Chapter 6A deduction 80D comes into picture, which says if you have a senior citizen, you can claim a deduction of 50,000 for his medical expenses if he does not have a medical insurance. Right now not relevant, but noting it down, people, for your convenience, noting it down, saying that I will claim. I will claim 50,000. I will claim 50,000 under 80D. I'm claiming 50,000 under 80D because PGBP comes into picture. Yes, yes. People, if you don't know the section number, just write deductions. Just write minus 50,000 and write deductions and close with that. Don't keep routing section numbers which are not sure. Which you are not sure. Yes, come on. It says family planning expenditure is 15,000 incurred for employee, which is revenue in nature. Hey, revenue. Family planning is only for companies. Inter-syllabus says disallow. Is it there in P&L? Yes, kindly remove it off. Kindly remove it off. Answer is plus 15,000. Yes, now just as FI people, the last mark which I was correcting, no, one person I gave this adjustment. Yes, family planning expenditure, the person has written disallow because inter-syllabus does not allow. That is what you and I discuss in class. What should you write? Disallow as, people, if you don't know companies, also be smart. You can write disallow as not for individuals. That is also fine enough to write. Yes, don't be stupid to write not eligible for inter-syllabus. Something is wrong about it. Come on, people. Just because I tell you a person is poor does not show him poor. Yes, you give him rebate. Don't make him poor. Yes, let's not insult people like that. Correct? Yes, come on. Contributed 20% of basic salary to the account of employee under a pension scheme. Dearness allowance is 40% of basic salary and it is forming part of employees' benefits. Basic salary is 10 lakh rupees. Hey, this is pension scheme. Limit of 14% of basic pay plus DA forming part, which means these kind of questions should not be done on percentage level. Don't be stupid. Don't do 6. Don't do 6. Tell me what is the actual contribution.
2 lakhs.
Actual contribution is 2 lakhs. How did you get that? 10 lakhs into 20%. Then comes eligible contribution. Eligible contribution is what, people? 14% of basic pay of 10 lakhs plus 4 lakhs of DA forming part, because the question confirms it is forming part. Yes, 14% of 14 lakhs is 1.96 lakhs. This will become 4,000 rupees to disallow. Yes, 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 which means now I'm repeating this for the second time. People, when it comes to PF also, we told never do it in percentages, do it in full numbers. And here also I'm telling you NPS also, never do in percentage, do it in full numbers. Do it in full numbers. 4,000 is the right answer. Yes, plus 4,000, disallow 4,000. Clear? Yes, that is what the answer is, people. Shall we go? Shall we go? Shall we go? Shall we go? Question says, I am receiving 3 lakh rupees from a debtor which was written off as bad debt in 21-22. Amount due from the debtor was 5 lakh rupees. Officer had only allowed 3 lakhs. People, I wanted 5. Officer allowed 3. I did not get 2 lakhs. Current year I will say, sir, I got 3, but I will not pay tax on 2 lakhs. I will only pay tax on 1 lakh. I'll only pay tax on 1 lakh. Hey, how much is there in P&L? 3 lakhs. I want to tax only 1 lakh, which means I am extra showing 2 lakhs on the income side. Kindly. Very good. Clear? Clear? Yes, so I said out of 5 I got only 3, 2 I did not get, so 2 I will not pay tax in the current year. Out of 3 I will not pay tax on 2, matlab I will only pay tax on 1. I don't want to pay tax on 2, matlab kindly minus 2. What are you writing? Minus 2 as already taxed. Minus 2 as already taxed. Simple. Come on. Says 2 lakh rupees paid as donation to public charitable trust. Amount is there in the P&L. I will, because not a business expense. It is not a business expense, so I will disallow under. Coming to that. Yes, I'm going to disallow 2,000 rupees because it is non-business. Because it is non-business. At the same time, people, because you made a donation to charitable organization. If this organization was approved, I can claim 80G on it. I can claim 80G on it only under ATR. I can only claim 80G under ATR, that too with a restriction of 50% of my qualifying limit. 50% of my qualifying limit can be claimed. What are the discussions? Tomorrow's topic, forget it off. Minus 80G, whatever. Under ATR. I don't know the number, I can't confirm it also, people, because I don't have the qualifying limit. So I'm just putting 80G for the purpose of understanding. Yes? Come on. It says 15,000 paid to Gurudwara registered under 80G in cash where no checks are accepted. I made a donation. Can I claim? No. First of all, disallow 15,000 as non-business. Disallow 15,000 as non-business. Now people, question itself says 80G. Can I claim 80G? Why? Because, very good. 80G comes and says you cannot claim deduction more than 2,000 in cash. More than 2,000 in cash, and amount of 15,000 becomes completely denied to you. So you don't get 80G. You don't get 80G. Again, discussions when we do deduction chapter. Not important right now, but good to know. Yes, at least you're able to link topics together. Yes, yes, come on. It says construction of school building in compliance with CSR activities, 5,60,000. Because, again, non-business expense. 1 second. 5.6 lakhs will go again non-business expense. A question, can I claim 80G by Can I claim 80G? Answer is no in this question. You can claim 80G. The problem in this question is donations are only eligible for deduction when paid by monetary terms. You bought a building. This is a kind payment. Kind payments are not eligible for 80G. No deduction granted to you. Yes. Hey, if this question would have said donated as cash, I would have claimed 80G. Even if it was CSR. Donated as cash, not in cash. As cash, matlab I'm giving monetary. In cash is different. Yes, donated as cash in the sense I'm not making a building, I'm giving a donation to you. That is eligible for ATG. Understand the logic accordingly. Yes or no? Yes, someone was asking it out. But explicit clarification under section 37 explanation number 3A, which comes and clarifies CSR is not allowed as a deduction. Yes, donation made to registered political party 3,50,000 by check. People, again, donations are not allowed as deduction, so I'm going to disallow 3.5 lakhs. But 100% allowed as deduction under 80. GGB. 100% of deduction is allowed under 80 GGB because it is paid by check. Yes, so I can claim 80 GGB, which means write it like this: 3.5 lakhs to be disallowed under PGBP, and then claim minus 3.5 lakhs under GGB. Fit nahi hoga. Hey, by the way, people, clarifying 80 GGB is only for ATR. 80 GGB is only for ATR. Correct. Come on. It says 20,000 paid by check towards advertisement published in souvenir of a local political party. Again, advertisement for political parties to be disallowed. So amount is 20,000. Can I claim a deduction? No. People, if you remember, I told you political party donations are allowed. Advertisements for political party is not an allowed expenditure because that is only given for companies. That is covered under 80 GGC. Yes, so be smart and careful, people. Advertisements are not allowed. Direct donation is allowed. If you want advertisement deduction, you should be a company for it. This is same like family planning deductions. Family planning expenditure rules are applying here. So therefore, only direct donation, not advertisement is permitted. Are we clear? Yes. Come on. It says one-time deposit of 2 lakh rupees paid to electricity and water department. Very good. This is a capital deposit. It's not an expense, one-time deposit, and therefore ICI confirms to you that this should be disallowed. If you come and ask me, I would say allow because exactly. Yes, it's a one-time deposit, people, which means will you get this back? No, if you're not going to get this back, technically it's an expense. If you get a refundable deposit, I would agree. But if the question does not mention anything, I would understand this to be a normal revenue expense. But for some reason, ICI gave this illustration and said it is disallowed. Why? No reasons given. So simply say 2 lakh rupees non-revenue. Clear. Come on. It says housing loan repayment during the year is 50,000, relates to residential property acquired in 25-26 for self-occupation. Interest on housing loan is 23,000. Housing loan was taken from Canara Bank. None of these amounts are there in the P&L. Nothing for PGBP. Directly take to first HP. Let's go HP. What are we claiming under HP? Very good. So you're going to go minus 23,000 under HP. Only for ATR. Yes. Hey, one more. Very good. Housing loan repayments are covered under 80C. Yes. So I can claim that as a reduction with a maximum limit of 1,50,000. This is only 50,000. This can also be claimed as deduction. 80C only under. Very good. People, any trick to make in PGBP? No adjustment in PG. Nothing is relevant for PGBP. Yes or no? Yes, come on. It says paid 45,000 by check during the year for health insurance premium for self, spouse, children. I am in PGBP. This is not a business expense. This is a personal expense. So I'm going to call it personal. I'm going to say first to disallow because it is there in the P&L. Should it be there in P&L? No. Therefore, first to disallow under PGBP. PGBP. Then I will go and say, my dear child, you have taken medical insurance. You can claim 80. D, maximum limit 25,000. Unless the question says anyone is a senior citizen, no mention, always assume normal party 80D with the confirmation on ATR. Agreed? Yes, we are now suddenly starting to link multiple chapters, people. I hope you're able to catch up. Yes, come on. It says incentives given to article assistant for passing IPCC exam first attempt. Is this a business expense? Yes. Is it there in P&L? Leave it off there. Ignore. By the way, people, this is nowadays not possible because an article cannot join before clearing IPCC, but whatever. You should know, no. Yes, I'm saying investment in NSC 15,000, which is debited in books. Investment in NSC is a capital investment. Is it a capital investment? Can I put it in P&L? No. Is it there in P&L? Yes, kindly. Very good. Can someone think for something else? 80? Very good. Why? Because it's an investment, and we discussed any investments go to 80C. Yes. National Savings Certificate. Yes. Is 80C within bracket ATR. Correct? Yes. Correct. Come on. It says domestic drawings 2,72,000. People. Drawing. Drawer. Drawing. Acha, drawing is a personal expenditure. Is it there in the P&L? Yes. Should it be there in P&L? No. Kindly. Agreed. Come on. It says purchase of timber under forest lease of 20 lakhs for the purpose of business. A clarification given. Business expense. Clarification given business expense. Is it part of my P&L? Yes. Let it be there. Which means business is not a problem. I have it in P&L. First to ignore. Then I will claim TCS at the rate of 2%. When you go to TCS, people, you learn there are some goods which are liable for TCS. For example, luxury goods. Luxury goods. You have scrap, alcohol, cigarettes, tendu leaves and all those things. We also have timber in it. Timber has an amendment for current year with a clarification percentage of 2%. It's a clarificatory 2%. People, careful on this, and that's what the law is. Clear? Yes, careful. What? It's a purchase, no? It's a good. When it says purchase, it means two goods, right? Hey, if it's an inventory, will you put it in balance sheet? You'll put it in P&L as an opening stock and closing stock, right? Part of P&L, man. Correct. Hey, correct. Come on. People, it says 4,000 per month was paid as salary to staff throughout the year and not been recorded in books. Is it a genuine expense? Yes. Can I claim it in P&L? Yes. Claim P&L minus 48,000. People, standard deduction. You are in PGBP. You are looking from a employer point of view. You're not looking from employee point of view. Employee will add 48,000, claim standard deduction of 50,000 and say my income is 0. But employer will get the full 48,000 as deduction no matter what. Are we clear? Yes, come on. It says traveling expenses includes 2,40,000 being expenditure on foreign. Traveling expenses includes 2,40,000 for expenditure on a foreign tour to Taiwan for attending business exhibition and meeting with vendors, out of which 40,000 is Indian currency, 2 lakhs is in foreign currency. What should I do with this? Raman has spent 10 days in Taiwan, out of which 4 days are utilized by him for attending marriage ceremony of Vendar's son. People, I am seeing business exhibition, business meeting, and Vendar's son, all business expense, all are genuine expenses allowed as deduction. P&L may already there, P&L may already there. I want it to be there, therefore ignore entry. TCS, why? TCS applies if you are using an overseas travel package. There is no overseas travel package here. It's a proper genuine expense and therefore TCS will not apply. If it was an overseas travel package, I would have agreed to it. Yes, very valid. Correct? Yes. Correct. Come on. GST demand paid 1,62,525. People, indirect tax payments are allowed except for penalty. Is it there in the P&L? Should it be there? Kindly. Very good. It's only saying demand, it doesn't say penalty. People, be smart. Come on. Yes. 9525 towards interest on delay in deposit of GST. It's an interest. I can allow it as deduction. Already there in P&L. Kindly ignore. SGST penalty paid. A trigger. Penalty. Trigger of penalty cannot claim as expense. Therefore, disallow. Offense payment. Offense payment. Yes. Good. It says salary of 4 lakh rupees paid to Mr. X outside India without deducting tax. People forgot to deduct tax. Payment made to NR. Disallow. 100%. Correct. Yes. क्या हुआ? Non-deduction of TDS is liable for 100% disallowance when the payment is made to NR and is liable for 30% disallowance when the payment is made to R. That's the conversation. Salary paid. Who are you? Employer. Therefore, I am disallowing. Clear? Yes. Good. It says interest on loan paid to Mr. X 50,000 on which tax has not been deducted. Again, tax deduction has been defaulted. Resident payment disallow 30%. Number hits 15,000. Yes. Now next one is a little critical. People, look carefully. It says audit fees of 24, 25, 75,000. A previous year. Previous year. TDS deducted but not deposited in that year. That year we did not deposit TDS. However, TDS got deposited on 31st December 25. People, put yourself in that year. If you put yourself in that year you should have deposited TDS by 31st October of 25. Did you do that? No. So last year I would have disallowed. Now last year that I disallowed, current year I've made the payment. Can I claim it in current year? How much? Only 30% because I would have disallowed 30%. Number hit plus or minus. A minus. You already disallowed that year, people. Current year you're claiming. Correct. That year you disallowed. Current year you paid. Claim in the year of payment. Claim means minus. Clear? Yes. Provision for income tax is 3 lakhs, including interest on income tax of 45,000. People, can I claim income tax? Can I claim interest on income tax? No, both I can't claim. Therefore, disallow. How much? 345. 45 is already included. Sorry. Yes. It says advance tax paid of 25-26 is 13,000 rupees. Hey, where did you pay advance tax? In income tax. Can you claim? No. Therefore, disallow. But you paid. No. This is a credit. Which year did you pay for? Your year only. Matlab, when you compute tax liability, you can minus this off, saying that, sir, my tax liability is 4 lakhs. 13,000 I already paid. Balance alone I'll pay. Balance alone I will pay. So I'll say disallow 13,000 under PGBP and then minus in tax computation. minus in tax liability. Agreed? 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 Yes, come on. It says late filing fees of 5,000 rupees paid for delay in filing return of income. You paid late fees for income tax. Can you claim?
No.
No, disallow. Minus in tax liability. When you finalize tax liability, let's say your tax liability is 4 lakhs. Will you pay 4 lakhs? What will you say? I already paid 13,000. So I will only pay the balance. Matlab you are minusing in tax liability. Correct. When you compute the final tax liability, there you will say minus tax liability. Clear? Yes. Come on. It says tax on non-monetary perquisites provided to an employee 20,000. People, I told you tax on non-monetary perquisite is exempt for employee, therefore disallowed for employer. Kindly take it off. RFA. Non-monetary perquisite is RFA. Simple. Yes. 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 Why? Any income tax payment is to be disallowed. Only indirect tax payments are allowed as deduction except for penalty. Any income tax payment is disallowed. Correct? 40B. It says interest on capital received from TBA and Co, a partnership firm where she is a partner, is 15% per annum. Number is 4,50,000. People, I got 4,50,000 at what rate? 15%. I am partner or firm. I am the partner. I should have only got 12%. I got 15%. I can only tax 12%. People, should I tax 3% or 12%? I should tax 12%. Careful, people, understand. I'll explain this once again to you. Look carefully. Understand, firm is paying the interest. Firm paid how much interest? 15%. Income tax will say, my dear firm, you should have not paid 15. You should have paid 12. Matlab firm paid extra 3. Who will pay tax on 3? Firm will pay tax on 3. Who will pay tax on 3? Firm will pay tax on 3. I will say I am a partner. I should only tax 12% as the number. As the number. Aya. Yes. To understand, what are we going to do? We are going to say 4,50,000 divided by 15% into 12%. What are you disallowing? Are you the firm or partner? Look, it says interest paid or interest received. Received matlab you are the partner. Partner is going to tax 12%. Number is. Hey, tell me which head should I tax? Once again, which head should I tax? PGBP is the only head I can tax it on. My mistake. Yes, people, it says interest received and it's part of P&L. Part of P&L matlab it's already there. How much is there? 450 is already there. Do I want 450 in the P&L? I want 360 in the P&L, which means I'll say I have extra income of 90,000. So I should minus 90,000. Very good. Yes. I should minus 90,000. I did not read the part of P&L. Minus 90,000. People, as a computational module, what can you write? You are going to say 4.5 lakhs divided by 15% into 12% is the number which is taxable. Is a number which is taxable. So you can say taxable amount is this much. Matlab, how much have I received? 450 I have received, but I can only tax 360 and therefore extra 90 should be reversed. Should be reversed because it is an income. It is an income, which is where I want you to pay attention, people. This is not interest paid, this is interest received. Careful on that. Agreed? Yes. Agreed? Yes. Come on. It says share of profit received from a partnership firm is exempt, but people, it is showing in the P&L. Should it show? No. Therefore, minus. Therefore, minus. People, just for convenience, let's write 10,000 just to become easier. So I will say minus 10,000 within bracket exempt. I might have missed a number. Clear? Yes, yes, yes. Come on. It says salary received from a firm is 3 lakh rupees. Allowable salary from the firm is only 2 lakh 50. People, firm says 3 lakh I want to pay. Income tax said, no, my child, you should have only paid 2 lakh 50. Rahul got 3 lakhs. Rahul should have only got 2 lakh 50. Rahul should only tax 2 lakh 50. Rahul taxed 3 lakhs. Rahul extra taxed 50,000 on the credit side. Kindly minus 50,000. Kindly minus 50,000. Yes or no? Yes. People, these are the 3 adjustments I wanted you to pay extra attention on. Now, luckily enough, all the things were part of P&L. If they were not part of P&L, what you would have done? You would have added how much? You would have added only 2 lakh 50. You would have added only 2 lakh 50 because that is what is taxable. That is what is taxable. Correct? Correct? Yes. 48.2 says salary of 2 lakh 50 is paid to illiterate brother. Reasonable salary is 1,80,000. People, I notice he is my related party. Related party payments cannot exceed market value. Market value says 180, you have paid 240, you excess paid 60. Kindly disallow. First of all, how is market value 180 also for illiterate guy? What is he, cleaning house or what? Yes. Payment of 12,000 per month paid to brother-in-law, charge of marketing department, comparison of similar businesses. Reasonable salary for the marketing department would have been 10,000 per month. Because brother-in-law is not part of my relative, there is nothing unreasonable with in-laws. Everything is reasonable enough, which means ignore adjustment. Learn it quicker in life, people. Yes. Sale of furniture for brother is 7 lakh rupees. Market value is 9 lakhs. Hey, whom did I sell to? Brother. Related party. Can I add 2 lakhs? No, because it's a sale. I cannot take sale. I can only take expenses, which means ignore. EG. No, because from a purchase perspective, how much did he purchase for? 7. How much he should have purchased for? 9. He paid less only, no? Safe. You don't know what is the nature of business, no? It's a stock and trade, you would have disallowed it off. Correct? Yes. People, cash payment transactions. It says purchase of oil seeds of 50,000 in cash to a farmer on a banking day. Trigger is farmer ko payment can be happening in cash. It's already there in P&L. Kindly let it go. 33,000 is paid in cash to transport carrier on 26 December 25. Somehow I remember giving this in mock to you recently. 33,000 was paid in cash to transport carrier on 26 December 25. Assuming that the provisions relating to TDS are not applicable on this payment. Hey, second leg does not even matter. You are looking at the payment. Payment is 33,000. You can pay up to 35,000 within the limit allowed as deduction already there in P&L. Kindly ignore. Yes. Printing and stationery is 23,200, which is paid as one-time payment in cash. Cash payment, that to one time, single person, single day, more than 10,000. Kindly disallow 10,000, 13,200, 23,200. Disallow the full 23,200. Be careful. Yes. Expenditure pertaining to previous financial year, which is 24-25. Last year's payment was allowed on due basis. Apo last year allowed on due basis. Current year I paid cash of 35,000. Violation happened in current year. Current year I will treat it as permanent income. I'll treat it as permanent income. Is it there in P&L? No. Should it be there in P&L? Yes. Kindly add 35,000. You remember we discussed, people, I told you, is the expenditure there in the P&L? No, because expenditure was of last year. Current year it is there in the P&L? No, which means current year I will say add because you paid in cash. Add because you paid in cash more than 10,000 single person, single day. Clear? Yes. This adjustment is something where most of the students go wrong, so be careful. Which one? What does it say? It says expenditure is of 24-25. Is that your previous year? No. So that year what you would have done? Book the expense. Did you pay the money? No. When did you pay the money? This year. Income tax is this year, my child. What did you pay? Cash. How much cash you are allowed? 10,000. How much cash did you pay? 35. Have you crossed the limit? Income tax will say because you did not pay less than 10,000, you paid more than 10,000, single person, single day. This will now become a permanent income. In which year? And therefore add. Clear? Yes. Yes. 48.7. 48.7 says provision for gratuity is 8 lakh rupees made as per actuarial report. 2 lakhs paid on 30th December 25. 3 lakhs paid on 31st January 26. 3 lakhs has been paid on 30th April 26 before the due date of return filing. I should disallow. I should disallow 3 lakhs. Very good. Last payment alone should be disallowed because
it should be done before 31st.
Exactly. It doesn't say fund. It says gratuity. Matlab this is payment to employees. Employee payments are to be made before 31st March of 26. Employee payments are to be made before 31st March of 26. I made one payment of 2 lakhs on 30th December, allowed. I made one payment of 3 lakhs on 31st January, allowed. But the last payment I made in 30th April, next year I made the payment. I cannot allow it as deduction. Answer to be disallowed. 3 lakh rupees. Which 3 lakh rupees? 30 April 26. 30 April 26. That is what I told you, people. Understand, gratuity requires either employee or fund. If it was fund, I would have said ignored, because fund can be paid up to 31st October. This is not fund, this is employee. Gratuity provision. No. How do you create gratuity provision? Why do you create a provision for? You create provision for employee only. That is what you learned in employee benefits. AS 15. Yes, AS 15 employee benefits is create provision for all the payments you have to make to the employee, and therefore this is an employee related payment. It's not a fund related payment. If it was fund, question will mention that exclusively. Yes. Yes. Last few. I-43B. It says GST liability is paid on 7th April 26. Now, people, I want you to notice. Sometime back also I showed you GST. Sometime back also I showed you GST. Now also I am showing you GST. What is the difference between the two? The payment number is, the payment date is important. There I simply said GST paid. Here I am saying GST paid on what date? The moment you see GST payment on what date, I am looking for the due date of 31st October 26. I am looking for the due date of 31st October 26. Hey, this is payment happened on 7th April 26. Did it happen before? Allowed as deduction. Already there in the P&L. Kindly ignore entry. Kindly ignore entry. But the same question comes and says it is not there in P&L. I can minus 3,400.
GST liability allowed on cash income. Allowed on
Government payments are allowed on due date of return filing. Any government related payments like tax, duty, cess, interest can be paid up to 31st October and claimed as deduction. Yes. Now here is the hint for you in exam, people. Understand when dates are given. Understand when dates are given. The idea is that they are trying to test you on 31st October. When dates are not given, ask yourself if it is business or not business. Understood? So if GST no date is given, I will say allowed because business expense. But GST date is given, I will say okay, tell me, did you pay before 31st October? If you said yes, I will say allow. If you say no, I will say disallow. Are we clear? Yes, come on. Bonus of 24-25 paid on 30th November 25. A bonus of last year payment. Last year payment, last year you should have paid before 31st October 25. Hey, but last year payment you made on 30th November 25. Up last year you would have disallowed. Last year you would have disallowed. Current year you made the payment. Up current year allow as deduction. Is it there in P&L? No. Claim deduction. 10,000. People in this step clear? Sorry. Is this step clear? Is this step clear? Any doubts on this part? Yes. That is why I keep telling you people, notice the financial years. You have to be very careful on the financial years. Your exam year is 25, 20. Very good. Clear? Clear? Yes. Come on. Next one says, purchased raw materials from Paul Industries, micro enterprise. Hey, I saw micro. MS payments. MS payments for 49,000 on March 10, 26. March 10, 26. However, the payment was made to the Paul on April 5, 26 by check. And they don't have a return agreement. No return agreement is confirmed. Matlab due date is 15 days. Check from March 10. 25 March. I should have made it by 25 March. Did I make? No. Therefore, I will disallow. Disallow and allow when? Allow when April I paid. April is next year. So current year I have to disallow. Matlab I went and I disallowed how much? Very good. Correct. 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 Next. Next. It also has a supplier called Carl Industries, a small enterprise. Covered? Yes. Small enterprise is also covered, which also does not have a written agreement. Which also does not have a written agreement, and the payment was 1,34,000 in cash on 5th April 26 for the purchasing raw material of 31st March. Again, no written agreement, people. 31st March say due date is 15 days, which is 15th of April. I made the payment by 5th of April. Is it within time? Yes. Therefore, allowed as deduction. Coming there. Ippodika allowed as deduction, which means ignore. Which means ignore. Now, I want you to notice something. People, you made the payment in cash. I agree. When did you make the payment in cash? Next year. Appo, if you want to add as permanent income, that is next year, not in the current year. Current year it is booked. Next year it is paid. Appo, disallowance is in the next year, not in the current year. Therefore, you will say ignore. Add how much? 1,34,000 in PY 26, 27. Doesn't matter. If the financial year is closed, you cannot make any more adjustments from income tax perspective. Audit can be whatever they want. Doesn't matter. An assessing officer cannot come and question you for those kind of things. Yes. So add 1,34,000 in previous year 25, 26 for cash. For cash. Are we clear? Are we clear? This was a crucial amendment, people. I think this, remember, if I understand this properly, this came in September 25. Yes, a very good question which came in examination. Careful on this. Little confusing. Yes. One more. It says, as per restructuring agreement with the bank has converted unpaid interest of 6 lakh rupees into new loan account repayable in 20 annual installments. I said I am not going to pay the interest, converted into loan. Converted into loan. The first installment was paid in March 26. The entire amount is there in the P&L as an expense. People, how much interest is there? 6 lakhs. And 6 lakhs I said I want to fully convert to loan. Fully convert to loan. Did I pay the loan? How much did I pay? Only one installment I paid, which is 30,000 rupees. Can I go and claim the full 6 lakhs?
No.
Income tax will say, you can claim whatever you paid. You paid only 30,000. I will give you only 30,000. How much is there in P&L? 6 lakhs. So I will first add back 6 lakhs, claim see if you understood this. I remember telling you those people, I told you, if an interest is converted into loan, you cannot claim the deduction of the interest. You can only claim the deduction of the payment of the loan amount. You can only claim the deduction of the payment of the loan amount. I only paid one installment. I can only claim that as a deduction. That as a deduction. Are we clear? Yes. Last one. It says bank term loan interest actually paid up to 31st March was 1,40,000, whereas the balance was paid in October 26. People, due date is 31st October. I made it by October 26. Matlab payment is on time. Payment is on time. Is it there in the P&L? Should it be there in P&L? Kindly ignore entry. Is anyone having any difficulty still here? People, you were able to understand everything? You were able to understand everything? Yes. These are all section related adjustments. Yes. From here comes your generic adjustments. Adjustments which are impacting other heads of income. So let's see if you're able to answer 360 view. Which means now you don't have to just answer PGBP. You have to answer all heads. You have to answer all heads. See if you understand this. Yes. First item says, some stocks were omitted to be included in both opening stock and closing stock. Yeah, I forgot opening stock. If I add back opening stock, profit will come down. Profit will come down. I also missed closing stock. People, closing stock, if I include, profit will go up. Yes. Up, what is going to happen? Net effect 9,000 is missing. 9,000 is missing, and therefore add 9,000. 9,000 is missing, and therefore add 9,000. Simple, straightforward. Yes or no? Yes or no? Yes or no? Next one, people, says loss on sale of short-term shares. Loss on sale of short-term shares. Nothing but CG loss. Nothing but CG loss. Is it related to PGBP? No. First one says yes. Matlab it is there in the P&L. Should it be there? No. Which side is it showing? It's a loss. It's a loss. It's showing on the debit side. Kindly reverse. Matlab add to PGBP. Add to PGBP. But people, this is an STCL. Can be set off against. It can be set off against any capital gains. Now people, why am I clubbing both? Because in the next one it anyway says nothing to do, therefore ignore. Clear? 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 People, you understood what I did? Come on. It says income from UTI, dividend from domestic companies 2,400, expenses incurred is 600 rupees. Hey, both are there in the P&L. Up, what is netly there in P&L? 1,800 is there net in the P&L. 1,800 is there net in the P&L. Up, I will minus 1,800 from PGBP. Why? Because IFOS. How much will I add to IFOS?
2,400.
Very good. Why? Exactly. I have to add back the full 2,400 because understand, dividends ke against you can only claim interest expense. Does it say that it is interest expense? No, you cannot claim that as a deduction then, which means the amount taxable is full 2,400. The amount taxable is full 2,400. You need an explicit clarification saying this is interest. Unless you get an explicit clarification, assumption is it is not interest. Are we clear? Are we clear? Are we clear? Yes, come on. It says income from agriculture 1,80,000. People, this is partial integration. Should it be there in PGBP? No. Therefore, minus in PGBP and call it exempt for income purpose. Minus in PGBP and call it exempt for income purposes. Simple. Yes. Next one. Furniture business was shut down in the year 2022 as an accountant absconded with cash of 5 lakh rupees and fully allowed in that year. Hey, that year I had some furniture business. Accountant came and stole cash. Luckily, officer also said allowed. Unabsorbed the business loss of furniture business is 3 lakh rupees. Of that business, I have a loss carry forward, which is 3 lakhs. And current year, I got a 4 lakh rupees insurance compensation. People, current year they gave me 4 lakh rupees ka insurance compensation. Should it be an income? Yes, because that year I claimed expense. No. When that year I claimed expense, current year should be income. Appo, it should be part of my P&L. Is it there in the P&L? Yes. Appo, ignore. Hey, at the same time, you have a business loss. Which year? Past year. Current year, can you set off? Yes. Is it there in the P&L? That also they said yes. Matlab income is also there in P&L. Loss is also there in P&L. No adjustment to make. Matlab ignore entry. Yes, now look at this once again, people. I am telling now it is not there in P&L. What is not there in P&L? Nothing is there in P&L. Tell me, people, I have three numbers. Number one, 5 lakhs. Hey, this 5 lakhs pertains to past year. That year itself allowed, not important. Then I got 3 lakhs of business loss. Hey, can I claim my business loss? Yes, any business loss can be claimed against business income, if not other heads except salaries, and therefore allowed as deduction -3. Correct. Apart from that, people, I have got a compensation in current year. Insurance compensation I've got of 4 lakh rupees. Is it an income? Yes. Is it there in the P&L? Yes. No. So kindly add. That's all. Same logic I did on the top, people. On the top I said ignore because both the items are already there. When the items are already there, there is nothing for me to do. Therefore, ignore adjustment, and that's the answer for you. Clear? 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 Come on. It says the ground floor of his residential building is let out. Is self-occupied. Sorry. The ground floor of his residential building is SOP and has let out the first floor for residential use at an annual rent of 2,28,000. He paid municipal taxes of 60,000 in the current year. People, I paid 60,000 come empty relating to my house. Should it be there in P&L? No. Therefore, disallow. So I will disallow 60,000 in my PGBP. Also, people, I have an income from rent. How much rent did I receive? 2,28,000. Question says that is also there in P&L. That should be taxable under HP. Matlab I will minus 2.28 lakhs. Correct? 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 Once you have confirmed this, people, you can now answer what happens in HP.
Minus 228.
In HP, what will I do? I will take 2.28 lakhs and I will minus empty number. Empty number is very good. Why? Because 60,000 is for the full house. I have 2 floors and therefore I only take the LOP part. So reducing 30,000 rupees from it, the NAV is 1,92,000. 1 lakh. Whatever number it is. Hey, clear? 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 Yes? Yes? Last few. It says received 40,000 as interest in savings bank deposit. People, this is taxable under IFOS. Taxable under IFOS, matlab remove from PGBP, add to IFOS. Someone can tell me. Very good. Minus 10,000 as 80 TTA under ATR. 3 adjustments. I'm assuming not senior unless question is given otherwise. People clear? Yes, this is the kind of adjustments which is where you go wrong horribly because there are multiple activities happening in this. Be careful on this. Yes. Next one says income tax refund is 5450 including an interest of 450. People, how much is there in the P&L? Full 5450 is there. Up first I will remove the 5450. I will remove the 540 from my PGBP. Now I am moving to IFOS. People, how much did I receive? 5450. But in that 5450, interest is 450. Appa, what is the balance? 5,000 is my principal repayment. 5,000 is my principal repayment. Matlab money which I gave got back to me. Will you tax that number? No, I will only tax the 450 amount. Therefore, add only 450 under. Very good. Agreed? Yes. Agreed? Come on. It says winnings from a game show TV is 31,500. Net of TDS of 30%. Again, people tell me how much is there in the P&L. 31,500. Appo, how much should I reduce? 31,500 500. Now the problem with the question is, question says 31,500 is my net of TDS. I want to tax the full number. Appo what will I do? 31,500 divided by 70 percentage. 31,500 divided by 30 percentage. Answer hits 45,000 to be taxed under OS. Agreed. Agreed.
3,500 TDS minus from tax.
That is okay. That is understood. How much did you deduct TDS? 30. Appa, how much is there in your hand? 70 percentage. If 100 rupees is what I have to give you, 30 TDS I deducted. How much did I give you? 70. How much is your income? 100. How did I calculate? You took 70 divided by 70 percentage. Yes, same logic. Correct? Yes, come on. It says received salary of 7,500 from Full Cure Hospital. Received taxable under salaries. Therefore, minus. Oh, sorry, not part of P&L. Therefore, ignore in PGBP. Ignore in PGBP. Add to salary how much? 90,000 in salaries. Minus standard deduction. I'm not confirming the standard deduction because I don't know ATR or DTR, whatever it is. Yes, so it is 90,000 minus standard deduction, whatever number. Interest received on notified government securities is 32,000. Take to IFOS. Abhi ke liye take to IFOS. So take to IFOS, which means minus 32,000 in PGBP. When I'm moving to IFOS, people, I will ask a question. I see the line as notified. A notified itself matlab exempted component, and therefore I will say no tax under everywhere else. It is a fully exempted item. When it's exempt, where will you turn? Clear? Yes. Yes, we discussed this, people. Notified is going to become exempted for you. Yes. Come on. It says interest received on PPF account. People, PPF account, I told you when I did salaries itself, every item received is exempted. Every item received is exempted. PPF mein everything is exempt. The only thing we studied is RPF. Apo PPF is fully exempted. Matlab again the same thing. Minus from PGBP and say fully exempt. You are the employee. How? It's interest, it's not deposit. ATC comes for deposit, not for interest. Yes. Gold chain worth 78,000 is received as gift from his mother. People, head of income. OS, therefore minus in PGBP. Now that I'm going to OS, I will ask a question. It's a gift. It's a gift and we have 3 steps. BA pass DJ. Covered because jewelry. Genuine cases. People, mother has given. Relative covered. Therefore, exempt. Relative covered and therefore fully exempt. Yes. Last one. 6,000 incurred for generator fuel for providing backup to the tenant. This is a amenities. Very good. This is an amenities provided. Amenities provided taxable under IFOS. Matlab take out. Sorry. Plus hai na minus hai. This is incurred, right? This is an expense. Therefore, I will plus 6,000. I will plus 6,000 under PGBP and I will minus 6,000 under OS. Yes, move to IFOS, people. That's our logic. Yes, because I'm giving you generators. Generators are a amenity. Aren't amenity? Yes. Let me show you the presumptive related question, people. We are not solving this, more for your understanding purposes. Yes, because technically presumptive is part of the turnover rate. Yes, and therefore we'll discuss it better in comprehensive. But more for your understanding, I'm just showing you the question. Let's see if you get that question out. Yes, question says that I have following particulars of ABC and Co, LM and Co, PQ and Co, and XY and Co. 4 parties have been given to me and I need to confirm some facts with you. Yes, let's check how it works. The first one says the first one is a firm. The second one says the second one is also a firm. The third one says the third one is an LLP and the fourth one is a firm. If you remember, people, I have come and told you presumptive is an restrictive law. It's only applicable for three parties. Party number one is individual, party number two is HUF, and party number three is a firm, not including LLP. Which means one thing I can confirm off the bat itself is that this person cannot choose presumptive. This person cannot choose presumptive. Is that data clear? Yes. Come on. With this information, the question says the first person is a retail trader. The second person is a transport operator. The fourth person is an interior decorator. Can you tell me which one is going where? First one is a business guy. Second one is a transport operator. And last one is a professional. Very good. Which means I have all facts being covered here into my aspects. Yes or no? Yes. Come on. Then we move on forward to understanding system of accounting. Hey, does presumptive have anything to do with system of accounting? Ignoring information? Not relevant. Not relevant. Fourth one says, I now have the turnovers. People, for a business, turnover should be 2 crores. Am I satisfying? Presumptive is eligible. Second one, I have a turnover of 101 lakhs. Relevant, not relevant? Because I'm going trucks. I'm going trucks. I don't care. Yes, last one says 50 lakhs. I am eligible for presumptive. I'm eligible for presumptive. Yes or no? Yes. Then I am saying amount received by way of RTGS in 25-26. A amount which I received by RTGS matlab prescribed modes. I'm in business matlab 6%. Matlab 6%. I don't have to worry about 95% because overall limit itself is 2 crores. If the overall limit would have been 3 crores, I would have worried. Now the overall limit itself is 2 crores. Whether you have cash or you don't have cash, I don't really care. But what is important is I receive by permitted modes. The answer is 6%. Hey, the next one is anyway not important. I don't care because transport operator. Yes. Hey, next one again I don't care because it's a non-presumptive case. And last one I will do directly 50% because he's going profession presumptive. He's going profession presumptive. People, are you able to follow? Yes. Come on. Next one says the person has received some money by cash also. By cash also, but there is a problem. Problem says it is included in 3 above. Do I have an issue? No, because it is not part of the 150. Yes, which means this one goes for 8%. The next one I don't care. The next one I don't care. This one goes for 50% because profession doesn't care whether it is cash or non-cash. Everything is 50 on the rule. Everything is 50 on the rule. Yes or no? Yes. Last one says, I have also received some amount between 1st April to 31st July, which is 20 lakh rupees by prescribed modes. Number is 6%. People, I want you to look and tell me, have I received all my money? Have I received all my money? Why am I asking this question? Because if I would have not received some money, I would have taxed at 8%. Luckily, everything got in my hand. Nothing matters. Leave it off. This is also not relevant. This is also not relevant. Agreed? Agreed. Hey, next line says working partner salary. Can I claim it for others? No, I can only claim it for transport operators. Matlab ignore this number to be taken. This number to be taken. Yes, sir. Yes. Next one. Interest on capital of 12% for partners. Can I take it for others? No, I can take it only for transport operators. Matlab ignore. Agreed. Agreed. Yes. Next. Profit as per books of accounts maintained as per section 44AA after deducting working partner salary and interest on capital. Luckily, they have told you what is your PGBP. They've confirmed to you what is your PGBP already. Do you have to recompute this? No. Matlab, this is your final amounts, which means these amounts will be my checkpoint. For my checkpoint, whichever is lower, except for third one, because he is only going to choose this number. He cannot choose anything else. He doesn't have an option. Matlab, this number is already confirmed. This number is already confirmed. Agreed. 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 Before I complete the table, anything else left? People, question says number of vehicles zone 10. Is 10 good? Yes. Matlab, he is eligible for presumptive. He is eligible for presumptive. Hey, now can you check and tell me from the top, should I choose presumptive or should I choose normal? Case 1.
Normal.
Case 1. People, it is 150 into 6, 30 into 8, 20 into 6.
12 lakh 60,000.
150 into 6 will give me 9 lakhs. 30 into 8 will give me 2.4 lakhs. 20 into 6 will give me 1.2 lakhs. Adding all the three, 12.6 lakhs. Which means if I would have chosen presumptive, presumptive would have been 12.16 lakhs. Yes or no? Yes or no? Yes or no? People, second one I'll have to compute because transport operator works differently. Let's come to the last one. Last one, all numbers are multiplied with 50%. Help. My turnover is 50 lakhs, right? 50 lakhs ka 20%, 50% is 25 lakhs. Tell me people, if you're smart, I will choose normal for both the business and for profession also. Yes, matlab this is also confirmed to me under normal rules. Under normal rules. Give me 1 second. Yes, ma.
Partner salary and interest and capital deduct
From the PGBP, not from the presumptive. If it was from presumptive, I would have removed it off. It's from PGBP, I don't care because PGBP you can give it, right? In the normal PGBP, you can claim it as deduction, not an issue. Clear? Yes. Giving on facts, people. It says it may be assumed that partner salary and interest are authorized by the deed and is relating to payments which are limits allowable, which means everything is safe enough. I don't have a problem. Next is the vehicle list. People are going to look at the vehicle list and are going to tell me which one is light and which one is heavy. First one, light. Second one, light. Third one, light. Fourth one, light. Fifth one. It is 12 or more. This is heavy. This is 12 or more. This is heavy. This is also heavy. Keeping those thoughts in mind, people, I need to calculate some numbers. Tell me, should I take purchase date or put to use date? Transport operators, I use ownership. Matlab put to use is not important. Hey, looking at 20th May, number of months. Hey, all these are wrong. People, these are all 25. I'm sorry. These are all 25. It's not 24. I made a mistake. Yes, if for the first one, it is how many months? I have it from May. If I have it from May, it is from I have it from May, which means May is considered, which means April alone is not considered. This is 11 months. Next one is April, May, June I didn't have. Matlab 9 months. April, May, June, July I did not have. Matlab 8 months. April, May, June, July, August I did not have. 7 months. This one is from November. So November, December, Jan, Feb and March. 5 months. Last one is from December. So December, January, February and March. 4 months. Part thereof. Monday is a full month. Part thereof is fully taken into consideration. Yes. People, tell me how much should I tax for the first one? 7,500. Next one, 7,500. Next one, 7,500. Next one, 7,500. Next one is 12,000. And next one is 13,000. Because here it is 1,000 per ton, per month, per vehicle. Yes or no? Yes. Come on the calculator. It is 7,500 into 3 into 11. 2,47,500. Next one, 7,500 into 2 into 9. 135,000. 7,500 into 1 into 8. 60,000. 7,500 into 7 into 1. 52,500. 13,000 into 2 into 4. 2 into 4. 12,000 into 12 into 5. 12,000 into 1 into 5. 60,000. And last one is 13,000 into 2 into 4. 1,04,000. Can you add all the numbers? 6,59,000. 6,59,000. People check and tell me. Yes, yes. Now look carefully. I am in transport operator, and transport operator says once you have 6,59,000, you can also reduce your interest and salaries. Tell me how much is my interest and salaries? Total is 2 lakhs. So can I reduce the whole 2 lakhs? Yes. So I will end up reducing the whole 2 lakhs, leaving me the answer as 4,59,000. Aya. People, I'm sorry, there is a small change. The 5 is not heavy, the 5 is also light. It is more than 12 tons. It is not exactly 12 tons, also more than 12 tons. This is also going light. This alone has to be changed. My mistake. 7,500 into 1 into 5. 30. 37,500. Minusing this out. 636,500. Minusing on the 2 lakhs, the answer is 436,500. Is 436,500. Everyone? Yes. Again, here also I will choose. Here also I will choose 410. Agreed? Any doubts? Come on, people, MCQs. Which of the 4 entities are eligible to declare presumptive basis taxation? Can I declare presumptive for AB and Co? Yes. Can I declare for LM and Co? Yes. Can I declare for PQ and Co? No. Can I declare for XY and Co? Yes. Which means the answer is option D. The answer is option D. Yes. Next, what is the business income to be declared by AB and Co and PQ and Co, assuming that the entities wish to maximize tax saving without getting their books audited? People, who's AB and Co? Business guy. And business guy has to offer presumptive if he doesn't want books. If he doesn't want books, the answer is 12, 16. 16 or 60 है? 60 आया. 60 people, it's 12.60. Check again. 1260 people. Yes. So for AB and Co, the answer will be 1260. For AB and Co, the answer will be 1260. A PQ and Co is that non-presumptive guy. Even if he does not get his books audited, can he choose presumptive? No. He will have to go for normal only, which is 450, and that matches with the answer of option A. Sure? People, are we clear? Yes. C. Who's 560? Without getting his books audited. Last line. People, the question last line says he does not want his books audited. Matlab he has to mandatorily choose presumptive. No options otherwise. Yes. Third, what is the business income to be declared by LM and Co, assuming that the firm wants to maximize tax saving without the books audited? Again, he wants presumptive. Answer is 4. What is 436,500 is the only right answer. 436,500 is the answer, people, because he does not want books audited. Without a books audit, you only have to choose presumptive. You cannot go down. So 436,500. What is the income to be declared under PGBP, assuming that the firm wishes to maximize his tax savings for XYZ without getting his books audited? Again, XY also wants to go presumptive. Answer is simple. 25 lakhs. Answer is a simple 25 lakhs. The last one says, would your answer to subpart 3 and 4, 3 and 4 matlab LM Co, XY Co. LM Co, XY Co, if the firm decides to get their books audited, if they decide to get books audited, LM was going transport operator. If he gets books audited, he can choose 410. Answer will change. Yes, going to XY. XY is also professional. He can choose audit. He will go for normal. Matlab both the cases answer will change. I'll give you. Yes, answer is, it's not 22.5. It's 25. Sorry, I didn't mark the correct answer. It's 25. Yes, here both the answers will change, which means the answer is B. The answer will be B as the situation. The answer will be B as the situation. Any doubts on the answer? Yes or no? Yes. This is how presumptive looks like, people. Now, you may choose to skip off presumptive because at the end of the day, presumptive is only going to be part of the turnover discussion, which means there is an easier way to remember presumptive in exam. We will directly do it in comprehensive. All you have to do is check your turnover. All you have to do is check your turnover for getting the right answer. I have one comprehensive on that to figure out that as an answer statement. Yes? Yes? Good. Let's discuss this small topic of IFOS. A very easy, sweet, beautiful topic. We have two chapters to cover together, people. One is IFOS, the other is dividends. Let's talk about them together. Yes, when we want to talk about IFOS, income tax tells very simple things. Everything which is not taxable under other heads will get taxable under IFOS. So you tax under IFOS what is not taxable under other heads. Some things that you're going to keep in mind for exam perspective, people. First item is dividends, to be discussed in a separate chapter. Second item is called winnings, which we told will not be allowed for any expenses. Direct tax at the rate of 30%. Third is called royalty income. Again, we will discuss about this along with 80, QQB, RRB, chapter 6A deductions. Yes. Fourth, we have interest on enhanced compensation, something to be kept in mind. Income tax says if you have any interest on compensation for compulsory acquisition, please understand, if you get money for compulsory acquisition, that is CG. But if you get interest on compensation, that is taxable under IFOS with two conditions. You tax it in the year of receipt and only tax 50% of it. You don't tax the whole number, you tax only 50% of it. Important enough for examination. Yes. Then we have something called as point number 5, which talks about income from subletting, because HP says you can only tax owners. You can only tax owners. Next one says income from letting out of amenities, like we discussed. Yes. Then we talk about salaries of MPs and MLAs, because no employer-employee relationship. Items that I told you to remember after that is forfeiture of advance money received after 1st April 2014. Because if it is received before 1st April 2014, I will reduce from cost of acquisition under CG. Then we discuss what is called compensation for termination benefits, that we already have spoken about. If it is from employer, salaries. If it is from business, PGBP. If it is from other parties, IFOS. Two items that you have to keep in mind for exam perspectives, people, is one called as interest on income tax, because if you understand, I'm not taxing the whole income tax, I'm taxing only interest on the income tax. Second, if you have any interest on deposits like savings deposit, FDs, RDs and post office savings, you will be taxing under IFOS. However, please note, if you have any post office savings, I'll give you a double deduction. Deduction number 1 will come under IFOS with a limit of 3,500. Deduction number 2 will come under chapter 6A deduction of 80 TTA of 10,000 or 80 TTB of 50,000 rupees for senior citizens. Yes. Then we started discussing what is called family pension. People, please mark this one as important, because of late ICI is testing this a lot. Yes, ICI now comes and says if you have any family pension, received, then whatever family pension you receive will become fully taxable under the head IFOS, with a deduction granted to you of 1/3 of the family pension or 15,000 rupees, whichever is lower. If you choose DTR, then it is 1/3 or 25,000, whichever is lower. Please be mindful about this. Yes. Now there is one change which ICI has done, people, where ICI has confirmed to you that a family pension will be taxable even if received on death. A family pension will be taxable even if received on death. There was one question in the past where ICI came and said the husband has died, wife is receiving family pension. Logically, we always tell it is exempt. But this time ICI says no, family pension is taxable even if it is on death. Exemption amount is 1/3 or 15,000 under ATR, 1/3 or 25,000 under DTR, whichever is lower. whichever is lower. Then the two items that you have to remember from exam perspective is called life insurance policies. Income taxes, if you have any life insurance policies, the rule is very simple. After 2023, please don't pay a premium more than 5 lakhs per annum. Please don't make a premium payment more than 5 lakhs per annum. If you make any premium payments more than 5 lakhs per annum, that policy will become fully taxable. That policy will become fully taxable. Now, if you are going to pay a premium less than 5 lakhs, no problem, exempt. If you are paying a policy premium more than 5 lakhs, I said policy will become taxable. To make myself smarter, what I did, I took two policies. One policy I am paying 3 lakhs, one policy I am paying 3 lakhs. People total became 6 lakhs. Can I do that? No. Income tax will say overall also you should not pay more than 5 lakh rupees, in which case I will have to decide which policy to make exempt, which means out of the two policies I can decide something can become exempt, others will become taxable. And the biggest change is, people, income tax says please ensure that this premium should not exceed 5 lakhs in any year. It's not just about first year, it's not just about second year. Till the last maturity, you should have not paid more than 5 lakh rupees. If you do, I will tax that policy. Are we clear? Yes. So for a simple example, if I show you example number 3, I'll show you example number 3. Notice I have 4 policies, people. One is LIP X, one is LIP A, one is LIP B, and one is LIP C. Notice first policy was taken in 22. Do I have a problem? No, because the policy should be after 23, which means this policy is fully exempt. Then I took policy number A. Policy number A, I paid a premium of 1 lakh. Policy number B, I paid a premium of 3 lakh 50. And policy 3, I paid a premium of 6 lakhs. Tell me, people, can I pay such much premium? Total has become 10 lakh 50. The moment it became 10 lakh 50, income tax said, beta, I will only allow up to 5 lakhs. Off the bat, I know a policy of 6 lakh is taxable only, which means this policy has to become taxable. If this policy ends up becoming taxable, look at the total of the balance policies. 450, it is within 5 lakhs and therefore fully exempted. So I can decide to exempt policy A also, policy B also, making only policy C as taxable. Is that making sense? Yes, that is how the policy premium works. Any doubts on this part? Are we clear to go? Yes. That leaves me with the last topic on this chapter, which is called as gifts, where income tax says, my dear child, if you want to follow gifts, follow Rahul Bhaiya's method. The method is step number 1 is to identify the asset. People, we have 3 kinds of asset in income tax. Asset number 1 is money, cash. Asset number 2 is called specified movable property, which we have confirmed as BA Pass DJ. B stands for bullions, A stands for archaeological collections, P stands for paintings, A stands for any work of art, S stands for shares and sculptures, S stands for securities, shares, securities, sculptures, all the 3 are covered. D stands for drawings and J stands for jewelry. Be careful, these are the only items which are covered under BA Pass DJ. If you give any other item as gift, I will say fully exempt. So seeing a question where the question comes and says, I got a car, I got a fridge, I got a mobile phone, I got an AC, TV, all are exempted. They will not be taxable under income tax because they are not covered under BA Pass DJ. Then comes your third item, people, which is called immovable property, where income tax is land and building also should not be given as a gift. Yes. So step number 1, I am saying item number 1 is money, item number 2 is BA Pass DJ, item number 3 is immovable property. Now, if it gets covered in these 3 items, I will go to step 2. And step 2 says, check if the transaction is genuine. If the transaction ends up becoming genuine, exempt it off. Then I don't care, I will not move forward, I will say fully exempted. What are the cases which become genuine, people, is confirmed as dirt, min, clot. It's called dirt, min, clot. D standing for death, except for family pension. D stands for death, except standing for family pension. I stands for inheritance. R stands for relatives. Careful on the relatives part. Income tax is relative matlab my spouse, my siblings, my parents, my parents' parents, my children, their children, స్పౌసోడ సిబ్లింగ్స్, స్పౌసోడ పేరెంట్స్, స్పౌసోడ parents parents, and everyone's spouse, and everyone's spouse. People who are covered apart from this are my parents siblings. People who are covered apart from that are my parents siblings. That's it, that's it. Which means people, my niece and nephews, not covered. My spouse soda parents soda siblings, not covered. They should not be taken, they should not be taken. Any gifts coming from them are fully taxable, are fully taxable. Are we clear? Yes. Similarly, people, if you are getting a gift under an HUF, then HUF will say that I will be exempted if the member of the HUF gives the gift. Who gives the gift? Member of the HUF gives the gift. How do you become a member of the HUF? Either by birth or by bringing into family, like spouse or adoption. Like spouse or adoption. Both are covered off. Yes or no? Yes. So we said D for death, I for inheritance, R for relative, T stands for charitable trust. T stands for charitable trust, and please notice charitable trust says giving to charitable trust is also exempt, receiving from charitable trust is also exempt. It is from and to. It is from and to. Then we went for M. M stands for marriage, where I said any money received on your marriage is exempt. Any money received by your parents on your marriage is taxable. Any money received by you on marriage anniversary is taxable. Any money received by you on your birthday is taxable, is taxable. Then we went on to another I. I stands for individuals private trust. If I have my own private trust created, whatever money I put there will be fully taxable. Then I went for will be fully exempt. Thank you. Will be fully exempt. Then we went for N. N standing for non-profit organizations, which are only two: schools and hospitals. Schools and hospitals are covered here. So any donations and all which you give in schools and hospitals are fully exempted. Then comes C. C stands for COVID. L stands for local authority. O stands for others which are not covered in inter-syllabus. And T stands for exempted transfers under CG. Exempted transfers under CG. Yes or no? Yes. So what did we discuss, people? D for death, I for inheritance, R for relatives, M for M for marriage. Don't mug up. M for marriage, T for trust, I for individuals private trust, N for non-profit organizations, C for COVID-19, L for local authority, O for others, T for transfers which are exempt under CG. At this stage, if you have exempted someone, leave it there itself. But if you say no, this is also not getting covered, I move on to step number 3. I move on to step number 3, where I will start checking for limits. I'll start checking for limits, and the limits are as follows. Income tax says if you are receiving money, do not receive more than 50,000 in a single year. Do not receive more than 50,000 in a single year. From one person, from everyone. From everyone. Notice carefully. If the total money received by the person in the year is 50,000, I will tax everything. Second, income tax is specified movable property. A specified movable property is BA pass TJ. Income tax is if you receive any gift. Tell me what is the FMV of this. FMV matlab fair market value versus how much you paid for it. The difference is called gift element. If the gift element of the property goes more than 50,000, it is fully taxable. What is fully taxable? The gift element is fully taxable, not the whole money. The gift element is fully taxable. But at the same time, people, please note, income tax is it is not gift element from one property, it is gift element from all properties. So everything that I receive, all of them will be accumulated and checked for the limit of 50,000. So as a simple example, if I tell you that I have received an asset of jewelry. I received a jewelry where the fair market value is 60,000 and the money paid is 10,000. People, how much profit I made? 50,000. Is it taxable? No, because it still did not touch 50 above. Up to 50 I am fine. Apart from this, I also got some shares. For the shares, I paid 2 lakh. The market value is 2 lakh rupees and I paid 1.8 lakhs. 20,000 is here. Tell me, people, is this taxable? Because now total of the number is 70,000, which is more than 50,000, and therefore both will become taxable. Tell me, when I say both, I mean 70,000 or the 60 plus 2 lakhs, because that is the gift you got. You got the gift only of 70,000, so only 70,000 is taxable in your hands. Yes or no? Yes or no? That leaves me the last one, people, the most important one, which is called immobile property. Listen to this one carefully. Income taxes, if you have an immobile property, what do you have? If you have an immobile property, the check is not FMV, the check is SDV, which means now income tax will say, my dear child, tell me what is the stamp duty value of the property. What is the stamp duty value of the property minus how much you paid? Minus how much you paid. This amount should not cross 50,000. This amount should not cross 50,000 per asset. Please note, on the left side it is all assets, on the right side it is per asset, which means in an immobile property it should not cross 50,000 each asset. If it crosses 50,000 each asset, then the gift element will become taxable under immobile properties as well. However, I have a safe harbor. I've been given a safety net, where safety net says if the amount is within 110 percentage of consideration, if the SDV is within 110 percentage of consideration, the gift can still be considered exempt. The gift can still be considered exempt. Think about this as an example. Imagine if I come and give you scenarios. I have a property 1. In this property 1, the SDV is confirmed as 60 lakhs. The SDV is confirmed as 60 lakhs. I paid for it. I paid for it 10 lakh rupees. Tell me, how much did I make? I made a profit of 50 lakhs. This 50 lakhs is fully taxable because it is more than 50,000 and is more than 110% also. And is more than 110% also. Property 2. I got a property worth 6 lakhs for which I paid 5.8 lakhs. I made a profit of 20,000. People, can I tax this? Because this is within 50,000. It is within 50,000 ka limit. It is within 50,000 ka limit. I am at property 3. Property 3 is 1.08 crores for which I paid 1 crore. Matlab, I made a profit of 80,000. I made a profit of 80,000. Sorry, I made a profit of 8 lakhs. People, tell me, I made a profit of 8 lakhs. This is more than 50,000. Yes. Should I tax this? Should I tax this? No. Why? Because I took my consideration. Consideration is 1 crore. 1 crore ka 110 percentage is 1.1 crores is a number within that limit. Yes. And therefore it is not taxable. Safety net given to you. Safety net given to you. Is this example clear? Is this example clear? Notice carefully. Yes. Now people, I want you to understand. This one was not taxable. This one was not taxable. This one is taxable, which means I'm only focused on asset 1. People, asset 1 I purchased for 10 lakhs. Asset 1 I purchased for 10 lakhs. Asset 1 pe I paid tax on 50 lakhs. Matlab asset ka new cost is income tax confirms. If you end up paying any gift cost, then the cost will be changed accordingly to the number. The cost will be changed accordingly to the number, which means even though I paid 10 lakhs for it, an additional 50 lakhs will get added to make it 60 lakhs, because on that 50 lakhs I've already paid tax under IFOS. I've already paid tax under IFOS. I am the receiver, people. Yes or no? Yes. Look at case 2. People, in case 2, asset was purchased for 5.8 lakhs. Did I pay any additional tax? No, which means how much did I pay? 5.8 lakhs. My cost remains 5.8 lakhs. Very good. Yes. On the third one, hey, how much did I pay? 1 crore. Did I pay any additional tax? No, which means income remains 1 crore. Income remains 1 crore, and that's how the conversation comes back to you. Yes or no? Yes or no? People, I'll give you one more example. Help me out. I'm telling you 70 lakhs is the SDV. 70 lakhs is the SDV. 60 lakhs is the consideration value. 60 lakhs is the consideration value. I got a gift of 10 lakhs. Tell me, is it more than 50? Yes. Is it more than 110? Yes, which means all triggers happened. Gift is taxable. Gift has now become taxable. Hey, how much did I pay to the person? 60 lakhs. How much did I pay to government? 10 lakhs. My new cost is the answer. My new cost is 70 lakhs is the answer. Hayana, Hayana. But people, if I tell you this property number 4 was given to mother, If the property number 4 was given to mother, what will happen? This transaction becomes exempt. When the transaction became exempt, did I pay something to government? No, I only paid to mother. How much? I paid to mother only 60 lakhs. Cost remains at 60 lakhs. Will not change. Will not change. In simple words, when IFOS says taxable, amount will get added. When IFOS says don't tax, leave it off and pay the actual number. Are we clear on this? Yes, 3 steps, people. Step number 1 is identifying the asset to be either cash, BA pass DJ, immobile property. Step number 2 is check for genuine cases, dirt, min, clot, D for death, I for inheritance, R for relative, T for trust, M for marriage, I for individual, private, trust, N for non-profit organization, C for COVID-19, L for local authority, O for others, and T for transfers which are exempt under CG. If here also you're not genuine, I will move to step 3. Check for limits. I should not receive money more than 50,000. I should not receive BA pass DJ more than 50,000 for all gift elements. And immobile property, I should not receive more than 50,000 per asset on a gift element. A gift element matlab STV minus consideration or FMV minus consideration. But yes, in an immobile property, I get extra benefit. If STV is within 110% of consideration value, you can say not taxable. Now, if you end up becoming taxable, whatever amount you taxed can be added to your cost of the asset. Any doubts on this part? Are we clear? Yes, good. This is how IFOS comes back to you, people. If you have done IFOS properly, the following chapter is called dividends. Where income tax is very simple. My dear child, if you have a company and the company is going to give you dividends, you are the shareholder. Whatever money you receive will be taxable under the head IFOS. There are 6 items of dividends. Items which are important for exam. Only those we are focusing on. First item says simply giving any kind items. Not important. Second one says if you are going to give any kind of free debentures or deposit certificates, then also it is taxable, not important. Third one says if you are going to give someone a asset under liquidation, then whatever money you get will have to be allocated. Some part of it will become IFOS, other part of it will become CG. How does it happen? We will discuss in CG chapter, not worried about it. Yes, we're not bothered about it right now. Let it go. D talks about reduction of capital, same as liquidation. We will discuss in CG. Point number E and F, the most important ones, people. Point number E and F looks like and says, if you are a private company, a shareholder should not take loans and advances from you. If you are a private company, a shareholder should not take loans and advances from you. If a shareholder takes loans and advances from a private company, whatever loans and advances he takes will become dividend in the hands of the shareholder. I am repeating myself once again. Look carefully. People, I am the shareholder. You are the company. I should not take any loan from you. If I take any loan from you, whatever loan you gave me will become dividends in my hand. Even if I decide to pay it tomorrow, even if I pay it off, it will still be dividends in my hand. Matlab, this becomes a permanent income. For this to happen, some conditions to fulfill. Condition number 1, I should have at least 10% holding. Who am I? Shareholder. Condition number 2, I will only be taxable on the dividends to the extent company has profits. So if I say I took a loan of 6 lakhs, company only has a profit of 5 lakhs, you will tax 5 lakhs. If I took a loan of 6 lakhs, company has a profit of 10 lakhs, I will tax 6 lakhs. If I took a dividend of 10 lakhs, company is making losses, dividend item is 0 because the company has no profits. Yes. One more addition to this, people. Income tax is, it is not just about Rahul taking the loan. If Rahul has a concern in which Rahul has 20% holding, then that concern should also not take loans. That concern should also not take loans. And third, if Rahul has any other relative member who is taking the loan for Rahul's benefit, then that also should not be allowed. Which means, look at the chart carefully. Chart says I am standing here. Where am I? Shareholder. Shareholder should not have more than 10% holding. If he does, whatever loan he takes becomes fully taxable. If shareholder has another company in which he has 20% holding, then that company also should not take a loan. Otherwise, that will also become taxable. And third one, if the shareholder has any random person who helps him for any reasons, that person should also not take a loan. Otherwise, that will also become taxable. But all those taxability will only come when the company has accumulated profits. When the person has accumulated profits. Are we clear? Are we clear? And this brings me to the most important one, people, which you have to pay attention to, is 222F, which talks about buybacks. Income tax and buyback comes and says a company, if it does a buyback, whatever money it gives to the shareholder. Once again, if a company does a buyback, whatever money it gives to the shareholder will become taxable as dividends. Now here, people, I am telling whatever money he gives, profit is not required, shareholding is not required. Any money given by the company will become dividends as long as it is a buyback. Now notice, people, I am the shareholder. You got buyback from me. I would have initially purchased the share. So I would have also paid something. No, I would have also paid something. So for example, I had a share of 10,000. Company bought it back for 20,000. What did company give me? 20,000 rupees. This full 20,000 will become taxable as dividends. Hey, badle mein I paid 10,000. This 10,000 will become a CG loss. Yes or no? Yes. Once again, people, imagine if I have a share worth 15,000. Company is giving me 20,000 rupees. Whatever money I did receive, 20,000, taxable under IFOS. What did I pay? 15,000, fully treated as CG loss. And that's what the understanding is. Yes or no? That's the understanding that we discussed of, people. Correcta? To complete this chapter, there is only one thing pending, people. Income tax says whatever dividends you're taxing should be taxable under the head IFOS. And when you're taxing something under IFOS, do not claim any expenses. Except for interest. You should very clearly look for the word called interest. If there is any other expenses, I will not give. I will only give one expense, which is interest. But interest also has a restriction. Restriction says interest should not exceed 20% of the dividend income. Interest should not exceed 20% of the dividend income, which means if I give you a small example, mein, imagine if I have a dividend of 1 lakh. People have a dividend of 1 lakh. I paid an interest of 35,000. Tell me, can I claim? No, income tax will say restrict to 20% of 1 lakh. Which becomes 20,000. Taxable dividend is very good. Agreed? Yes, same concept. I am telling you my dividend is 1 lakh. Interest I paid is 10,000. Income tax will say it is within 20%. No problem. Take 10,000 itself. Matlab amount taxable is 90,000. People, this is a silent adjustment in exam. Be very careful about this in examination. This is where most of the students went wrong. Be careful. Dividends pay, you can only claim interest maximum 20% of dividend income. Maximum 20% of dividend income for you to claim as deduction. Are we clear on this? Yes. This is what dividend chapter looks like, people. Two things that you have to remember. One, as a shareholder, I should not receive loans and advances if I hold more than 10%. Do not receive loans and advance. If you receive loans and advance, I will tax if the company has accumulated profits. Second, company, if it does a buyback from me, whatever money it gives me will be taxable as IFOS dividends. Whatever expenses I incurred will be treated as CG loss. And then whatever dividends I have after taxing in IFOS, I can only claim one deduction, interest maximum 20%. 20% of the dividend income. These are the three things you have to remember in this chapter for you to finish this off. Simple, sweet, nice, beautiful, 4 marks. People. Can you answer all these questions for me, people? Yes. The more important part is to figure out whom are you looking from. Yes, this is where the whole challenge will come. The question is about where are you. Look at this carefully. Yes. Question says Ritu is transferring 100 shares of PQR Limited to LMN Co Private Limited on 10th September 25 for 3 lakh rupees when the market value is showing 5 lakhs. When the market value is showing 5 lakhs. People have identified 3 persons right now. One is Ritu, second is PQR, third is LMN. Tell me Ritu is the seller. Ritu is the seller. PQR is the asset. PQR is the asset and LMN is the buyer. People, I am under IFOS chapter, so I am focusing from seller perspective, buyer perspective. I am focusing from buyer perspective because I am looking for gift. I am looking for gift element. Tell me, I got the share for 3 lakhs. I should have got it for 5 lakhs. I made a gift of 2 lakhs, exceeded 50,000. Exceeded 50,000. Up my gift is 2 lakhs taxable. Who am I? Exactly. So question is saying determine the taxable income for LMN Co and Ritu for the following cases. Looking it from LMN and Co. People, LMN and Co will say LMN and Co will say I am going to tax 2 lakh rupees under. Very good. I am going to tax 2 lakh rupees under IFOS. Agreed? Agreed. Looking from Ritu perspective. Ritu is the seller. This is CG. This is CG. Yes. So we'll discuss this in CG separately. But right now, people, Ritu is selling for what price? 3 lakhs. Ritu is selling it for 3 lakhs. Ritu could have sold it for 5 lakhs. Something is wrong with Ritu. Something is wrong with Ritu. Income tax will not agree. Income tax will say, my dear child, why are you selling it for lower numbers? Why are you selling it for lower numbers? Pakka black money. I don't agree. I am assuming you are selling for 5 lakhs. So looking from Ritu perspective, Ritu should have sold for, which means Ritu ka sale value 5 lakhs. Ritu ka purchase price, is it 3 lakhs or 2 lakh 50? Very good. I am looking at Ritu's original purchase price. Ritu's original purchase price is 2 lakh 50. Matlab Ritu has to pay tax on 2 lakh 50,000 under CG, long term, short term. Obviously, you bought in 2019, 6 years over. Answer is long term capital gains. Answer is long term capital gains. Agreed, not agreed? Yes. Now, people, I want to look from Ritu. I want to look from LMN also. LMN bought the share for 3 lakhs. LMN bought the share for 3 lakhs. But LMN also paid 2 lakhs to government. Apo LMN order new cost is, which means LMN will say my new cost of acquisition is equal to 5 lakh rupees. My new cost of acquisition will become 5 lakh rupees. Agreed? Everyone? Sure. Multiple activities, people, but figure out answer. Yes. I am in LMN. I am the receiver. I received the shares for 3 lakhs, but I also paid tax to government for 2 lakhs. Matlab I have technically paid. Therefore, my new cost is 5 lakhs. Clear? Yes. Come on. Next ones you should be able to finish, people. It says Akhil HUF has received 75,000 in cash from niece of Akhil. Item number 1. Cash. Item number 2. Niece. Niece is a covered. Not covered. Item number 3. Limit of 50,000 has crossed. All conditions violated. Matlab fully taxable number 75,000. For who received the money? HUF received the money, taxable for HUF. Correct? Yes. Come on. It says Akshat has received 100 shares of A Limited from his friend as a gift on the occasion of his 25th marriage anniversary. FMV is 100 per share. Also received jewelry worth 45,000 from nephew on the same day. Two activities. First is shares. Covered, not covered? Covered. How much did I receive? 100 shares for 100,000 100 shares for 100 rupees. 100 shares for 100 rupees, which is 10,000 rupees. Yes, तो आपको share order gift is 10,000. Share order gift is 10,000. A standalone, if I look, shares is taxable, not taxable? Not taxable. Then I'm looking for jewelry. A jewelry came from nephew. Jewelry came from nephew. Nephew covered, not covered? Not covered. Check for the limit. Limit is 45,000. People, standalone, if I check, not crossed. But if I check on total, 55,000 is crossed. Should I tax? Yes. So apo OS is taxable. OS is taxable. Correcta. 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 Yes. Come on. 3. Kishan HUF has gifted a car to the son of Karta for achieving good marks in 12th board exam. Fair market value is 5,25,000. Item 1. Car is exempt. Car is exempt, not taxable.
Member of HUF.
First is car. Sorry. Yes, same thing, both the sides. Yes, if it was jewelry also I would have exempted because it is member of the HUF, but primary reason I exempted because of car. Because of car. Yes, 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 yes. 4. 4 says a sum of 1,20,000 was Akhil's niece is not a member. Yes. Yes. A sum of 1,20,000 was received as a gift from non-relatives by Raj on the occasion of the marriage of his son Praveen. What did I receive? Cash. Where did I receive from? Non-relatives. Also for son's marriage. Is it covered? No. Third is check for limits. Limit has crossed. Number is taxable. Number is taxable. Correct. Exempt. If Praveen would have got it, I would have said exempt. 4th, cash gift of 51,000 received from friend on the occasion of a Shashti Pata Purti wedding function celebrating on her husband completing 60 years. Because not on account of marriage, amount received is exceeding 50,000 and received from friend. Received from friend. Yes, yes, yes. Diamond necklace worth 2 lakh rupees given by sister in Dubai. Item 1. Jewelry. Item 2. Sister got exempted. Yes, see, if you follow the steps properly, you're always going to get the right answer, people. Come on. Next. A is a dealer in shares received from his friend C, who's also dealer in shares, 1,000 shares of X Limited on 19th June 25. Fair market value was 600 each. A has decided to sell these shares as a part of his business course. Very good. This is not a gift under IFOS. This is a gift under business, not taxable under OS, tax under PGBP. You remember we had told gift of a business is taxable under PGBP. Limit is not defined. Limit is not defined, fully taxable. Question says you are a dealer in shares. If you are a dealer in shares, buying shares is your business activity. Buying it at a discount is your business activity. You got a gift under business, tax it under PGBP. Clear? Yes. Next one. On 1st November 25, Neetu has entered into an agreement to acquire a vacant land from her friend for 25 lakhs. Neetu said, I will go to my friend and collect it for 25 lakhs. The applicable stamp duty value on that date was 30 lakh rupees. People, stamp duty is asking 30. You are asking 25. You got a gift of 5 lakhs. Check for 110 percentage. Doesn't apply. Matlab gift is 5 lakhs. Gift is 5 lakhs. Right now. Hold back. It says, as per the terms of the payment, 2% of the value has to be paid by account pay check on that date itself, whereas the remaining is going for 98% on registrations. On the date of registration, the SDV became 33 lakhs. People, SDV has crossed. Now you have two SDVs. I told you, when you have two SDVs, prefer SDV on the date of advance. If you on the date of agreement, if you receive an advance by permissible modes, Did you receive advance? By permissible modes, SDV becomes 30 lakhs. I do not care about 33 lakhs because my transaction is by account pay check. I got a benefit of 5 lakhs. I got a benefit of 5 lakhs. Agreed, agreed, agreed. Come on. It says Mr. Arun has received an advance of 56,000 on 11th September 25. People, PY, PPY. PY against the sale of his house. However, due to non-payment of the installment on time, the contract was cancelled and 56,000 got forfeited. We call this advance forfeiture, taken place after 2014 to be taxable under tax under IFOS. Agreed, agreed. Yes, come on. It says Tanmay has gifted a refrigerator to his sister's daughter Tanu on her marriage. Fair market value of refrigerator is 75,000. Trigger is refrigerator other than BA pass DJ, therefore fully exempt. Yes. Post office savings interest is 19,000 rupees received by Ram, age 46 years. I got post office savings. Three things will happen. I will tax under IFOS. I will claim an exemption of 3,500. I will then claim an exemption of 10,000 under section 80 TTA only under. Very good. Post office savings says tax under IFOS, and post office savings we learned there is a deduction of 3,500. Then we will also go to chapter 6A, and chapter 6A says any interest on savings account you can claim a deduction of 10,000 rupees for normal citizen and 50,000 rupees for senior citizen. Person is a normal citizen, claim 80 TTA, but that section is only given under ATR. Yes. Come on. It says Ram is receiving 5 lakh rupees from his father on Ram's wedding anniversary. Item 1, cash. Item 2, father. Out on this part. Out on this part, exempt. People, I received it on wedding anniversary. Doesn't matter because relative got covered. Relative got covered. Next. Asta got a gift of car worth 7 lakh rupees from her friend on her wedding anniversary. Karen, exempt. For some reason, I've seen 3 cars right now. Received it gift of 21,000 each from 4 family friends. Received cash. Received from friend. Received 84,000, which is more than 50,000 from one person, all persons. Therefore, taxable 84,000. Taxable 84,000. Yes, yes, yes. Come on. It says SC Bose is a widow of public sector employee, died during service. Family pension he got 3,60,000. People, even though it is death, it is family pension. Therefore, taxable. I will give 1/3 or 15,000, whichever is lower, or 1/3 of 25,000, whichever is. Tell me what is 1/3? Which means obviously. So what will I do? I will first tax 3.6 lakhs and I will minus 15,000 under ATR, or I will minus 25,000 under DTR. Agreed? Agreed? Easy. Come on. Loan has been received by by Arnab. Loan has been received by Arnab from Namo Private Limited. I have received loan from my company. From my company. Can I do that? No, I should have not received the loan. Arnab is holding 26% share, more than 10%. Company has incurred losses since inception. People, I can tax only when the company has profits. Do the company have profits? Answer is exempt. It says loan received from a company will become fully taxable under IFOS if your shareholder holds more than 10% and the company has accumulated profits, company has losses, means the same, means the same. Yes, it says dividends received net of TDS is 4,50,000, expenses in connection with the dividend is 12,000. Two things, people. First, let's talk about dividends. I don't know the tax rate. Tax rate is 10%. When you don't know, I told you the always tax rate is 10% for exam questions, which means this number is 90%. This number is 90%. What is 4,50,000 by 90%? Answer is 5 lakh rupees. Now 5 lakh rupees is taxable under IFOS. People have also incurred some expense. Can I claim? Why? Because not clarified that it is interest, so I cannot claim this as an expense. I cannot claim this as an expense. This is enough for you to write. In case the question would have asked tax liability, whatever TDS I have, I can claim it as credit. Not important. Completely fine. Yes. Yes. Careful, people. It uses the word expense. It does not use the word interest. It does not use the word interest. Clear? Yes. Where is the CG loss? This is not buyback. Yes. Next one. Interest on FDR. No TDS deducted is 76,000 and is received by Santosh. I have received. What is FDR? Fixed deposits. It is fixed deposits. I received interest. Nothing. Take. Add to IFOS. Add IFOS and then claim 80 TTB. Look, he's a senior citizen. If he's a senior citizen, I can claim 50,000 rupees under 80 TTB only under. Very good. Correct? Yes. Last one. It says interest of 2,50,000 received on enhanced compensation for compulsory acquisition. People, did I receive compensation or interest? Interest tax under IFOS. I have received it by the way of court order. However, he received the amount only on 20th May 26. Interest confirmed right now, but received in 20 May 26. Can I tax right now? No. Taxable only on receipt basis. Therefore, I am telling exempt, or rather than putting exempt, I can say taxable in next year only up to 50%, which is 1,25,000. I can tax only 50%, which is 1,25,000. Check kar lo. Check kar lo. Any doubts? Yes. This is from May 26, people. This came in May 26. Dates were the problem. Dates were the problem. Students in a compulsory question will not focus on the dates. When you don't focus on dates, you start taxing it in that year. So you have to be very, very careful about dates. You have to be careful about the dates. We're going to continue our discussion with this topic called as capital gains. Yes, let me give you the weightage of this chapter. This chapter will either come as a part of your question number 3B, which carries about 4 marks in examination, or one of it comes as an MCQ question also as a case study format for 6 mark questions. Yes, I generally tend to skip this chapter because it comes in 3B and you can skip it off. But yes, nevertheless, sometimes it becomes difficult when it comes as a part of MCQs. May 26th had a slum sale related MCQ coming in. Jan 26 had an immovable property related MCQ coming in. So ICAI is paying attention to this chapter. Not very difficult, people, if you read it in the right template. So we're going to do it in a template format. Let's see if you understand it with me. Yes, yes, come on. We're going to read this chapter called as capital gains, and every chapter charges its own sections. Yes, this chapter starts with a charging section with only 2 words as an important part. One, the chapter says you are going to be taxing something under capital gains when there is a transfer of a capital asset. So 2 words to be noted. One is transfer, the other is capital asset. Let's only focus on the capital asset part. Income tax says capital asset basically means any asset that you have. Any asset that you have with some exclusions given to you. Exclusion number 1 on the screen, as you can see, is stock in trade, because obviously selling a stock in trade is taxable under PGBP. Second item on the screen says movable personal effect. Notice carefully, it is movable personal effect, which means 2 things. It should be personal in nature. Second, it should be movable in nature, which means a personal house is also taxable under capital gains because that is immovable property. Yes, so notice it is movable personal effect. The logic remains same as IFOS, where if you remember in IFOS, I can only tax certain movable assets which are BA pass DJ. Same logic comes in. It says movable personal effects are not taxable under CG except for BA pass DJ. In simple words, BA pass DJ is taxable. Can you remember what is BA pass DJ? It is bullions, archaeological collections, paintings, any work of arts, chairs and sculptures, securities, drawings and jewelry. Yes, these are the only items which are going to be taxable under capital gains when it is personal in nature. Other than that, it is not going to be taxable under CG. Yes, but when it comes to immovable property, any immovable property is taxable, whether it is personal or business nature. It doesn't really matter. Yes, then comes in other items. Other items says which are not taxable. One is rural agricultural land in India. We discussed what is rural agricultural land. I told you rural agricultural land basically means a land which is not urban in nature. And how do we discuss an urban land? Urban land simply comes and says, if you are drawing a circle and imagining this is the municipality, then the population of this municipality, if it crosses 10,000, if this population crosses 10,000, then I'm going to call this a urban land. Otherwise, I'm going to call it rural land. Then again, I told if you're going a little further, up to 2 kilometers, then also the land distance is only 10,000. Up to 2 kilometers also I check for 10,000. Within 10,000 is rural, above 10,000 is urban. If I'm going one more circle out, which is up to 6 kilometers, which means I'm going from the municipality to 6 kilometers. In that case, income tax says the number will become 1 lakh, which means less than 1 lakh rural, above 1 lakh urban. I'm going a little further down and I'm saying I'm going up to 8 kilometers. 8 kilometers comes and says 10 lakhs. Yes, so 8 kilometers is going to look for 10 lakhs. If it is less than 10 lakhs, I'm going rural. If not, I'm going urban. Anything above 8 kilometers are automatically rural. You will not call it urban at all. Yes, that is what the definition is. Will it come in examinations? 90% no, but still for you to keep in mind. Yes, so it is up to 2, 10,000, up to 6, 1 lakh, up to 8, 10 lakhs. It is 10,000, 1 lakh, 10 lakhs. Simple, straightforward. 2, 6 and 8 is what you have to keep in mind. These are all limits for urban. Falling below this is rural. Falling below this is rural, and therefore it will be taxable under agriculture income chapter. Don't tax it under CG. Are we clear? Yes. Then we moved on forward to understanding couple more items which are notified governmental securities. Like we discussed yesterday also, if you get any interest from notified government securities, it is fully exempt. Similarly, selling a notified government security is also exempt. Now, what is notified government securities? ICAI will not give you that. Yes, ICAI will simply say notified government securities, fully exempt. If at all they want to confuse you, they can start by using the word sovereign gold bonds 1999, gold bond scheme 1981. You see a weird year coming into picture, it is exempted. Keep it to that logic. You don't need to read anything further. Yes, that is what the definition of capital asset is. Any doubts on the definition? No. An MCQ for you to keep in mind, people, is that income tax says these are the exclusions. But I am now going to bring in an inclusion. What is an inclusion? I am an FII. Who am I? FII, foreign institutional investor. As an FII, if I'm going to sell any securities, as an FII, if I'm selling any securities, even though this may be my business activity, income tax gives you a special benefit and says it is only taxable under CG. Yes, so any security which is held as FIIs will always be taxable under CG, even if it is your business nature. Even if it is your business nature. This was an MCQ question from May 26. Yes, an MCQ question came in from May 26. I am assuming we have written it down. Okay, please write it down, people. So yes, people have noted it down. Please note this was a May 26 MCQ question. So I don't expect this in September or January, but still giving it a thought for you. The point is, if you are holding any security as an FII, it is now going to be taxable under CG only, even though if it is confirmed as your business activity, it doesn't matter. Special benefits given by Modi Sarkar. Yes, that is what the logic is. And then we have some summaries we've prepared for ourselves. Summaries like when I talk about property can be split into two. One is movable, immobile. I told you immobile is always CG only. It is always going to be taxable, cannot avoid it. When it comes to mobile, I will then ask, is it personal or business? If it is business, I will say it is always taxable, cannot be avoided. But when it is personal, I will come and ask, is it BA pass DJ? If you say yes, I will say taxable. If you say no, I will say exempted. Which means, people, if I give you a question and the question says, I am selling a car to you. I am selling a car to you. I am the seller. I am covered under CG. Will it be taxable? No. I am giving a car to you. You are getting a gift from me. Will it be taxable under IFOS? No, because IFOS also says BA pass DJ. Matlab BA pass DJ is the only thing taxable for both the parties. If it is car is exempt for me also, car is exempt for you also. Both of them are exempted. We don't have to worry about it. Ha, yeah, na? Yes. So keep that thought in mind, people. That is how the understanding works. Yes. So the moment you see non-BA pass DJ assets, assume it is fully exempt. Whether it is under CG or it is under IFOS, it doesn't matter. It doesn't matter. Are we clear on this part? Yes. Keep that thought in mind, people, and then we proceed on forward. We then discussed what is a classification of capital asset. And I told you the classification works in a very simple fashion. We have 3 due dates. One is 12 months, one is 24 months, one is 36 months. If you are seeing an asset like listed securities, any asset called listed securities are going under 12 months. Any listed securities will go under 12 months, like listed securities, equity oriented funds, mutual funds that we spoke about, zero coupon bonds, units of UTI is Union Trust of India, and finally units of business trust. All those items will be going for a period of holding of 12 months. More than 12 months is long term, less than or equal to 12 months is short term. Any other asset that you have in mind will all be 24 months. Will all be 24 months except for one item which is called slump sale. Slump sale goes and hits 36 months. Everything else will go and hit 24 months. So if I'm selling jewelry, 24 months. If I'm selling immobile property, 24 months. If I'm selling my car, not taxable. Not taxable. Be careful, people. It is not a BA pass DJ, therefore fully exempted. If I'm selling my rural agriculture land, exempted and will not be covered into the discussion. If I'm selling my mobile phone, exempted, not taxable. If I'm selling shares, listed will go 12 months, unlisted will go 24 months. Now be careful, people, when you write a CG question, descriptive format mein, last line you have to mention this. You have to mention the saying whether it is long term or short term, within brackets saying since POH is less than or equal to 12 months or more than 12 months, less than or equal to 24 months or more than 24 months. That line carries 1 mark itself. Yes, so be very careful on writing that line properly when you complete the question. Yes or no? Yes. Once we did classification of capital assets, we confirmed one item alone where we said any market linked debentures or bonds will be fully treated as short term only, no matter how many long you hold it. So in simple words, you see debenture and bonds, I will always say short term. Whether you call it listed, you call it unlisted, I don't care. It is always short term. Yes or no? So debentures and bonds are always going short term regardless of your period of holding. Are we clear on this? Yes. Then we moved on forward to understanding the definition of transfer. From an exam perspective, this is not important at all. You can choose to skip it off, but I'm just giving it out to you. Transfer basically includes sale, exchange, extinguishment, relinquishment, compulsory acquisitions, any conversion of capital asset into stock in trade, redeeming your zero coupon bonds, enjoying any benefits in a cooperative society like shares, like your house property, transfer with a part payment under Transfer of Immobile Properties Act, same as HP. All those things are considered as transfer, will be fully taxable under CG. Yes, but there are exceptions. There are exceptions, and we discussed about these exemptions, people. Items which are not taxable under CG. 3 items that I asked you to mark and keep in for you. One item was any transfer of gift. Any transfer of gift, which means if I'm giving a gift to you, it is not treated as CG in my perspective. Who am I? Seller. I am the seller. Giving of the gift is exempted in my hands. And please notice when I say gift here, CG only talks about gift. CG does not talk about gift element, which means I have to give it for free. If I'm giving it even for 1 rupee, will CG be triggered? Yes. If I'm giving it for even 1 rupee, CG will get triggered because now it is no more a gift. Gift only applies when it is zero considerations. Zero considerations. Yes or no? Yes. So careful, people. It says any kind of gift which is given by an individual or HUF will be triggered, will not trigger CG for the seller. But people, it can trigger IFOS for the receiver. It can trigger IFOS for the receiver, which means I will check for 3 conditions. Check for asset, check for Dirtman Clot, look for limits, look for limits. If the other party is going to pay tax on it, then I will say take his new cost. Take his new cost. Understand carefully, people. Take his new cost. But if the other party is not taxable under IFOS, then what happens? People, he is also not having a cost. I also have not been able to claim my cost. Therefore, I can transfer my cost to him. I can transfer my cost to him, which means in simple words, income tax is cost of acquisition for the new owner will become cost of previous owner. Will become cost of previous owner. I want you to understand this example once again. Look carefully. Imagine there is a party called A and there is a party called B. A is going to give a gift to B. A is going to give a gift to B worth 10 lakhs for free. Worth 10 lakhs for free. Tell me people, for A, is it taxable? If for A, is it taxable? No, because he gave it for free. Ignore him off. Yes. Now I go to B and I ask a simple question. Tell me, are you going to pay tax under IFOS? Tell me, are you going to pay tax under IFOS? He says yes. He says yes because it is BA past DJ, doesn't cover endowment clause, and limits have exceeded. Limits have exceeded. At this stage, people, Mr. B has to pay tax. Has to pay tax. Yes. Now that Mr. B is paying tax, what will he go and tell government? Sir, from Mr. A, I got the asset for free, but then I paid you 10 lakh rupees. Therefore, my new cost is very good. My new cost is 10 lakh rupees. Any doubts on this? Sure, sure. People, if I say the person says IFOS is not taxable. Who is saying IFOS is not taxable? B is saying IFOS is not taxable. At this stage, what is going to happen? If IFOS is not going to be taxable, then he doesn't pay anything. Now, did he pay anything to A? No. Did he pay anything to government? No. Apo, his cost is technically zero. His cost is technically zero. At this stage, I will give him an advantage. I will tell that Mr. A would have originally bought this share for some price. No, let's say he bought it for 3 lakhs. What happened? This 3 lakh got wasted. Why did it get wasted? Because he gave it for free. No. When he gave it for free, did it get capital gains? No. Which means his 3 lakh got wasted. I will go and tell, now boss, I am also not taxable. You are also not taxable. Do one thing. Whatever is my cost, you take it. Whatever is my cost, you take it. Which means in this case, the cost of acquisition will become 3 lakhs. The cost of acquisition will become 3 lakhs. Are we understanding this transaction? Yes. So look very carefully what happened. I asked a very simple question. Forget the seller. Focus on the buyer. If the buyer pays tax under IFOS, take the new cost. If the buyer says, I am also not taxable, go and ask the seller for the cost. Go and ask the seller for the cost. Whatever his cost was there, I will transfer it off to the new party. Any doubts on this part? Are we sure? Yes. People, I am also clarifying one other thing. Imagine Mr. A had bought these assets in 2010. The gift took place in 2025. Now tell me people, if Mr. B is going to pay tax under IFOS, if Mr. B is going to pay tax under IFOS, when did he pay the 10 lakhs to government? 2025. Apo, when is this period of holding starting from? 2025. Very good. He will say my period of holding will also start from 2025. But if you go to Mr. B and Mr. B says I am not taxable, then I will say then you have to take cost of A. When did A incur the cost? 2010. Apo, when will your period of holding start? It will also start from 2010. Very good. Are we clear on this right now? Yes. Which means what has happened, people? If B says taxable, I will say take everything new. If B says not taxable, I will say go and ask the previous guy for the data. Go and ask the previous guy for the data. Is this conversation clear? Yes. Which means I'm going to now keep it very simple. When you get a CG question in exam, look from the perspective of the receiver. Look from the perspective of the receiver. Receiver says IFOS tax, I will say take new cost. Receiver says IFOS not taxable, take the old cost. Take the old cost, which means cost of previous owner, period of previous owner, and close the answer with that. Any doubts on this part? Are we sure? Yes, that is what is written here, people. The writing comes and says, in case of this person where a gift is not taxable under CG, cost of acquisition will be cost of previous owner. Period of holding will also be period of holding of previous owner. But this will not apply if you are taxable under IFOS, which means I will only apply this when you are not taxable under IFOS. Is this example making sense right now? Yes, keep that thought in mind. Moving on forward, people, we discuss example number 2, which is transfer of reverse mortgage. I told you a very simple example. There will be a senior citizen, there will be a bank. The senior citizen will go and tell the bank, I have a house. You do one thing, you give me regular money. You give me regular money. In return, if I die, you can take over my house. If I don't die, I will return back lump sum. I will return back lump sum. Look from the perspective of the senior citizen. What did he get? He got regular money. Yes, people, is this regular money his income or does he have to return it back? He has to return it back. Apo, can I call it as income? No, income tax is exempt. Second, bank is now going to get your house. People, bank has to also return the house. Apo, can I call it transfer? No, income tax is that is also exempt. Third, senior citizen has to give back the money. People, when he gives back the money, bank is only getting back his original money. Is this income? No, therefore exempt. Appo what is taxable in this transaction? At any point of time, if the senior citizen does not pay the money back, the bank will sell his house off. Here income tax says who is selling the house? Bank. But whose house is this? Senior citizen. Who will pay tax on this? Senior citizen will pay tax. Income tax will say bank is merely acting as an agent. When bank is merely acting as an agent, go take the house, sell it in the market, make a profit, pay tax. Who will pay tax? Senior citizen. After paying tax, whatever money is left, bank can collect his share back. Whatever remains, you can have it. Matlab in the whole transaction of reverse mortgage, there is only one thing which is taxable, which is sale of the house by the bank on behalf of senior citizen. Taxable for senior citizen is the answer. Are we clear on this part? Yes, that is what is written here, people. Regular money exempt, repay lump sum exempt, selling house for repaying loan taxable for the senior citizen as a case. Chalo, I'm going to give you an example. Look at this carefully. See if you're able to understand and appreciate the example. The scenario is like this. I have a senior citizen. Whom do I have? Senior citizen. Senior citizen has bought the asset at a price of rupees 3 lakhs. What is this asset? House. Yes. Senior citizen went to the bank and came and said, dear bank, I want to mortgage this house to you. Give me regular money. Imagine he's getting regular money of 10,000 rupees. This 10,000 rupees will become exempt because he has to pay this money back in the future. Yes or no? Yes. Now, what is going to happen? Senior citizen is going to give back the bank the money back. Yes. Imagine he's going to give back only 2.5, let's say 5.5 lakhs. Because the 10,000 accumulating over the years will become 5 lakh rupees. Hey, this 5 lakh rupees which the senior citizen is giving back to the bank will be also exempt because it is his money getting back to him. But in this conversation, imagine if senior citizen does not give this money back. What will bank do? Bank will sell the house. Imagine bank went and sold the house for rupees 8 lakhs. Imagine if bank went and sold the house for rupees 8 lakhs. Tell me people, bank sold it for 8 lakhs. House soda cost was. So I will reduce the cost. Number becomes 3 lakhs. Number is 5 lakhs of profit. This 5 lakhs of profit will become taxable for. Very good. Will become taxable for senior citizen. Assuming 12.5%. Number hits 62,500. So 62,500 rupees has to be paid by senior citizen. What will bank do? Bank in his hand has 8 lakh rupees. Bank will take away his money of 5 lakhs because that is the money he is owed. So he will take back 5 lakh rupees, take back the 3 lakh rupees, and he will take this 3 lakh rupees and go and inform the senior citizen, this is the balance money for you. What will senior citizen do? From this 3 lakh rupees, first he will pay his tax of 60,500. He'll pay his tax of 60,500. Whatever remains in his hand, he can keep it. Are we clear? So one thing I want you to understand, people, tax on CG is not happening on 3 lakhs. Tax on CG is happening on the whole 8 lakhs. Because that is the sale value of the house. Yes or no? Yes. You cannot go and tell the bank that bank I am owing you 5 lakh rupees. No. So I will only pay tax on 3 lakh minus 3 lakhs. No. Because end of the day, you also got 10,000 rupees in return. The 5 lakhs is nothing but the 10,000 rupees in parts. That is not the sale value can be reduced. Sale value will remain at 8 lakh rupees. Because here if bank was not there, senior citizen could have sold it himself also. What price will senior citizen sell for? Same 8 lakh rupees. Senior citizen would have paid tax on 8 lakhs only. Yes or no? So understand what happens, people. Figure out that this 5 lakh rupees and this 10,000 rupees are technically the same. Because 5 lakh rupees is nothing but the lump sum of the 10,000 rupees. Hello. Yes or no? Understood the example? Any doubts on the example? This is how reverse mortgage works. Can we proceed on forward? Yes, good. Now that you've understood the definition of transfers, people, there is one transfer which I told you is not here and you can choose to skip it off. The transfers where if you see weird English and all coming in exam, suddenly the question comes and says, I am converting my debentures into shares. preference shares into equity shares. Hey, these kind of transactions, are you doing with an intention to make profit? No. Pure conversions should not be taxable. Similarly, I am saying I have some assets in my hand. I am giving it off to the National Museum. I'm giving it off to National Museum. Good for India. Should it be taxable? No. Therefore, exempt. Yes. Once again, I told you people, two companies are going to come together and become one company. We call it amalgamation. We call it amalgamation. People, two companies are coming together with an intention to make profit. No. The transfer is not happening with an intention to make profit. They're coming together for synergy gains. So what has happened? One company gave its assets to new company. The other company also gave its assets to new company. It's just that the two companies are in the name of one company right now. Is the transaction an intention to make profit? No. Will it be taxable? No. Will not be taxable. Similarly, I have one company. This company is going to split into two companies. It's going to split into two companies. We call it demerger. People, are you making with an intention to make profit? No. All about synergy gains. Do you want to tax this transaction? No. Will also not be taxable. In all these scenarios, the answer is very simple. The cost for the new owner is cost for the old owner. The period for the new owner is period for the old owner, and that's the understanding we have. Any doubts on the understanding? Are we clear on this part? Yes. If you have understood this, people, the format starts from here. Income tax makes it very simple. Beta, capital gains, if you want to do, is a very simple format. I want the profit of the asset. How do you make profit? You start with sale value, which in income tax we call it FVOC, full value of consideration. From this, we start reducing the expenses I have to incur to make the sale. Example, brokerage, commission, registration fees and all those things, we call it transfer expenses. What you have in your hand right now is called net consideration. In this net consideration, I will ask, how much did you originally pay? Cost of acquisition. Did you incur any huge expenses in the middle? Cost of improvement. What you have in your hand is called CG. What you have in your hand is called CG. So the format is very simple. The format says take FVOC minus transfer expense, arrive at net consideration, reduce cost of acquisition, reduce cost of improvement to arrive at your capital gains. This capital gains will have to be clarified as either long term or short term based on period of holding, 12 months, 24 months or 36 months. If you have any exemptions to grant, you can grant those exemptions to arrive at your taxable CG. To arrive at your taxable CG, exemptions will come under 54 series for you to figure it out then. Yes or no? Yes or no? That is what the format is. Any doubts on the format? Are we clear? Yes, good. Moving on to the exceptions rule, people. These are some scenarios where income tax says, beta, before you do CG itself, there is one problem. Problem is you don't have money. You don't have money. If you have money only, you can pay my tax. No. So let's do one thing. In certain scenarios, I am clarifying to you, don't pay tax until you receive the money. Tell me one thing carefully. Am I deferring capital gains or am I deferring tax payment? Very good. This topic comes and says, don't defer capital gains. Matlab capital gains is taxable in that year itself. The request is that I am asking you to delay the payment because you don't have money. Because you don't have money. Are we clear on this? Yes. What are the answers, people? The first one is called insurance compensation. Income tax says, if you have any insurance compensation, I am okay if you make me the payment after you receive the compensation. I'm okay if you make me the payment after you receive the compensation. So for an example, I am saying I bought an asset in 2010. In 2018, the house got destroyed. And so I requested for insurance money. Insurance company took a lot of time, did verifications and everything, and only gave me the money in 2025. People, when can I earliest pay tax? 2025, because that is the day when I have the money in my hand. But the problem is asset was sold in 2018 itself. So capital gains will also get computed in 2018 itself. It's just that I will compute in 2018 and wait on the tax. I will not pay the tax until I get the money. Are we clear? Yes. So understand and tell me carefully, people, what is going to be my sale value? In this transaction, my sale value is going to be 8 crores. The money which insurance company gave. What is my cost? 5 crores. The money which I paid for the house. Profit becomes 3 crores. People, this 3 crores will be taxable in 2018. will be taxable in 2018, but the tax of this will be paid in 2025. Careful on this. So it is taxable in 2018, but tax is paid in 25. How does it matter? Your period of holding now is 2010 to 2018. It is not 2025, it is 2018. Careful on this part. Are we clear on this? Yes. So careful people, we have written full value of consideration is insurance compensation of 8 crores. Cost of acquisition became 3 crores, making a profit of cost of acquisition was 5 crores, making a profit of 3 crores. Notice very carefully what is my period of holding. My period of holding ended on 2018. My period of holding ended on 2018, though I will have to pay tax in 2025. 2025. Are we clear on this part? Any doubts on this? Yes. One clarification I have to give you people because it came in May 2026. ICA has given a clarification right now saying if it is insurance compensation, it can only be taxable under CG when it is relating to any kind of fights and disputes. Any kind of fights and disputes like natural calamity and all those stuff. A question which came in May 26 was that a person is asking for insurance compensation because someone stole the money. Someone stole the money. Apparently in section 45(1)(a), which talks about insurance compensation, they have clarified saying insurance compensation is only taxable for natural calamities and stuff like that. Yes, items like flood, items like earthquakes and all those things will be given in 45(1)(a). Items like having a big fight, road, there is a big strike and all going on, eligible for insurance compensation. But if at all you're sitting in your office and one of your employees stole the asset, can you ask insurance for it? No. You can, can you be taxable for it? No. ICA is confirming this is fully exempted. ICA is confirming this is fully exempted. So for you to note down, no CG if compensation, no CG if compensation is for any theft is covered. Yes, no compensation if it is for any theft. Other than that people, any natural calamities, earthquake, typhoon, fire, riots, all those things are covered. Any kind of bomb blast and all you can take into insurance compensation. Things like theft will not be covered. Things like theft are not covered. This is a clarification from May 26. Does it really make a difference? No, but yeah, it was a 2-mark question in examination. Clear? Any doubts? Not be taxable at all. Full stop. Fully exempted. Clear? Yes. We moved on forward to the next heading people. The next heading on the screen says compulsory acquisition. Income tax says, my dear child, if your asset is unfortunately taken over by the government, then you will not receive the money on time. In which case you can delay the payment of tax. Until you receive the first installment. So I've given a small diagram chart for you people. The diagram chart says I started from 2014 with the purchase of 5 crores. In 2016, government came and took over my property for 7.5 crores. 7.5 crores is my sale value. I paid 6 crores for it, which means my profit was I paid 5 for it, which means my profit is 2.5 crores. Hey, this 2.5 crores is taxable in 2016. But look, I got my first installment only in 2025. Can I pay tax in 2016? Can I pay tax in 2017? No, I can only pay tax when I receive the first installment, which is 2025. Now people, when it is first installment, it doesn't matter what they give you. As long as they give you 1 rupee also, it is taxable in that year. How much is taxable? The 1 crore they gave or the full 7.5? The full 7.5 will become taxable. You will tax the full original compensation of 7.5 crores. Are we clear? Any doubts on this part? Tell me people, what is my sale value? 7.5. What is my cost? 5 crores. My profit is 2.5 crores. Taxable in the year 2016, but tax paid in the year 2025. My period of holding is from 2014 to 2016, which is within 24 months, and therefore it is short term. Capital gains. Yes or no? Yes. Now at any stage, if I was not happy with the 7.5 crores, I can file a case. For increased compensation. So what did I do? In 2016, I went and I made an appeal. In 2018, I got some interim compensation of 2 crores, which means I went and told the court, sir, at least or extra 2 crores if you can give me, I'll be really happy. I'll be really happy. Tell me people, the 2 crores which court has given to you, is it already confirmed or is it still under discussion? It is still under discussion, because it can happen that tomorrow he may say, refund back the 2 crores. Which means, will I pay tax of that 2 crores in 2018? No, I will say, let's get it confirmed first. Hey, how will you get a confirmation? When the court prepares an final order. When the court prepares an final order, and therefore you got the final order in 2020. At this stage, now you have a confirmation. Yes, I am supposed to receive this 2 crores. Am I convinced right now? Yes. Can I pay tax on this? Yes. When will I pay tax on this? 2020. I'll pay tax on this in 2020. Tell me people, how much did I receive? 2 crores. Did I pay any expenses for this? No. Maybe I would have paid court expenses. Maybe I would have paid court expenses. If I want, I can reduce the court expenses. Other than that, do I have any other expenses? No. Which means my profit is 2 crores. Now comes the important question. When are you paying tax on this? 2020. What is the nature of this gain? What is the nature of this gain? The nature of this gain will be the same as the original compensation. Income tax clarifies that, my dear child, the extra 2 crores that you got is for the same house only. So what is the nature of the original house? Short term. What is the nature of the new compensation? Short term only. The answer will not change. The answer will not change, which means your period of holding does not matter here. Your period of holding is not going to be 2016 to 2020. Your period of holding is continuing to be 2014 to 2016. It will still remain short term. Are we clear? Yes, come on people. Now I have only asked for interim compensation. My request may not have been for 2 crores. My request could have been for an additional number also, which means I went and I asked for an extra 1.5 crores. Which means when the court order was passed, was the court order passed for 2 crores or 3.5 crores? The court order would have been passed for 3.5 crores. At this stage, what will the court say? In 2020, they said 3.5 is eligible to you. To you already got 2 crores, you have already got balance 1.5 crores. Court is, the government is pending to give. The government is pending to give. People, this balance 1.5 crores. No, government is only giving you in 2026. Can you tax it in 2020 itself? No. Why? Because money is still not received. Apo, you can only tax it when you receive the money, which is 2026. Which is 2026. Again, tell me people, how much did you receive? 1.5 crores. Did you incur any expenses? No, because court expenses also got claimed in interim itself. Court expenses also got claimed in interim itself. Is there any other expenses? No, which means pure profit of 1.5 crores taxable in the year 2026. Taxable in the year 2026. But the nature of gains is short term, which is nothing but 14 to 16. Which is nothing but 14 to 16. Can I simplify this for you? The logic is that if you have original, interim, enhanced, original will become taxable in the year of first installment. Interim will become taxable when it is confirmed by the final order. Final compensation will be taxable when you receive the money. When you receive the money, but the nature of gains for all the three are the same. All the three are the same. Same as original compensations. Same as original compensations. Are we clear on this? Are we clear on this? That is what is written, people. But imagine, apart from this, if I end up getting any interest. If I end up getting any interest. People, if enhanced compensation gives you interest, can you tax it under CG? No, you can tax it only under IFOS. And in IFOS, they say taxable in the year of receipt. Taxable in the year of receipt only to the extent of 50% of it. Half of it is exempt, half of it is taxable. That is how the interest works. Yes. So now you have 4 payments you will get. Original, interim, final, interest. Original goes for first installment. Interim goes for final order. Enhanced goes for receipt basis. Interest goes for IFOS receipt only 50%. IFOS receipt and only 50%. Any doubts here? Sure. Yes. Good. With this understanding, people, we can proceed on the simple example. I'm showing it on the screen. This is what you have written down to keep in mind. Yes. Which means you can ignore the example. This is a final summary for you to understand of. Yes. Yes. Come on. Then we moved on to what is called as conversions, people, where conversions are of stock in trade into capital asset or capital asset into stock in trade. Let's first talk about CA to SIT, which means first you have capital asset. So first, what are you going to do? I'm going to hold a capital asset. and I will first convert to stock in trade. Convert to stock in trade. Then I will sell my stock in trade. People, first what I had? Capital asset. Upper first what will I get? CG. Then I sold stock in trade. What will I get? PGBP. Can we make our life easier? Can we make our life easier? I will tell, do one thing. Do one thing. Don't convert. Don't convert. Directly sell in the market. Directly sell in the market. Matlab capital asset will be taken and sold in the market. Stock in trade will then be bought from the market. Capital gains will be sold in the market. Stock in trade will be bought from the market. We did the same example for agriculture income, sugarcane example. Yes. So what am I going to do? I am starting with the capital asset. When did I buy? 2015. In 2015, I bought a capital asset for a price of 3 crore rupees. In 2018, I decided to convert. And I said, don't convert. Simply sell to the market. Simply sell to the market. Now people, what price are you selling it for? I am saying, let's assume that the sale price is going to be, let's say for example, I'm going to say sale price is going to be 6 crores. Sale price is going to be 6 crores. Tell me people, what price did you buy for? 3 crores. What price did you sell for? 6 crores. How much profit you made? 3 crores. 3 crores as CG. 3 crores as CG. Yes or no? Yes. Now people, what will you do? You will go and buy stock. What price? 6 crores. Because what price did you sell for? 6 crores. So what price you will buy for? 6 crores. What price did you sell for? 7 crores. You made a profit of 1 crore. And this 1 crore will be taxable under PGBP. Very good. Any doubts on this? Yes. Question. People, when is the CG taxable? When you sold. When you sold. You sold in 2018. Up when is it taxable? 2018 itself. Yes. But when should you pay tax on this? 2025, because if you understand, when I converted, did I get money? No, I will only get the money in 2025 when I sell my stock in trade. When I sell my stock in trade. Yes or no? Therefore, income tax says whatever profit you got here, together pay tax in the year in which you sell the stock, which is 2025. Which is 2025. Are we clear? Are we clear? Yes. Let's do reverse. Let's do reverse. People, same example. I am going to start with 2015, but this time I have stock in trade. Up first I bought a stock. In 2018, I decided to sell the stock. I decided to sell the stock and get to PG and get CG. People, first I am selling stock. Up first will be taxable under PGBP. Imagining same example where I am saying I am selling for 6 crores. People, how he sold for 6 crores, bought for 3 crores, profit I made 3 crores, taxable under PGBP, because this time I sold stock in trade. This time I sold stock in trade. Now I have again bought a capital asset. Bought the capital asset for 6 crores, sold it for 7 crores, made a profit of 1 crore, taxable under CG. But this time be careful people. Tell me what is my period of holding. Is it gonna be from 15 to 25? No, because when did I get the capital asset? 2018 only. Apo, I will also take period of holding from 18 only till 25. Till 25. So here the period of holding will be from 18 to 25, because that is the day when I bought the capital asset. That is the date when I bought the capital asset. Now tell me people, I am selling capital asset 2025. Do I have money in my hand? Yes. Can I pay tax then? Yes. Apo, capital gains will be taxable in 2025. Coming to stock in trade. A stock in trade in 2018 when I sold, did I get money? No. Can I defer this expense? No. Income tax says the rule of deferment is only for CG. It is not there for PGBP. So unfortunately in 2018, even though you don't have money, I want tax right away. I want tax right away. Matlab for stock in trade, you will tax it in the year of conversion itself. But for CG, you will tax it in the year of sale. You will tax it in the year of sale. Yes or no? Yes. This is where I want you to understand people. Transaction 1 was CG to PGBP. Transaction 2 was PGBP to CG. What can I defer? CG I can defer. Apo, when CG happened first, I can say pay later. But when PGBP happened first, I said cannot pay later, pay PGBP right now, pay CG later on. The format remains the same. The format remains the same. You might call it conversion. I will still call it sale only. I will still call it sale only. Matlab I will say I sold capital asset and then I bought stock, or I sold stock and then I bought capital asset. The logic remains the same. Any doubts on this part? Are we sure on this? Yes or no? This is how conversion works, people. So in conversion, the only thing you're going to trigger in exam is if the question comes and says an asset was converted to stock, then they will say the stock was sold in 25. You will say, okay, then wait on CG. Let CG tax also be paid in 25. But the period of holding will stop in 2018 itself. Will stop in 2018 itself. Are we clear? Yes. CG more than law revolves around numbers, people. Numbers in the sense dates. So you have to be focused on the dates. You have to know where the dates are coming from and what is happening on the date module. Hayana. That is how exceptions work, people. Any doubts on the exceptions? Are we simple enough and clear? Yes. Good. With the exceptions out of the picture, the easiest way to complete CG is simply put out some formats. So I have some very beautiful, simple formats that I want you to discuss with me. Yes. Format number 1 on the screen, as you can see, is a special scenario on unlisted shares. Unlisted shares. People, I'm starting with unlisted shares. Tell me, unlisted shares will be taxable under section 112 or others. Will be taxable either under 112 or others. If it is long term, it will be 112. If it is short term, it will be others. Because 1128 talks about listed, 1118 talks about listed, and therefore this trigger will only be coming for 112 or others. We are talking either for LTCG 112 or we are talking about STCG others. Very good. Yes. Now I have given you how many columns, people? I have 1, 2, 3, 4, 5 columns. Let's talk about each column one by one. Rule number 1. Income tax is told if you are selling any unlisted shares. What are you selling? Unlisted shares. Please ensure you don't sell it below FMB. Please ensure you don't sell it below FMB. If you are selling it before FMB, you are doing something wrong. I don't accept this. And therefore income tax said when you take your sale value will always be the actual sale value or FMV, whichever is higher. In simple words, I said I sold it for 1 lakh. Market says you should have sold for 2 lakhs. Income tax will say you are a fraud. Sell it for 2 lakhs only. Matlab sale value changes to 2 lakhs. I am selling it for 3 lakhs. Market value is only 2 lakhs. Income tax will say amazing. You sold it for 3 lakhs, more than what I expected. Take 3 lakhs, whichever is higher. Any doubts on this part? Yes. So for all the transactions, income tax is confirming to you the sale value will become FMV or actual value, whichever is higher. Coming to the first case, people, what am I selling? I am selling my original unlisted share. I would have bought it. Yes. So my cost price will be the price at which I bought it. Will you have any improvement in shares? No, which means cost of improvement is not applicable. So notice what did I do? I said fair market value is whichever is higher. You may have some transfer expenses like brokerage commissions. Reduce that to arrive at net consideration. In this, you can now reduce your cost of acquisition if you have any to arrive at your long-term or short-term capital gains. People, these are unlisted shares. Period of holding is 24 months. More than 24 goes LTCG. Less than 24 goes STCG others. STCG others. Yes or no? This is when it comes to original shares. But here is the caveat. Income tax says if you ever see in the question that the shares were purchased before 2001. If you ever see this in the question where the shares are purchased before 2001, you can take the cost as actual cost or FMV, whichever is higher. You can take it as actual cost or FMV, whichever is higher. FMV as on 2001. Very good. That is what is written on the bottom. When you see a share purchase before 2001, take actual cost or FMV of 2001, whichever is higher. This is only applicable in one scenario, when the cost is before 2001. If the cost is after 2001, take it as it is. Don't change the number. Are we clear? Yes. Second asset on the screen is saying bonus. People, tell me, when you get bonus, you get free shares. Did you pay something for it? No. Upper cost is, which means that is what is given. They said your sale value will remain the same, like we discussed, but the cost of acquisition will now become 0 because you never paid a single rupee for it. But yes, if I give you a question in exam where I say bonus was also purchased before 2001, In that case, what will I say? I will say cost is 0. FMV is 2001, whichever is higher. Answer becomes FMV. People, which means this rule applies for every case. This rule applies for every case. Any asset purchased before 2001 will get the rule as FMV or actual cost, whichever is higher. Whichever is higher. Are we clear? Are we clear? Any doubts on this? Yes. So what is happening, people? I am saying when you purchase bonus shares, technically the cost is 0. But if you purchase the bonus shares before 2001, then what happens? I will take cost as 0, FMV of 2001, whichever is higher. Obviously, FMV will be higher and that becomes your new cost. And that becomes your new cost. Any doubts on this? Are we sure? Yes. Moving on to asset number 3, which is called exercising rights, which means company gave me a chance to buy rights shares and I've bought the rights. I have bought the rights. People, if I've bought the rights, what did I pay the company? Exercise price. Upon my cost is nothing but the exercise price. All other data remaining the same. All other data remaining the same. Again, people, if this rights was given to me before 2001, I can take exercise price or 2001 FMV, whichever is. The logic remains the same everywhere. The logic remains the same everywhere, which is why if you notice the star mark is on COA. The star mark is on COA. Are we clear? Yes. Option 2. People, rights were given to me. I said I don't want the rights. Let me give it off to my friend. Let me give it off to my friend. First, what did Rahul do? Rahul sold the rights. Rahul sold the rights. People, when Rahul sold the rights, Rahul would have got something called rights price. Rahul would have got something called rights price. For example, 5 rupees. This 5 rupees is Rahul's sale value. Did Rahul pay something for the rights? Did Rahul pay something for the rights? No. What did I pay for the rights? Nothing. Rahul is selling the rights. Did Rahul pay something for the rights? No. Upper my cost is 0 and therefore my profit is 5 exactly as it is. My profit is 5 exactly as it is. No expenses whatsoever. Yes or no? Therefore, people, when you say sale of rights, answer is nil. No profit. No cost, pure profit. Pure profit. But look from the friend perspective. People, friend has to now pay Rahul 5 rupees to get the rights. Then friend has to pay the company to get the shares. Which means now friend has to incur 2 costs. Rights price which he paid to Rahul. Exercise price which he paid to the company. Which means his cost is both of them together. His cost is both of them together. So his cost becomes rights price plus exercise price to get the answer. To get the answer. Any doubts on this part? Any doubts on this part? Yes. So what is happening? I am explaining this once again. Look carefully. Imagine a scenario where Rahul is coming and saying Rahul had some rights. Rahul had some rights. Imagine company came to Rahul and said, I am giving you 100 rights. I am giving you 100 rights. You can take the rights if you want. I said, no, I don't want the rights. I will give it off to my friend. So Rahul went to the friend and said, dear friend, would you like to become a shareholder? He said, yes, I'm interested. I said, okay, do one thing, pay me 5 rupees. Pay me 5 rupees and I will transfer my rights to you. People, am I transferring my shares or my rights? Rights I am transferring. Matlab, Rahul is now selling his rights at a price of 5 rupees. Did Rahul pay something to the company for this? No. So Rahul made a pure profit of 5 rupees to be taxable for Rahul. To be taxable for Rahul. Now, what did friend do? Friend went and paid Rahul 5 rupees for getting the rights. When he got the rights, he went to the company and said, dear company, I would like to buy shares. Company said, I also want 100 rupees for the shares because that is the exercise price. So I have to pay an additional 100 rupees to the company, which means I have now ended up paying totally 105 and that is my new cost. That is my new cost. Who am I? I am the friend. I am the friend who's purchasing the shares. I am the friend who's purchasing the shares. Yes or no? Any doubts right now? Are we clear? This is how rights work. Back to you people. Yes. So rights come and say very simple. If rights I am itself buying, then exercise price. If rights I am selling, then I will first sell for 5 rupees and make profit. Friend will buy for 5 rupees from me and pay 100 rupees to the company, total becoming 105. That is his total cost. If I am buying bonus from the company, my cost is 0. If I am buying normal shares, cost is normal shares. But if at any point of time, any cost was incurred before 2001, simply take cost or FMV of 2001, whichever is higher. whichever is higher. Any doubts on this part? Are we sure on the unlisted piece? Yes. If you have done with unlisted piece, that moves you to the listed piece of the securities, where here we talk about sections 112A and sections 111A. 112A moving for long term, 111A moving for short term. Period of holding requirement 12 months. Period of holding requirement of 12 months. The format is very simple. Income tax says if you want to cover yourself under 112A or 111A, there are three assets which are getting covered. One is listed equity shares, second is equity oriented mutual funds, and the final one is units of business trust. These are the only three assets which are covered. Not important for exam. You will only get listed equity shares. Yes, which means listed equity shares are always going under 112A and 111A. Now I want you to understand the format carefully. Yes, format number one. People, I will sell the share. My sale value is FPOC. My sale value is FPOC. I may incur some expenses like brokerage commission. Income tax will say allow. STT, income tax will say not allowed. Income tax says STT, my dear child, is not an allowable expense, so ignore the STT cost. Ignore the STT cost. So therefore we have written FPOC is the actual money. Then transfer expenses may do not take STT payment alone. Do not take STT payment alone. Apart from that, you pay something else. I am fine. I am fine. The problem is only with STT. Do not pay STT. Do not pay STT. I mean, obviously you have to pay STT, but I will not give you the deduction. I will not give you the deduction. At this stage, what you will have in your hand is net consideration. And here comes the important change. Be very careful on this. Income tax says if you want to calculate cost, you need to first tell me what nature of asset do you have. What nature of asset do you have? If you tell me the nature of asset is short term, I will say doesn't matter, take the original cost. If the asset is short term, doesn't matter, take the original cost. But if you tell me the asset is long term, 112A, then I will ask a further question. Did you purchase this before 2018 or did you purchase it after 2018? Because before 2018, this was exempt. This was exempt, and therefore income tax said if you purchased it before 2018, I have a different computation. If you purchase it after 2018, I have a different computation. If you remember, we did the computation in first day's class. Yes, I told you if you want to calculate long-term capital gains ka cost of acquisition, the formula is very simple. The formula is FMV of 2018 versus sale value, whichever is lower. Once again, FMV of 2018 or sale value, whichever is lower. Compare with the original cost, whichever is higher. Compare with original cost, whichever is higher. This number will become my new cost of acquisition. Understand, this is not my profit. Understand, this is not my sale. This is my new cost. This is my new cost. This is only happening if you purchased it before 2018. Because if you purchased after 2018, what the hell will FMV do here? Nothing to do. Take the actual cost itself. Take the actual cost itself. Yes, yes. So if you purchased it before 2018, the cost of acquisition will become FMV of 2018 or sale value, whichever is lower, compared with actual cost, whichever is. Be careful on one thing, people. FMV here is not on 31st March. FMV is on 31st January. Simple way to remember this. It was before budget. Before budget. When was the budget? 1st February. Therefore, they told 31st January as the answer. Yes. So, this is the only case where I tell 2018. I don't mean financial year. Here is the first case where I tell 2018 matlab calendar year. And therefore, it is 31st March of 2018 before budget day. Before budget day, that's what the rule is. Any doubts on the rule? Yes. Yes, it's only for long term because after, if it's short term, then it's going to be less than 2018 only. Yes, let's take an example, people. Imagine an illustration where I'm telling you my cost is given as 100. What is my cost? My cost is given as 100. My FMB is 300 and my sale value 600. And my sale value 600. Hey, is it before 2018? Yes. Apo cost has to be changed. Cost is FMB or FPOC, whichever is lower. Number became 300 versus the cost, whichever is higher. Number became 300. 300 is my new cost of acquisition. What price did I sell for? 600. So I sold for 600. My new cost is 300, making a profit of 300, taxable under section 112A. Very good. Yes or no? Once again, I said I bought for 100, FMV showing 80, sale value 600. I took 80 or 600, whichever is lower, number became 80 versus 100, whichever is higher, number became 100. New cost is also 100, sale value is 600, profit made 500. Profit made 500. Third one, I said I am taking 100, FMV being 650 and sale value 600. I again took 650 or 600, whichever is lower, number became 600 versus 100, whichever is higher, a number became 600. I sold for 600, new cost is also 600, profit ended up 0. Profit ended up 0. Fourth one, I started with 100, FMV is 150, sale value is 70. Sale value is 70. People, it is 150 or 70, whichever is, number became 70 versus 100, whichever is higher, number became 100. I sold for 70, made cost 100, loss became 30. Can I carry forward loss? Yes, allowed as deduction. Allowed as deduction. Next, I started with 100, went to 70, then went to 30, sold for 30. Tell me people, 70 or 30, whichever is lower, number became 30 versus 100, whichever is higher, number became 100. Therefore, new cost is 100, sale for 30, cost is, profit is minus 70. Can I carry forward? Yes. Yes, that is what we did in yesterday's class, people. So the computation is very simple. Computation is FMV or sale price, whichever is lower, compared to cost price, whichever is higher. Whichever is higher. Are we clear? Are we clear? Yes. So if I'm summarizing the whole thing, people, when I did unlisted shares, sale value will become sale or FMV, whichever is higher. Cost will become cost or FMV of 2001, whichever is higher. Whichever is higher. Bonus order cost is 0. If I am exercising rights, exercise price. If I am selling my rights, cost is 0. If I am buying rights from someone, exercise price plus rights price. If I am selling listed shares, cost will become FMV of 2018 versus sale value, whichever is lower, compared with cost price, whichever is higher. Will confirm my COA. Will come from my COA. Sale value remains as it is. Sale value remains as it is. Is the template clear? Is the template clear? Yes, that is what the template was when we discussed on forward. This discussion has already taken place in PGBP, where we told if you have any depreciable assets. What assets do you have? If you have any depreciable assets, 99% of the times you will keep it in PGBP only. Yes, but there is only 2 cases where it will move to CG. If you remember, people, when we did PGBP, I told you depreciation can only be granted if certain conditions are satisfied. There should be an asset. You should be the owner. Asset should have a value. Asset should have a value. Which means, people, imagine a case where I come and tell you, I have assets worth 100. I have assets worth 100. I sold the assets for 130. I sold the assets for 130. People, does the block have a value? No, block has become negative. Block has become negative because block code cost was 100, block code sale is 130, block has become negative. Income tax will say, my dear child, move to CG. Move to CG. How much did you sell for? 130. How much did you buy for? 100. Cost profit is 30. Cost profit is 30. That is what depreciable assets talk about. Yes, but imagine an example. Imagine I have 2 machineries. Imagine I have 2 machineries worth 100. Worth 100. I am selling 1 machinery for 130. I'm selling 1 machinery for 130. Tell me, people, do I have a machinery left? Yes, but do I have a cost left? Do I have a cost left? No. People, I had 2 machineries for 100. One I sold for 130. One I sold for 130. Look once again. I have 2 machineries worth. Once again. I have 2 machineries worth 100. Total worth 100. Total worth 100. I sold 1 machinery for a price of 130. Tell me, do I have machinery left? Yes. Do I have cost left? No. Can I continue PGBP? No. Move to CG. Answer is 30 ka profit. Answer is 30 ka profit. Yes or no? Yes or no? Come on. I have 2 machineries worth 100. I sold 2 machineries for a price of 130. Tell me, do I have machinery? No. Do I have cost? No. Which means again move to CG, arrive at profit. Arrive at profit for 30. Yes or no? Yes or no? Come on, people. I am telling you, I have 2 machineries worth 100. I have sold 1 machinery for a price of 80. For a price of 80. Tell me, people, do I have a machinery left? Yes. Do I have a cost left? Yes. How much is my cost left? 20 pay I will charge. Very good. So I will have 1 machinery on which I can charge depreciation for the remaining 20 rupees, because here we did sale value to be reduced on FIFO logic. To be reduced on FIFO logic. You remember this? Yes. Come on. One more. I am saying I have 2 machineries worth 100. I have sold both the machineries for a price of 80. Tell me, do I have a cost? Tell me, do I have a cost? Yes. Do I have any assets left? Can I continue depreciation? No. I have to move to CG. This time I have a loss because I sold for 80, but my cost is 100. Report a loss under CG. Report a loss under CG. Is the 4 examples clear? Is the 4 examples clear? That is how depreciable assets work, people, for you to understand a few things. Yes, please note, there can never be a possibility that in the same question you can have depreciation and CG. Not possible. The question will either have CG or will have depreciation. Cannot happen both. Yes, people, if I give you an example where I said sale value was done in December, can you say, Rahul, let's do one thing, let's do depreciation from April to December? Because I told you depreciation happens only at the end of the year. At the end of the year, do you have an asset? No. Which means, can you charge depreciation? No. Which means answer will either be CG or will be depreciation. Both are not possible. Both are not possible. Are we clear? Yes. Here income tax clarifies one thing. Income tax says, my dear child, for a depreciable asset, the tax rate should be the same as PGBP. The tax rate should be the same as PGBP. A PGBP follows slab model. PGBP follows slab model. Uppo CG also should follow slab model. CG also should follow slab model. I have 4 CGs, people. 112A, 112, 111A, others. A 112A tax rate is 12.5. Is it slab? No. 112 is 12.5. Is it slab? No. 111A is 20%. Is it slab? No. 1 STCG others is following income tax confirmed. All these profits will be treated as STCG only. All these profits will be treated as STCG only, which means in this conversation, I don't care how many years you hold the asset. I don't care how many years you hold the asset. Answer will always be STCG or STCL. Answer will always be STCG or STCL. Are we clear? Are we clear? Are we clear? Careful, people. Depreciable assets are always triggered as STCG. Can they ever be long term? Not allowed. Definitely not allowed. I should go for normal depreciation only. Yes. Therefore, if you notice, we have written up here, people, any gains coming from depreciable assets will always be treated as short-term capital gains or short-term capital loss. Can I change this? No, I can't change this. Period of holding does not matter. Period of holding does not matter. Are we clear? Yes. Yes. So 3 special scenarios we have learned. One is unlisted shares. One is listed shares. Third one is depreciable assets. Only thing to be kept in mind is depreciable assets goes for always short-term capital gains or short-term capital loss. If you want to trigger capital gains, 2 things have to satisfy. Either the sale value should be more than cost, or you have sold off all the assets off. If that happens, then you move to CG, which means if you want PGBP, there is only one possibility. There should be an asset. Asset should also have value in it. If you have an asset with a value, do depreciation. Otherwise, always CG only will happen. Always CG only will happen. Are we clear? Are we clear? Yes, that is what the understanding is. Yes, moving on to the most important format of your examination, capital gains. If you get a question in CG, expect it coming from here. Yes, May 26 asked you some very random insurance compensation related question. So September and January expected question is immovable property for sure. Yes, we're looking at the complete format of CG of immovable property. Now I have a detailed format, but I say I will not ask you this much details. They'll give you 1 or 2 elements of this, so you have to just play around with this. Yes, as long as you can remember the whole format, you can answer any questions. Look very carefully. Look very carefully. Let's look at this carefully. Yes, people, for you to do CG, there is always a template to be kept in mind. The template starts with FPOC minus transfer expenses, arriving at net consideration, reducing cost of acquisition, cost of improvement, arriving at Capital gains. Yes, we're going to follow the same format, same template. I'm just going to make changes. Change number 1. When we started with full value of consideration, save as unlisted shares, income tax sees a problem with immovable property. And therefore, immovable property ke liye income tax told, my dear child, please do not sell anything less than SDV. Please do not sell anything less than SDV. In simple words, full value of consideration now is SDV or sale value, whichever is higher. It is SDV or sale value, whichever is higher. Yes, but if at any stage you have a valuation officer guideline, you can reduce it from the SDV. You can reduce it from the SDV. In simple words, the template now becomes like this. The template is FMB or SDV, whichever is lower, compared with sale value, whichever is higher. Once again, it is FMB or SDV, whichever is lower, compared with sale value, whichever is higher. Not every time in examination do you get FMB, people. FMB is not every time given in examination. So in those kind of logics, the answer is simple. SDV or sale value, whichever is. Two exceptions here. Exception number 1, income tax says I will not use this template format when SDV is within 110% of consideration value. Same example as we did in IFOS. IFOS says if SDV is within 110%, don't tax. Same here, they come and say if SDV is within 110%, don't add the extra. Don't add the extra, keep the sale value as it is. Keep the sale value as it is. Second, income tax says if you are given 2 SDVs in exam, normally take the SDV on the date of sale. But if you think SDV on agreement is smaller, lesser, you can take it. But then you have to satisfy 2 conditions. SDV on the date of agreement is approved to you if you satisfy 2 conditions. Condition 1, you should have got advance on this date. And condition 2, this advance should be by prescribed permissible modes. So I'm reading this once again for you. Look carefully. It says when it comes to the format of full value of consideration, the full value of consideration is SDV given to you versus FMV as per the officer, whichever is lower. Compare that with the sale value, whichever is higher. Ignore this complete computation if SDV is within 110% of consideration value. Yes, at any stage, if you have been given 2 SDVs, you can take the agreement date SDV, provided you got advance by prescribed modes. Meaning, people, if you did not get advance, you will take SDV on the date of sale value. If you got advance, but it was not by prescribed modes, you will take SDV on sale value. Agreement requires 2 conditions to be satisfied. Yes, as a simple example, imagine if I tell you that the SDV is 130, consideration is 100. People, you will take SDV or consideration, whichever is higher. Number is 130. Also check for 110%. Is it within the limit? No. Which means the answer becomes 130. Government has confirmed you are a bad person. If I'm going scenario 2, my SDV is 105. My consideration value is 100. People, it is SDV or consideration, whichever is higher. Number shows 105. But when the number was showing 105, I said it is within 110%. I look genuine. If I am looking genuine, take 100 itself. Don't tax the extra. And the last one is where 90% of the students will go wrong, people. Question says SDV is 105. Consideration value is, SDV is 100. Consideration value is 105. Hey, government wanted 100. You are ready to give 105. You're already good. Let's pay tax on 105 itself. No check of 110% and all, because 110% is when you are bad. I am already good. Nothing to change. Are we clear on the template format? Yes. So it is FMV or SDV, whichever is lower, compared with cost value, compared with sale value, whichever is. Very good. Once you have this computation in your hand, you have FPOC given to you. In this FPOC, now you will start minusing your expenses for transfer. In an immovable property, the expenses for transfers are nothing but brokerage, commission, stamp duty charges if you had to pay, registration fees if you had to pay. All those can be reduced off to arrive at your net consideration. Once you have your net consideration in hand, income tax now will come and ask you for cost of acquisition. Now when cost of acquisition happens, I will ask the same question. Did you buy this before 2001 or did you buy this after 2001? If you bought this before 2001, I will use the same format as above. I'll use the same format as above. The last line alone will change, which means the format is FMV or STV, whichever is lower compared with cost value, whichever is higher. Yes, so it is FMV or STV, whichever is lower compared to cost value, whichever is higher. Keep in mind here the FMV and STV is not as on today, it is as on 2001. It is as on 2001. Now, if you bought the asset after 2001, no discussions whatsoever, answer can remain cost itself. Answer can remain cost itself. Yes or no? Yes. Here I am going to make few modifications. Modification number 1. Once you have the cost in your hand, income tax will ask, my dear child, did you do any forfeiture of advance? Did you do any forfeiture of advance? If you have forfeited any advance money in the past years, I will ask, did you do the forfeiture before 2014 or after 2014? If you did the forfeiture before 2014, I will say reduce it from the cost of acquisition. Reduce it from the cost of acquisition. But if you did the forfeiture after 2014, I will say nothing to do with CG. Move it to IFOS. Don't touch my computation. Don't touch my computation, meaning I only have to reduce one item, which is advance forfeiture, which is done before 2014. I have to only reduce before 2014. After 2014 has been ignored for CG purposes. Has been ignored for CG purposes. Yes or no? Yes or no? Then I will add any interest on loan that I have. I will add any interest on loan that I have provided. I have never claimed this as a deduction under HP or Chapter 6A. I have never claimed this as deduction under HP or Chapter 6A. What will I add? Interest on loan. Don't add principal and all. Add interest on loan. Interest on loan is like borrowing cost. So whatever cost you have incurred, which you have not been able to claim under HP or Chapter 6A, you can add it to the cost of acquisition in order to increase your cost benefits. You do this properly, you will arrive at your COA. After COA, people, we move on to COI. Here again, I will ask a question. Did you do the improvement before 2001 or after 2001? If you did the improvement before 2001, simply ignore, because it is anyway part of the FMV of 2001, which we took above. You don't have to take it again. So please ignore. If you took it after 2001, I will allow it as an expense. But understand, this has to be an improvement cost. It cannot be a regular expenses. You cannot ask me expenses for whitewashing and all. I want proper improvement expense, like making an extra building, making an extra floor. All those kind of expenses can be treated as cost of improvement. If you have done everything properly, what you have in your hand is called CG. At this stage, I will ask, is it LTCG or STCG? If it is LTCG, then the period of holding is more than 24 months. If it is STCG, period of holding is less than 24 months. At this stage, when you have CG, people, you may end up claiming some exemptions. Which we have to discuss later on. But just to clarify, regarding a house property, there is only two exemptions that you can claim. One is house to house. Second is house to bonds. So if you are selling house and buying a house, what are you selling right now? House. So if you are selling this house and buying a new house, I will give you an exemption. For whatever money you paid for the new house. With a maximum limit of 10 crores. You cannot pay more than 10 crores for the house. Up to 10 crores, whatever you pay, I'll give you deduction. If you are not saying I want to buy a house, but you rather decide to buy some bonds like NHAI, RECL, we have PFC, IRFCs and all those things. If you buy those kind of bonds, I will give you a deduction of maximum 50 lakh rupees. You can buy two kinds of bonds in order to arrive at your taxable CG. These are the only two exemptions that you can claim, people. Other than that, no exemptions can be claimed against immobile property. Are we clear on this part? Yes. Can you help me from the format top to bottom? We started with full value of consideration. Answer is FMB or STV, whichever is lower compared to actual sale price, whichever is higher. Don't take this if the SDV is within 10% of consideration. If you have two SDVs, you can take the agreement if you receive advance by permissible modes. Once you have full value of consideration, reduce your transfer expenses, arrive at net consideration. In this net consideration, you can claim your cost of acquisition. If you have done it before 2001, answer is FMV or STV, whichever is lower, compared to cost price, whichever is higher. Here the FMV and STV is as on 2001. If it is after 2001, take it as it is. Take it as it is. Here I will do two adjustments. One, I will minus advance for feature before 2014. If you have any interest or no, you can add it. If you did not claim it under IFHP, if you did not claim it under IFHP, then you can take cost of improvement. Again, before 2001, ignore. After 2001, actual cost of improvement can be taken to arrive at your capital gains. You can claim two exemptions. One, selling house to buy a house, selling house to buy a bond. House to house gives an exemption of 10 crores. House to bonds give an exemption of 50 lakhs. You arrive at the taxable CG. You arrive at the taxable CG. At this stage, what will happen? I will say, what kind of CG do you have? Do you have a long-term CG or do you have a short-term CG? If you have a short-term CG, this is short-term others. Tax slab, matter over. Tax slab, matter over. But if you are going long-term CG, 112, income tax says, Nirmala ma'am is giving you special benefits. Nirmala ma'am is giving you special benefits. Nirmala ma'am says, this is the most easiest template that you have prepared. But in this template, you can make two modifications. Modification number one, the cost of acquisition can be indexed. Modification number two, the cost of improvement can also be indexed. You index your cost of acquisition, you index your cost of improvement, you will arrive at a lower CG. What will you arrive at? Lower CG, which means income tax is now coming and saying, I'll give you an option. Option number one, you follow the template above and you tax at the rate of 12.5%, which is current tax rate. Or you follow the old format, where the old format asks you to index. The old format asks you to index, but if you are indexing, I want 20%. I want 20%. In simple words, it is taxed at 12.5 with index, 12.5 without index, or 20 with index, whichever is lower. Please understand, this computation is only for tax purposes. Not for income purposes. Income will always be without index and same number as above, which means this has to only be shown at tax level, which means in exam, if you get a 4-mark question and the question says compute CG, ignore this, go up, simply do without index. If the question says compute CG and tax, then I'm doing index with 20 and non-index with 12.5, whichever is lower as the answer. So I gave you some examples. If you remember, people, we discussed and said in the first scenario, if I do as per old rules, what is old rules? 20 with index, I got 50 lakhs. If I did new rules, I got 75 lakhs. Income tax will say compute tax. I did 10 lakhs in the old case and 937 in the new case. Income tax will take whichever is. Answer is 937,500. A 937,500 is the tax you have to pay, but the gains will still be 75 only, because the gains is always as per new only. Yes or no? Yes. Come on. I took second case where my old gains is 50 lakhs, new gains is 1 crore 45 lakhs. Tax, when I checked, it was 10 lakhs and 18,12,500, which is 10 lakhs. So I have now paid tax as per old, but the gains will still remain as per new only. Third one, I said my gains is 5 lakhs negative in my old scenario and 4 lakhs positive in my new scenario. In my old scenario, my tax will become 0 and my gains will become 50,000 in my new scenario. Whichever is lower, tax will become 0, but gains will still remain 4 lakhs. Important question. People, the 5 lakh rupees which is showing in old, can I carry forward? No, because gains is as per new only and new gains is 4 lakhs. I don't have any loss to claim. And therefore we would have said loss carry forward is 0. Look at the fourth one. I'm saying my loss in the old is 5. My loss in the new is 2. People, tax on old will be 0. Tax on new will also be 0. Whichever is lower is also 0. Tell me, what is my loss to be carried forward? Which means one thing is fairly clear. The gains is always as per new only. The tax can be whichever is lower. And that's the computation for you. Yes. So be very mindful in exam when you get a question in MCQ. If you get a question in MCQ, one question will say compute capital gains. Answer is always new. Second question will say compute tax liability. Answer is whichever is lower. Are we clear? Yes. Now how to do the old computation, people? FVOC will remain same. Transfer expenses will remain same. Exemptions will also remain same. What will change is the cost of acquisition and cost of improvement. What do you want to do? You want to increase the cost. People, if you want to increase the cost, numerator should be higher than the denominator, and therefore indexation is nothing but taking the cost of acquisition, multiplying with the CII. What is CII? Cost inflation index of the year of transfer, meaning current year, divided by cost inflation index of the year of acquisition. You can look at the question itself and make that judgment, people. In the question itself, the new cost will be having higher value and the old cost will have lower value. So simply take new divided by old, or in simple words, year of transfer divided by year of purchase, When it is improvement, you will take year of transfer divided by year of improvement. Year of transfer divided by year of improvement. Are we clear on this part? Any doubts on this? Are we sure on this? Yes, this is what immobile property looks back to you. Yes, expect this to be a mandatory question in examination. You cannot let this one go. Yes, easy enough, people. Come on. Yes, you will have to do a separate indexation for cost of improvement as well. Agreed. Yes, we moved on forward to the last one, people, the one which has come in May 26. So expectation has come to 0. Expectation on this has come to 0 in September examination. The topic is called slum sale. Ideology is very simple. You are planning to sell your business itself. If you're planning to sell your business, the format remains the same. You start with FEOC. Same logic I will ask. My question will be very simple. People, if you get a question says sale value of the business is 10 lakhs. Market is asking 12 lakhs. Take 12 lakhs. In simple words, FMV or sale value, whichever is higher. At this stage, you can reduce your transfer expenses, nothing but brokerage and all that stuff. You will arrive at your net consideration. In this net consideration, you will now have to reduce your cost of acquisition. Understand, people, when it comes to business, you're selling a complete business itself. If you're selling a complete business itself, I am basically asking what is showing in your balance sheet. Which means I am looking for your net worth. Net worth matlab assets minus liabilities. Very, very important. I am not looking for assets minus liability as per accounts, because accounts is useless. I am looking for assets minus liability as per income tax. So if the question comes and tells you the asset worth as per accounts is 10 lakhs, but the asset worth as per income tax is only 7 lakhs, you will take 7 lakhs. If the question comes and says you accounts has booked a liability of 4 lakhs which is relating to personal nature. Can the liability be taken for income tax? No, because income tax says don't take any personal items. So that is the format, people. The format says when you start with FEOC, take the sale value or FMV, whichever is higher. Reduce your transfer expenses to arrive at net consideration. From here, you will reduce the net worth as per income tax. What does a net worth mean? If it is depreciable assets, take the WDV as per income tax. Any other assets, take the original cost. Original cost. Please do not take revalued figures. If the question comes and says the asset has been revalued to 50 lakhs, you will say forget the 50. Tell me what is the original cost. Don't take revaluation figures. If I have asset on which 3580, 3580 is likely business. In likely business, all assets would have been claimed 100% deduction. Upper cost is showing 0. People, I have an asset for scientific research. Cost will show 0. Then I have self-generated goodwill. Cost will show 0. Horrible answer happened in May 26. They put self-generated goodwill in the question. Answer should have been taken 0, but MCQ did not match itself. There was no answer because they wanted it to be taken apparently. Yes, they wanted you to take goodwill in the answer, but MCQ did not match. Finally, suggested answer comes and says, I made a mistake. None of the options is correct. 2 marks, grace given to you, but time wasted 30 minutes. Because you were not able to find an answer, 30 minutes time wasted in order to get. Be smart. Yes, ICI will make mistakes. Don't sit and audit the paper. You are there to write tax, forget audit, different paper to fail. Yes, not bothered about income tax. Income tax, you write the answer. What you got is the right answer. You did not get the answer. Maybe the question is and skip. Maybe the question is wrong and skip. Simple, straightforward. Don't play at it. Yes. Then I move to personal assets. Personal asset becomes nil. Other asset becomes book value. Liabilities, if I have outside liabilities, book value to be plus or minus, minus. Personal liabilities, ignore. People, can I take my equities? No. Can I sell my equities to someone? No. Can I sell my profits to someone? No. All my shareholder funds is nil. Shareholder funds will become nil. Arriving at my capital gains, capital gains will become long term, short term with a period of holding of 36 months. And that's how you get the answers. That's how you get the answers. Any doubts on this? Are we sure? Yes. So what happens, people? We take slump sale. Slump sale asks for a period of holding of 36 months. Full value of consideration is nothing but sale value or FMV, whichever is higher. Whatever cost you have will be nothing but the net worth as per income tax. Depreciable asset will be as per ITWDV. Personal assets will be ignored. Personal liabilities will be ignored. Scientific research assets, 0. Self-generated goodwill, 0. Purchased goodwill, original cost. Can you give depreciation? Don't give depreciation. Goodwill is not eligible for depreciation. Purchased land, original cost. Can you give depreciation? No. Will you take revaluation? No. Ignore those things and you find the answer accordingly. You find the answer accordingly. Are we clear? Yes. If you have done this whole capital gains properly, people, technically 4 marks is guaranteed. Yes. The one additional mark which can probably be given to you in examination is when they ask you exemptions. Now, if you remember, you remember. If you don't remember, skip. Yes, I would suggest to skip. 1 mark is not worth it enough, people. Too much data on this. But just to clarify on an exemption rule, there are 3 exemptions I want you to pay attention on. Exemption number 1 is when you sell a house to buy a house. Exemption number 2 is when you sell a house to buy a bond. And exemption number 3 is when you sell random things to buy a house. Yes, which means, understand, when you do immobile property, you will be using house to house. When you are selling immobile property, you are selling house to house. So selling house to house is immobile property. If you sell any other asset, then it is others to house. So for immovables, I am doing 54 and 54 EC, and for other assets, I am doing 54 F. Keep it simple to that extent. What is the provision? The provision says when you buy a house and sell a house, whatever money you pay for the new house can be claimed as exemption. Whatever money you pay for the house can be claimed as exemption, provided certain conditions are fulfilled. Condition number 1, the house which you buy should be in India. You should only buy one house. Unless your capital gains is up to 2 crores. If your capital gains is up to 2 crores, I will permit you to buy 2 houses once in your lifetime. What and all we discuss, people? Whatever money you pay can be claimed as exemption with 2 conditions. Houses should be in India. You can buy only 1 house or 2 houses once in a lifetime where your capital gains is up to 2 crores. Whatever money you are buying the house for should not exceed 10 crores. You cannot pay more than 10 crores. If you pay more than 10 crores, I will restrict to 10 crores. Whatever house you want to buy, you will have to buy the house 1 year before or 2 years after the date of sale. 1 year before or 2 years after the date of sale. If you are constructing, you start whenever you want, but please complete the construction within 3 years. You start whenever you want, but you complete the construction within 3 years of the date of sale. That is what the understanding is. Yes or no? That is what the regime is. Any doubts on this part? Yes. One very, very critical and important thing I want you to note, people, is that income tax says I'm giving you time to purchase house, which means I need some proof that you are planning to buy the house. And until you buy the house, please deposit the money in CGAS. Time limit is more important. Deposit the money by due date of ROI. Please deposit the money by due date of ROI. I want you to understand this because ICAI off late is making games with this. Question is very simple. People, I am planning to buy a house. I should have deposited the money in the house or in CGS. Yes. What did I do? I bought a house in March itself. Eligible, not eligible? Eligible. I bought a house in May. Eligible, not eligible? Eligible. I bought a house in July. Eligible, not eligible? Eligible. I bought a house in December. Not eligible. Because if you are buying it after return filing, you should have put the money in CGS. Which means if you tell me that you buy the house in December by putting money in CGS, I will say no problem. But if you say no, I will directly buy the house only, income tax will not give you exemption because on the date of return filing, you did not show a proof. Are we clear? Yes, once again people, imagine if I come and say, I want to buy a house in December for 4 lakhs. And therefore, in the month of July, I put 5 lakhs in CGS. I put 5 lakhs in CGS. Matlab in July, I put 5 lakh rupees, but in December, I only invested 4 lakhs. I only invested 4 lakhs. Tell me, in the current year, when I deposited 5 lakh rupees in CGAS, how much exemption can I claim? I can claim exemption for full 5 lakhs. I can claim exemption for full 5 lakhs because when you filed the return, income tax department thought you will invest 5 lakhs. You invested only 4 lakhs when next year, what will income tax department say? Next year I will tax 1 lakh. Next year I will tax 1 lakh. Nothing will happen this year. Matlab, whatever decision you make on return filing date is important. If you pay the money in the house by return filing, allowed. If you pay the money in CGS by return filing, allowed. Any activity happening after CGS, I don't care. I don't care. Are we clear on this part? Yes. Be very careful on how the understanding comes back, people. This is a very small area which ICA is playing off late for the last 2 attempts. Weird questions are coming on this. Be very smart and careful about this. Are we clear? Yes. So what did I tell you? You should buy the house 1 year before or 2 years after the date of purchase. But until such time, please deposit money in CGAS until the due date of return filing. Until the due date of return filing. Are we clear? Are we clear? Yes. On the right side, if I am planning to buy a bond, income taxes, certain bonds are listed to you. Bond number 1, NHI, National Highway Authority of India. RECL, Rural Electrification Corporation Limited of India. IRFC, Indian Railways Finance Corporation. PFC is Power Finance Corporation. HUDCO is Hindustan Urban Development and Corporation Organization. Yes, that is what the funds are. These are the bonds which you can buy. And here is an important part. People, when you're buying a bond, please buy the bond within 6 months from the date of transfer. 6 months from the rate of transfer. It is not financial year. It is 6 months from the rate of sale value itself. From the sale date, you have to buy it within 6 months. Can you put money in CGAS? No. Which means you have only one option, buy the bond. You buy the bond, I'll give you exemption. No buying of bond, no exemption for you, full stop. Yes, yes, maximum limit of 50 lakh rupees. Maximum limit of 50 lakh rupees is your purchasing bond value. Yes or no? Yes. So as in simple example, people, if I give you an example where I'm coming and saying sale consideration is 23 crores, cost to purchase value is 8 crores. I made a profit of 15 crores in current year. Income tax department came to me and said, my dear child, pay tax on 15 crores. I was like, no, sir, wait. I want to buy a new house. I bought a new house for 2 crores. People, exemption amount 2 crores because I put 2 crores. I bought a house for 5 crores. Exemption amount 5 crores. I put an investment of 10 crores. Exemption amount 10 crores. I put an investment of 15 crores. Income tax will say 10 crores is the limit. Cannot go more than that. Which means restrict to 10 crores. I invested full 23 crores. I will still give you 10 crores only. I'll still give you 10 crores only. On the right side, people, if I'm buying a bond, I invested 10 lakhs in the bond. Give me exemption of 10 lakhs. I invested 20 lakhs in the bond. You'll give me exemption of 20 lakhs. I invested 70 lakhs in the bond. You'll give me 50 lakhs. I invested 10 crores. You'll still give me 50 lakhs. I invested full 23 crores. You'll still give me 50 lakhs only. You'll still give me 50 lakhs only. Nothing to do whatsoever. Yes, yes. This leave me with the middle one, people. The middle one is called 54F. Something which will come very, very, very rarely in examination for you to keep in attention. Yes. When did this happen is income tax will come and say, this time you're not selling any house and all. You're selling some random assets. 90% of the cases, the random assets is jewelry. 90% of the cases, I say a random assumption is jewelry. What is income tax telling you here is that here you're planning to sell a jewelry and buy a house. I will give you the exemption. I will give you the exemption with some conditions. Condition number 1, this time I do not want you to invest the capital gains. This time I want you to invest the full net consideration itself. This time I don't want you to invest the capital gains. I want you to invest the full net consideration itself. If you invest anything less than net consideration, I will do cross multiplication. 2. Income tax says, my dear child, if you're buying a house, again the same rule applies. Investment amount should not cross 10 crores. Investment amount should not cross 10 crores. So the only difference between these two are, people, is that this one comes and says please invest your net consideration itself. Don't invest your capital gains. In the first two, it's very simple. What you paid is what you'll get. But in this one, what you paid should be equal to net consideration. Otherwise, no exemption for you. No exemption for you. Take the same example. Imagine if I sold for 23 crores, where I bought for 8 crores, making a profit of 15 crores. People here, income tax will say, please invest full 23 crores. Please invest full 23 crores. Then only I'll give you exemption. Otherwise, I'm not giving you exemption. Which means in the first example, when I invest on only 2 crores, what will income tax say? Beta, if you would have invested 23 crores, I would have given you 15 crores. You invested only 2 crores. I want cross multiplication. Yes. So what will I do? I will say 23 crores will give me 15 crores. You invested only 2 crores. How much exemption will I get? Cross multiply. 1.3 is what you'll get as exemption. Yes, by the same logic, if I invest 5 crores, I will end up cross multiplication with 3.26 crores. If I invest 10 crores, I will get 6.52 crores. Problem comes in the next two. Problem comes in the next two. People, I invested 15 crores. Income tax will say, beta, I have a restriction. Cannot allow you to invest more than 10 crores, which means even though you invested 15 crores, my assumption is 10 crores. My assumption is 10 crores, making your capital gains back at 6.25. Last one, people, you asked me to invest 23 crores. I invested 23 crores. Will you give me full exemption? Still no. I will say, even though you invested 23 crores, I can only give you 10 crores ka exemption, and therefore 6.52 is the number to be claimed. 6.52 is the number to be claimed. Are we clear? Are we clear? That is how the computation works, people. Focus on the middle computation only when a question comes on jewelry items. Only when the items come on jewelry items. First and the third will be focused on house property related questions. Yes. Hey, by the way, jewelry also shares, because shares also you can do. Selling shares, buying house is also middle one. Yes. So shares and jewelry are covered in middle. House is covered in 1 and 3. 1 and 3. Are we clear? Are we clear? Now there is a lock-in period, people, which income tax comes and confirms. For the house, there is a lock-in period of 3 years. For the bond, there is a lock-in period of 5 years. Income tax says during this period, please do not touch the asset. Please do not touch the asset, which means the new asset that you have, neither should you sell it, nor should you mortgage it, nor should you convert it. Keep it as a capital asset. Keep it as a capital asset. You sell it, I will tax you. You mortgage it, I will tax you. You convert it, I will tax you. I want the asset to be alive for the next 3 years or 5 years, where you end up doing some nonsense. What will I do? Whatever earlier exemption I gave you, I will reverse it in the year of sale. And I will tax you. Now, how to tax is the important part, people. The hint is very simple. If the sale asset and the original asset are the same, if the sale asset and original asset is the same, reverse it and add it to the new profit itself. Reverse it and add it to the new profit. I'll explain this once again. Yes, but if the assets are different, then the new profit will be taxed separately. The exemption will be taxed separately. Let me clarify this. Imagine an example where I'm saying I have a house and I sold and I bought a new house. People, the assets look the same. Here I had a capital gains of, let's say, 3 crores. I claimed a full exemption of 3 crores. Matlab this year I pay tax of 0. Now, new asset which I have, I'm going to sell this asset. I should have not sold for 3 years. But imagine I sold the asset. I sold the asset for 10 crores, where the cost was 7 crores. My profit came 3 crores. Now, 3 crores came from this house. But I have a reversal of the original one. I will reverse this original one and add it here itself, which means making the gain as 6 crores. Now, why does it matter? Because it may happen that the new asset is a short-term gain, which means this 3 crores will also become taxable as short-term gains, even though the original gains may have been long-term. Are we clear? Explaining this once again. Imagine if I have shares and I bought a house. What? I have a shares and I bought a house. People, my gains were 3 crores. My exemption was 3 crores. My profit became 0. New house I sold for 10 crores. Cost was 7 crores. Profit became 3 crores. Here income tax will say same asset, different asset. different asset. Do one thing, tax this 3 crores separately, tax this 3 crores separately, don't add them together because nature is different. Nature is different. Are we clear? Yes. Coming again, people, if I have a house and I buy a bond, same asset, different asset, different asset. I had a 3 crores, exemption claimed 50 lakhs, cannot claim more than that, no? Yes, yes, profit became 2.5 crores. Here I had a bond, I sold it for 10 crores, where I purchased it for 50 lakhs. I purchased it for 50 lakhs. I made a profit of 9.5 crores. Tell me people, are they both the same? Up, what will I do? 9.5 crores will be taxed separately and 50 lakhs will be taxed separately in the year of sale. In the year of sale, and that's what the answer is. Any doubts? Are we sure? Are we sure? Yes, this is what the understanding comes back to you. Clear with this? Clear with this? Clear with this? In the second example, shares order period of holding will be the original one. Yeah. Yes, it will be the period of holding of original. Are we clear? Are we clear? Are we clear? Now people, apart from this, there are 2 more exemptions which I have not discussed with you and I told you to remember it very simply. Yes, the 2 exemptions are, one where you're selling an agricultural land and buying an agricultural land. Second is where you're selling an industrial undertaking and buying an industrial undertaking. Yes, these kind of exemptions you don't have to play hard. You can look at the question and figure it out. Because the question will say, I sold my land. You have capital gains. Then the question will say, you bought a land. Why? Because you want exemption. Which means people, in a capital gains question, there is no reason for someone to buy a land unless you want an exemption. Similarly, you sold an industrial undertaking. You got capital gains. You again bought an industrial undertaking. Why? You want exemption. And therefore, those 2 cases, you can simply use your brains. If you get a random question in exam which says, you are selling something and buying the same thing. You are looking for an exemption under section 54B or 54D. Under section 54B and 54D, I will give you a hint. Use the same example as 54 series. Use the same example as 54 series. Matlab 54 was house to house. Up land to land is also same. Undertaking to undertaking is also same. All the conversation will remain as it is. All the conversation will remain as it is. One change alone. House has a restriction of 10 crores. Other assets don't have restrictions. Other assets don't have restrictions. So I gave you a very small hint, people. I wrote and saying, if the capital gain states that the assessee has invested in any new asset, follow the 54 rules and exempt the investment amount except for the 10 crores restriction. Except for the 10 crores restriction. So for example, I say I have sold a rural land and I bought a rural land. Will you give me exemption? Will you give me exemption? No. Why? Because rural land is anyway exempt. I am selling an urban land and I am buying an urban land. Will you give me exemption? Yes. I am selling an urban land and buying a rural land. Will you give me exemption? Yes. Same land only. Location change. Land is the same. Land is the same. Yes or no? Yes or no? People, I sold an undertaking and I bought an undertaking. Will you give me exemption? Yes. That is what the answer is. That is what the answer is. Any doubts on the statement? That is how exemption series works, people. Clear? Yes. So understanding exemption series, I have house to house, house to bonds, other assets to house, house to house, house to bonds, other assets to house restriction of 10 crores, house to bond restriction of 50 lakhs, other assets to house, 10 crores is investment amount. 10 crores is investment maximum, not the exemption, maximum investment amount. Maximum investment amount. If you are going to buy a house, please buy a house in India. Maximum only 1 house unless your CG is up to 2 crores, when you can claim 2 houses once in your lifetime. If you want to buy a house, buy it 1 year before, 2 years after, construct within 3 years. Before doing all that, invest money in CGAS, buy due date of ROI. If you are buying a bond, buy it within 6 months. No CGAS allowed. No CGAS allowed is the conversation. In house to house, invest the capital gains itself. In house to bonds, invest the capital gains itself. But other assets to house, invest net consideration amount. If not, get proportionate exemptions. Get proportionate exemptions. Whatever asset you have, please hold it for at least 3 years in house, 5 years in bonds. If you decide to sell it before that, same asset, reverse exemption in the same league. Different asset, tax the exemption separately, tax the new gains separately, and conclude the answer accordingly. Apart from this, you may have other assets, buying a land to land, exemption allowed. Buying an undertaking to undertaking, exemption allowed. Same rules as 54 series. Do not allow 10 crores ka limit. Do not allow 10 crores ka limit. Any doubts on this part? Are we clear? Are we clear? Yes, this is how your capital gains looks like, people. But there is one small topic in capital gains which I told you we separately discussed it from the material itself. Yes, items which I spoke about. One, if you remember, was your amalgamation and demerger. Yes, where I told you amalgamation and demerger is not important for exam because technically amalgamation and demerger is fully exempt. Which means one company will give me assets, other company will also give me assets. For me, this is not a capital gain. Cost for me is cost of them. Period of holding of me is period of holding of them. People in that company, there was a shareholder. He now became shareholder of my company, which means he sold that company shares and got my company shares. Exchange happened. Cost of acquisition of my company will be cost of acquisition of that company. POH for my company will be POH of that company, and that's how the answer will come to you. Clear? Yes. Coming to demerger models, I told you in demerger models, again, there is no capital gains. But now what is happening? One company will split and become two companies. One company will split and become two companies. Look carefully. People, the new company which came into existence would have taken assets from the old company. Will you tax on it? No. So therefore, the cost of acquisition for that is cost of old company. Period of holding of that is period of holding of old company. Now, I was a shareholder in the main company. I will now receive two shares. One of the old company and one of the new company. People, cost of my old company shares will now get split. Proportionately to the new company some part and to the old company some part. More at CA final level, not at CA inter respective, but still for you to keep in mind in case the question asks on an exemption level. Yes. Second and the most important thing that we discussed yesterday also, people, is something called buyback rules, where I discussed in buyback rules that if you have any kind of buyback happening, whatever money you get in the buyback will be taxable under IFOS, and whatever cost you paid from your side will be treated as CG loss. Are we clear? Yes, careful on that. Yes, the last thing which is pending is what is called as liquidation proceeds. Income tax says, if at all you receive any money under liquidation, who are you? Shareholder. If you are a shareholder receiving any money from the company on liquidation, ask yourself a simple question. I got money in my hand. Imagine 10 lakhs I got in my hand. Income tax will say, first of all, go back to the company and ask the company how much profit does the company have. If the company says I have 5 lakhs ka profit, then I will say, sir, in that case, the 10 lakhs which you gave me is not for my shares. In that 10 lakhs, 5 lakhs you gave me for my profits, which is nothing but dividends. And therefore, income tax will say, take the 10 lakh rupees. In that 5 lakh rupees will become dividends for you. Tax under IFOS. The balance 5 lakhs was given to you for your shares. To tax your capital gains accordingly. Are we clear on this? Yes. As a simple example, imagine if I come and tell, Rahul has gone to a company and has bought an asset worth 3 crores. Company has gone into liquidation, and under liquidation, Rahul got 7 crores. I opened up the balance sheet of the company. The balance sheet of the company says they have 1 crore ka profit. What will I say? Rahul got 7 crores. 7 crores will be split into 2. 1 crore is my profit, which means tax as dividends, IFOS. 6 crores which I got was against my shares. 6 crores I got is against my shares. Matlab my full value of consideration is 6 crores. I paid from my pocket 3 crores. My profit becoming 3 crores, and this will be taxable under CG. Are we clear on this part? Yes. The only thing I wanted to notice, people, the 1 crore profit is assumed to be my 1 crore profit. Who am I? Shareholder. Which means if the company has 10 crores profit, not 10 crores is for me, because in that company there will be multiple shareholders, and therefore the profit which I am showing here is not the profit of the company, it's the profit of Rahul in the company. Which means if Rahul has 10% holding, then the profit is 10%. In simple example, if the question says 10 crores is the profit of the company and Rahul was holding 10%, then Rahul's profit is 1 crore. That is what I can tax. You cannot tax more than 1 crore people, because then you are taxing someone else's profit in your name, which is wrong. Which is wrong, and that's how the understanding comes back to you. Any doubts on this part? Are we clear? Yes, this is what CG looks like, people. This is how CG works back to you. So if I have to remember the format, we discussed what is definition of capital asset. We classified the capital asset. We discussed what are the transactions which are not transfer. And when a transaction is not transfer, cost of the new owner is cost of old owner. Period of holding of new owner is period of holding of old owner, unless you have paid tax under IFOS. Yes, then we discuss what are the exceptions to the rule, where you will not tax it right now, you'll tax it in the future when you receive the money. We discussed insurance compensation, compulsory acquisition, converting capital asset into stock in trade. Then we discussed special scenarios of unlisted shares, where I told you unlisted shares can be my own share, can be bonus shares, can be rights which I purchased, can be rights which I sold, can be rights which someone else purchased. Then we did listed securities, where we did cost of acquisition as FMV of 2018 or sale value, whichever is lower, compared with cost value, whichever is higher. People have always given the format like this only. It is always lower and then higher. Simple. Yes, it's always lower and higher. It's never going to be higher and lower. It's always lower and then higher. Yenna computation indalo, it is always lower and higher. Yes, then we did immobile property computation. We told maximum house purchase limit is 10 crores, maximum bond purchase limit is 50 lakhs. That is what the computation is. If you want advance forfeiture should be part of capital gains before 2014 is what we take. If you don't want SDV to be taken within 110% of consideration value, if you want agreement SDV to be taken, advance from permissible modes, cost of improvement before 2001 is ignored, cost of acquisition before 2001, FMB or STV, whichever is lower, compared to actual cost, whichever is higher, to be taken. Then we discuss what is called slump sale discussion. Slump sale means that it is again FVOC or FMB, whichever is higher. When you're taking cost, please take the net worth of the company as per income tax. If you have depreciable assets, any gains from depreciable will always be short-term capital gains and short-term capital loss. Then we discussed what is buyback. Sale value of the buyback is always IFOS. Cost value of buyback is always CG loss. It's always CG loss. When you have liquidation, ask how much money you got. Some part of it goes to dividends, other part goes to CG for computation perspective. If you want exemptions, exemptions are house to house, house to bonds, others to house, land to land, undertaking to undertaking. That is what the limits are. In all the cases, you have to invest capital gains only, except for 54F. Others to house, may you have to invest net considerations. You have to invest net considerations. Bond, may you can invest 50 lakhs. Bond, may you can invest 50 lakhs. House, may you can invest 10 crores. Land to land, no limits. Undertaking to undertaking, no limits. When you're investing, please invest before due date of return filing into CGAS, and then we moved on forward to understanding the balance things. Any doubts on this part? Are we clear? CG works well. Yes, understand CG, people. The only thing which you have to do in CG is to look at the table and ask yourself which data is relevant, which data should I skip. If you can figure it out, you only need 4 numbers for finding any CG answer. You only need 4 numbers for finding any CG answer. Are we clear? Yes, keep that thought in mind. All right. People, look at the questions which we have in capital gains. I have prepared 4 questions, different subdivisions for you. One of the important questions will be question number 3 or 4, I guess. We'll check on that later. But let's give you the individual adjustments. The adjustments which ICI gave in the past, or probably from your study material which I have. Let's look at these adjustments. Let's understand which ones are important and which ones are not important. Yes, let's figure it out. Question says, I have Vaibhav who had sculptures in the form of capital assets, and this was acquired in Jan 2015. Tell me, people, I have acquired sculptures. Is it a capital asset? Yes, which means I'm going to note down sculptures. Sculptures is noted down as a capital asset. Full stop. Yes, this was acquired in Jan 2015. This is my date of acquisition. So this is my date of acquisition. I'm writing it as DOA. Yes, and this was acquired for 1,80,000. A 1,80,000 matlab this is my, very good. This is the purchase price, cost of acquisition. Yes. Next one says in FY 23-24. Look and tell me, is it your previous year or some past year? Past year. He started the sculpture business and converted this capital asset into stock in trade for his business. I now took my capital asset and converted to stock in trade. I told you the simple way to remember this is assume that you have sold in the market. You have sold in the market. Question says the fair market value on the time of conversion was 3,50,000. This is the price at which I will sell in the market. What am I selling? Capital asset or stock in trade? I'm selling capital asset. Initially I had sculpture, then it became stock in trade. So first I'm selling a capital asset. So sale value is 3,50,000. So can I confirm to you FVOC is given as 3.5 lakhs. Cost of acquisition is confirmed as 1.8 lakhs. But before you write 1.8 lakhs, hold. Don't write that, people. Let's read this further. Let's understand what is pending. Yes. Question says, subsequently, he sold the stock in trade in June 2025 for 5 lakh rupees. Is this your previous year? Is this your previous year? Yes. This is my previous year. And 5 lakh rupees is the sale value for stock in trade. This is not my full value of consideration. This is my stock in trade. So 3,50,000 becomes my full value of consideration. 5 lakhs become my sale value. 5 lakh becomes my sale value. Agreed, not agreed? Yes. Come on. No entry has been made in the books for conversion and sale thereof for the converted sculptures. People, we have done a conversion, and conversion says you can only tax it in the year of sale of stock in trade. When did you sell the stock in trade? 2025. So which means it will be taxable in 2025. But computation will happen as per 23, 24. Now people, this is something which will not be tested at your exams, but I'm clarifying this to you. Because the sale happened in 23, 24. This happened technically as per the old laws. It didn't happen as per the new laws. Recently, if you remember, I told you in the class, indexation was scrapped away. And the scrap date was 23rd July 24. 23rd July 24. Did this happen before 23rd July or after 23rd July? It happened before 23rd July because it says 23, 24. Yes, which means for this old laws will apply. And just to clarify, what is the old laws? Nothing. In the past, it was indexation. In the past, it was indexation. So if you remember, I told you there is something called 12.5 without index and 20 with index. Before 23rd July, it was 20 with index. And therefore, we have to apply indexation on this. You have to apply indexation on this. Now, do you expect this question in exam? No, don't worry about it. This is a CA final question in examination. ICA is not testing you on these things, but because of reference point, I'm giving it out to you. So tell me people, will I do cost of acquisition or index cost of acquisition? So I am going to write this as indexed cost of acquisition. Help me out. Index cost of acquisition, simple trick I told you. Take the number and multiply with the higher number divided by the lower number. Yes, looking at the numbers, I have 240, 348 and 376. Hey, notice 376 is of current year. Capital gains happened in 2023-24. Can I take this year's indexation? No, I will only take that year's indexation. So 376 is not relevant, which means now I have two numbers. One is 348, one is 240. I should take 348 on the numerator and 240 on the denominator. Come on. So it is, what is the number? It is 1.8 lakhs multiplied with 348 divided by 240. Can you give me the cost of acquisition? 2,61,000. 2,61,000. Hey, this is my new cost, giving me my profit of 89,000. Check and tell me, did you understand? Yes. Question, people. I need to convert this into long term or short term. Long term, short term. Forget. Tell me the period of holding. It is 2015 to 2023. Yes, it is 2015 to 2023, or I think it's Jan 15, right? So it's 2014 to 2023. I'm looking only on the start years. 14, 15 to 23, 24. People, looks like more than 24 months. Period of holding becomes LTCG. Becomes LTCG. Yes or no? Hey, but this LTCG, should I pay tax in 23, 24? I should pay tax in. Very good. So you will say 89,000 tax in 2025. Tax in 2025. See if you understood. Yes, format clear? Yes, don't expect these questions in exam, people. Don't be worried about it, but yes, just giving it out to you. Clear? Yes, come on. Question number 2 says, Shobit has sold a house on 30th March 2023. People, this is some past year, and you've sold the house also, which means not relevant to your question. Yes, I don't bother. It says deposited the long-term capital gains of 25 lakhs in capital gains account scheme on the due date of return filing. That year I made a sale. That year I wanted to buy a house. I decided to deposit in CGS. Did I do it before due date? Yes, which means all conditions have been satisfied. Upon that year, CG would have been exempt. That year, CG would have been exempt. Agreed? Yes, come on. It says on 1st July 25. A. Is this your previous year? Yes, this is my previous year. He sold another property in which he resided for 1 CR. Hey, this is my FBOC. He sold for 1 crore. For 1 crore, matlab this is my FBOC. He earned the long-term capital gains without indexation benefit of 50 lakhs. Hey, 50 lakhs is my cost or 50 lakhs is my gains? Apo, do I need my full value of consideration? No, I don't need my full value of consideration. How is that relevant? I already have my gains. So I can take 50 lakhs as my CG value. 50 lakhs as my CG value. Yes or no? Come on. It says on 5th January 26. Hey, is it your previous year or next previous year? Your previous year. It says he withdrew the whole amount of capital gains account. Hey, how much is there in CGS? 25 lakhs and invested 60 lakhs on construction of a house in Mumbai. People, how much did I have in CGS? 25 lakhs. But I invested 60 lakhs. How much extra I invested? 35 lakhs. Where is this 35 coming from? The 35 is coming from the second house. Apo, for the second house, can I claim an exemption? Yes. People, I sold a house and I'm buying a house. Can I claim exemption? Yes. How much money? 35 lakhs. Why 35? Because 25 I already exempted there. Can I exempt once again? No. I can only exempt the differential. Differential is 35 lakhs. Yes or no? Yes or no? So what am I going to say? My long-term capital gain is confirmed as 50 lakhs. In that, I am going to claim an exemption of 35 lakhs. Once again, people, just to clarify, 35 lakhs is because I put money of 60 lakhs in the account. In that 60 lakhs, 25 was already exempted. Apo remaining exemption is 35 lakhs and that's my exemption amount. So I have 60 lakhs minus 25 lakhs of exemption claimed earlier, amount becoming 35 lakhs of exemption. Amount becoming 35 lakhs of exemption. He withdrew the whole amount, constructed a property. Construction has been completed. Index cost of acquisition of the property is 60 lakhs. I don't care about the cost and all. I am bothered how much you did from the old house. How much you did from the old house. Old house I made a profit of 50 lakhs. 35 I claimed exemption. Taxable amount is 15 lakhs. Which gains? LTCG. Because question itself confirmed to you under section. Very good. See if you understood. CGS. You can keep it how much ever you want as long as you can buy the house within time. You have a time limit of the house. 1 year before or 2 years after, nahi to 3 years construction. This has the construction, which means time limit is 3 years. When did I put the money in CGS? 23. When did I complete construction? 26. Is it within 3 years? CGS is fine. If you have money in CGS and you have not put the money within 3 years into the house, the unutilized amount will become taxable in the year of violation. The year of violation will be the third year. Whatever original exemption was. It would have become taxable, yes. People, are we clear on this? You put whatever amount you want, but if my capital gains itself is 25 lakhs, I cannot put more than 25. How does it matter? If I want an exemption of 25, I should put 25. If I want an exemption of 1 crore, I will put. If I want an exemption of 50 crores, I will put 10 crores. Very good, because maximum cutoff. People, are we clear? Shh, stop talking. Come on. Any doubts? Good to go. Come on. It says, a plot of land was used by Rajesh for industrial undertaking for the last 10 years and was compulsorily acquired by the government. I have a compulsory acquisition coming in. People, the compulsory acquisition happened in 2024. It happened in 2024. Apo, did it happen in your previous year or some past year? Past year. But you cannot tax it in that year. You will tax it in the year in which you receive the first installment. Very good. It says compensation of 15 lakhs was received on 27th January 26. Is it your previous year? Yes. So tell me, 15 lakhs is my full value of consideration. 15 lakhs is my full value of consideration. Yes. The sale date is 27 January 26. True or false? False. 27 January is my receipt date. My sale date is 7th October. My sale date is 7th October. That is not going to change. That is not going to change. Next question says, the property was acquired by him in 2007 for 2,50,000. This becomes his, very good, it becomes his cost of acquisition. Yes, the question says, he purchased another plot of land of his industrial undertaking in 15th April for 7 lakhs. Hey, I was selling an industrial. Why am I purchasing another one? I want an exemption. I want an exemption. People, to claim exemption, I first need to calculate gains. Can I calculate gains? Come on. Full value of consideration is 15 lakhs. Cost of acquisition is 2.5 lakhs. What is my gain? 12.5 lakhs. Now people, I am not going to index. I'll tell you why. I told you indexation only cause after 23rd July 24. This is 7th October 24. This is 7th October 24, which is after the amendment of the law, and therefore indexation is not applicable in this case. Now, do you have to remember the date? No, don't remember the date. Not required. Yes, it's not part of your syllabus. It's not important. More to discuss at CA final level. Completely fine. I'm only trying to give you the understanding on how these topics work. Are we clear? Yes. Now, what is your capital gains? 12.5. How much did I buy the new one for? 7 lakhs. Hey, I would have bought 12.5, fine enough. But I bought 7.5. Can I claim 12? No, I can only claim what I invested. I invested 7.5 lakhs, so I can claim, sorry, I invested only 7 lakhs, so I can claim 7 lakhs ka exemption, amount becoming 5.5 lakhs. Because indexation rules were abolished from 23rd July 24. This is 17th October, so it is after 23rd July. Acquiring is not important. Indexation is, if you want to apply old rules, you should have sold before 23rd July. The rule you are talking about is the case where I am computing tax. Is the question asking for tax or capital gains? Asking for capital gains. If it was tax, I would have done the logic you told. If the question would have asked tax on capital gains, I would have done old rules, new rules, and I would have got the answer. Valid enough. Clear? Clear? No, I'm good. I'm good. Are we clear? Are we clear? Are we clear? Yes. Now, listen. People, this 5.5 was computed when? 24. Very good. But taxable in 25, 26. Taxable in 25, 26. So by the same logic, I will say tax in 25, 26. Tax in 25, 26. Are we clear? Yes. There is one other line, people. The line says, the government also paid 1,05,000 as interest on compensation on 28th February 26. Hey, interest is taxable under, very good. I am going to tax this under IFOS in the year of receipt. When did I receive? Current year only. Yes. So current year I have received it. Matlab I can tax it under the head IFOS maximum 50%. 50%. Both interest are covered. All interest on compensation is covered. Number is number is 52,500. Check and see if you understood. Yes, multiple elements, people. But if you do it very slowly and patiently, you can get the right answer always. Yes, do it properly. That's it. It says advance of 4 lakhs was received from one Raj on 1st May 25 against sale of urban agricultural land for 11 lakh rupees, which was used by his father for agricultural purposes for the last 2 years and 8 months. However, due to non-payment of the amount, the advance was forfeited. People, tell me, how much did I receive? 4 lakhs. Hey, did the sale go through? Did not go through? If the sale never went through, is the 11 lakhs relevant? No, apo ignore 11 lakhs, not important. Not important. Regarding the 4 lakhs, the 4 lakhs is after 2014, tax under, very simple, tax under IFOS. Tax under IFOS. Clear? Yes, come on. It says the same land was then subsequently sold to Mr. Jain on 1st December 25 for 10,50,000. If 1st December 25 is previous year, the land was purchased in 2006 for 1,50,000. If facts are given to me, 10th December, 1st December is my date of transfer. Is my date of transfer. 10,50,000 is my full value of consideration. The land was purchased in 2006. Date of purchase 1,50,000 is my cost of acquisition. Is my cost of acquisition. Mr. Roshan purchased a new agricultural land on 10th March for 9,50,000. I am selling a land, buying a land. Exemption granted. Exemption granted. Yes. So I am selling for you have. What are you selling? Urban land. Is it taxable? Yes. Rural land purchase is the same nature, still fine. If you would have sold rural land, that is exempt. You're selling urban land, which was taxable. Against you that you bought a rural land, which is a different location, but the asset is the same, and therefore exemption is available. Exemption is available. Full value of consideration is 10,50. Cost of acquisition is 150. Capital gain hits 9 lakhs. I purchased the 950. Can I claim 950? I can only claim 9 lakhs limit, and therefore amount was exempt. It's called 54B if you want. Not important, I would say. Clear? Yes, yes. Now point is, people, this was an adjustment given in a compulsory question for 1 mark. A 14 mark compulsory question gives you this kind of nonsense and they expect you to answer the question. Answer was straightforward. Ignore. Answer was straightforward. Ignore. You just have to write ignore. Yes, the reason you have to write ignore is because you have to read the dates carefully. You have to read the dates carefully. Hi, na? Yes. So what happens? Second part comes and says you sold the land. Price 1050. That is your sale value. Purchased it for 150. That is your purchase cost. How much profit did you make? 9 lakhs. You made a profit of 9 lakhs. Now what did you do? After you sold the land, you also bought a new land. Price 950. You are selling a land, buying a new land. Same property. Therefore, you will get an exemption. How much did you purchase for? How much are you asking for? 9 lakhs only. Can I give you 950 exemption? No. Therefore, I give you exemption of 9 lakhs. Make the taxable 0. If you put 950, what will happen? You go negative. You are asking department refund. Can you ask refund? Not allowed. People, are we clear? Are we clear? Are we clear? Are we clear? Come on. It says he sold a large printing machine. He sold a large printing machine. The only asset in the block. I have a trigger now. I have an only asset in the block and that asset has been sold off. CG says, boss, you have to do CG in 2 cases. Sale value is more than cost, or all assets are sold off. All assets are sold off. I have sold off, which was originally purchased for 3 lakhs on 2nd October 23 and then depreciated at 15%. Here is where you have to understand. People, when I do depreciable asset, is my cost of acquisition original cost or is it WDV? It is WDV because depreciation was already charged off to P&L. Can you take double benefits? No, which means I have to now compute WDV. I have to now compute WDV. Help me out. My WDV is going to be, this is 3 lakhs. This is 3 lakhs minus 15% only. 2nd October is Gandhi Jayanti, eligible for full depreciation. Yes, but here you have to ask a question. Here you have to ask a question. Can I claim additional or not claim additional? Can I claim additional, not claim additional? We did this adjustment in the past, some adjustments ago. PGBP, I showed you this adjustment. Printing is a manufacturing activity. Publishing and printing is a manufacturing activity, which is what I told you was a CA final topic, but was asked in CA Inter. What is enter? This is a manufacturing activity, which means in that year, when you bought the machinery, you would have charged additional depreciation. So it is minus 35%. It is minus 35%. Hold and check if you understood. Yes, careful people, it is not 30%, it's not 15%, it is 35%, including additional depreciation. Clear? Now tell me people, if I would have charged 35%, I would have got WDV as on 1st April 24. I am in 1st April 25. I need one more year. So another 15%. Another 15%. 165,750. Is this step clear? Now do I have my cost? Yes, people, can I find my data? It says FVOC is very good. Cost of acquisition is 165,750, giving me a gains of 34,250. And if you remember, depreciable will always be STCG. Depreciation will always be STCG. Are we clear on this? A horrible question which was asked in Jan 26 people. I'll be very candid to you. Horrible question this was. Very, very confusing. Problem was not even this. Problem was that this question said you had to compute tax liability under both the regimes. That's the mistake. The mistake what you made is question said compute tax liability for the current year under both the regimes. It never told what happened in that year, which means ICA made an assumption in that year he was still following old regime, and therefore this additional depreciation was still to be granted even though current year you go new regime. Clarifying once again, question said current year they want you to change regime, which means assumption was that year old regime was being followed, and therefore that year additional depreciation was eligible. It at no point of time confirmed to you. That you were in old regime in the past. People, it could have been a possibility that in 23 also I am in new regime, current year also I am in new regime, next year also I am in new regime. Possible, which means in that case you could have assumed that way. But ICA said no, current year only I am asking. No, so matlab assume past years were old regime. Yes, horrible understanding. First of all, you did not even know that publishing should give additional. When you know that only you can figure this out, no? That itself was a problem altogether, people. Horrible question which came in examination. Nevertheless. Clear? Yes. Question said you are computing tax liability under both the regimes and current year. Which means current year they asked you to check both ATR and DTR. Probably. Clear? Yes. Come on. It says in November 25, Alpha Limited decided to buy back 50% of its shares at 250 per share. Alpha Limited bought back proportionate shares of Aryan. In May 2026, the fair market value of the equity share was 190 rupees. The fair market value was 190 rupees. Now people, there is a problem here. Understand, first of all, they have bought back the share and bought back shares. Whichever is, hey, see, bought back says buyback price will go under IFOS. Buyback price will go under IFOS. The problem is very simple. They have bought back at 250. I don't know the number of shares. Let's make an assumption. I might have missed it out from my side. Assuming 100 shares. Now tell me people, 100 shares has been bought back by Alpha Limited. Money which I got. Money which I got is 250 into 100. Which is 25,000. Will be taxable as, very good, will be taxable as IFOS. 100 shares is assumed 50%. I am assuming the 100% is 50% because the question says Alpha Limited bought back proportionate shares. So I am assuming that proportionate is 100 shares. Yes, so 25,000 is the sale value which is now gone and taxed under OS. Now the problem comes on cost. People, I have not been given the cost. But one thing has been confirmed to me that my FMV on 2018 is 190. If you remember, listed shares ke liye, FMV or sale value, whichever is lower, 190 or 250, whichever is lower. Cost is not given. Assume ignore. Answer is 190, which means my new cost is 190. If my new cost is 190, that cost will now become my CG loss. Long term, short term. Long term, short term. Obviously long term. You bought it in 2018, people. If you bought it in 2018, this is long term loss, and therefore it is LTCL of 190,000. Yes. So check what happened. It says Mr. Aryan has 100 shares. Mr. Aryan has 100 shares, and this 100 shares has been decided by Mr. Aryan to be bought back by the company. At what price? 250, which means Aryan got 250 rupees in hand for one share. Totally he got 25,000. Whenever a buyback takes place, it is taxable under IFOS. Second, Aryan from his pocket would have paid something. I don't know the number. Ignore it off. But I know that he purchased it before 2018. If he purchased it before 2018, listed shares के लिए the formula is FMV or sale value, whichever is lower. 190 versus 250, whichever is lower. Answer becomes 190. Purchase price is not given, therefore ignore step. Therefore answer is 190. Cost of acquisition becomes 190, and this 190 is now my capital loss. Are we clear? Yes. This was also from Jan 26, people. Horrible question because they forgot to give the cost of acquisition itself. Number of shares I missed. They forgot to give the cost of acquisition itself. And then a note comes on the bottom. The note comes and says, since cost of acquisition has not been given, it is assumed that FMV and cost is the same. Alternatively, it can also be assumed that the cost is FVOC. In which case the capital gains will become. How will you have a cost of 0 unless it is bonus? Even if you take 0, the answer will not change because whichever is higher, no? So 190 versus 0 will give. Whichever is higher. How 0? That will only give you the new cost. Your sale value remains the same, no? How is there a sale? Sale is 0. What did I tell you? Any cost that you get will automatically become the loss. What is your cost is the question. Cost formula is FMV versus sale value, whichever is lower. 190 versus 250, whichever is lower. Answer is 190 versus cost, whichever is higher. Assume a cost 100. If I assume 100, it is 190 versus 100, whichever is higher. Answer is 190. What is this 190? My new cost, and the new cost will become direct loss. Sale value is always 0 because we moved everything to IFOS, no? Therefore, everything is a loss. Clear? Yes. Careful. Come on. It says, Aryan is a resident individual, aged 58 years, selling unlisted shares of a private company. I have a trigger. Because unlisted shares, there is a problem. When you sell, you cannot sell less than FMV. It cannot sell less than FMV. I have sold it for 10 lakh rupees. Shares were brought on 2015 for 2 lakh rupees. People, 10 lakh is my FVOC. 2 lakh is my cost of acquisition. Aryan has paid 2,000 as brokerage also. Transfer cost. Aryan then deposited 5 lakh rupees in CGAS scheme. People, what did I sell? Shares. If I am selling shares, the only thing I can buy is house property. In which case, I should have invested. The full consideration value. Selling for a share and buying a house requires the full consideration sale. Help me out. My full value of consideration is 10 lakhs. My transfer expenses, which means 998, is my net consideration. What is my cost of acquisition? Giving me a CG of 7,98,000. Yes or no? Yes. Now look carefully. I am selling shares, buying a house. Although it's not given a house, when you're putting in CGS, obviously it is for house only. And house requires you to invest the complete net consideration. Matlab, you should have invested 998. You should have invested 998 net consideration. You only invested 5 lakh rupees. Yes. So what will I say? I will say, if you had invested 998, I would have given you exemption of 798. If you would have invested 998, I would have given you exemption of 798. You only ended up investing 5 lakhs. Tell me how much exemption can I give you?
4 lakhs.
With decimals, is it? Let's assume 4 lakhs round off. It's okay. 200 rupees round off is fine. Yes, which means now I have an exemption. I have an exemption of rupees 4 lakhs, giving me a taxable gains of 3,98,000. Tell me long term, short term. Obviously, because 2015 purchase, 2025 sale, with an answer accordingly. Yes. Now I want you to notice the next para carefully. The next para says, on 30th April 27, on 30th April 27, this a your previous year, next previous year, next to previous year, he withdrew 4,50,000 from this and purchased a residential property for 4,50,000. For 4,50,000. People, when I put in CGS, I put 5 lakhs. Next year I withdrew and took only 4,50,000. Put only 4,50,000. Do you see a violation? Do you see the violation in current year? No. Up, will that answer change? No, the answer will not change. Now I will ask for a violation in next year. But to look for next year also, I will check for the time limits once. Tell me people, when did I sell? Date 17th May 25. People, I have to buy the new house by 17th May 27. I have to buy the house within 17th May 27. When did I withdraw? 30th April, which means after 30th April, I have still 17 days. I can make wonders in 17 days. It can happen that the balance 50,000 can be invested of. No, even if May 1, I have still 17 May, no? Yes, which means for the next 16 days also, I still have something pending. It can be possible that I may buy the house for an additional 50,000. For an additional, it may be possible. This house can have additional expenses to incur. So at this stage, can you confirm any statement? No. What is your statement here? Your statement is 5 lakhs worth of exemption granted in current year. The 4,50,000 which was withdrawn is eligible for exemption. The remaining 50 also continues to be exempt until May 17th. Until May 17th. If after May 17th also the money was unutilized, the 50,000 will become taxable on May 17th. The balance 50 will get taxable on May 17th, which means nothing to do with your exam. That is only happening in the next year. Forget information. Forget information. Are we clear? Yes. People, listen. Before I proceed forward, I know this question is coming again and again, so I'm clarifying this once again. For your exams, indexation is not there. For your exams, indexation is not there. It will only come in one question. The question will say compute tax liability of capital gains on an immovable property. Only when you see that line will you do indexations. Other than that, indexation is only applicable when the sale happened before 23rd July 24. Don't get confused with indexation, people. Assume it is not there in your syllabus. Forget it off. Yes, look at this question. Sale happened on 25. Will you apply indexations? Don't apply indexations. Not important at all. Keep it simple. Your syllabus has become easier. Keep it easy only. Don't overcomplicate it for yourself. Are we clear? Yes. I can put it this way to you. Indexation, probably if you wanted to check also, will only check on those cases where exception applies. Exception of delaying tax. Exception of delaying tax. For example, insurance, conversion, compulsory acquisition. These are the only 3 places I might have to check indexation. Apart from that, sale happening in current year is always no index. Doesn't matter. If it is acquired before 23rd July also, index is only applied during tax liability, not at computational level. Which means if the question says compute capital gains, assume index is not there. Assume index is not there. Can we keep it simple for ourselves? Please keep it simple for you. On those 3 cases, you may have to check for 23rd July 24, but that is expected at CA final, not at CA inter. Yes, come on. Let's look at the last. Question says, one of the horrible questions from May 26. Horrible question of May 26, people. I think I don't remember if I showed it to you. I showed it to another batch probably. Yes, horrible question of May 26. 20 lines are there. Yes, 20 lines in that ICA format, small booklet. Yes, and you know what fun is going to happen in the question. Look at the question. It says, during the financial year 23-24, people, your previous year, previous year. The central government compulsorily acquired a factory building which was used by him for manufacturing rubber products for the past 5 years. Government has come and compulsorily acquired a building of. Yes, he received compensation on 15th March 25. People, 15th March 25 is previous. Very careful. 15th March 25 is 24-25. 15 March 25 is 24-25. Now notice, people, I sold in 23-24, got compensation in 24-25. Upward, this was taxable in 24-25. You're writing exam for 25-26. What is this information for? Nothing. They deposited the whole amount in CGA scheme within the due date of return filing. Last year I got the gains. Last year I deposited within due date of return filing. Have I satisfied conditions? Yes. Upon last year, whatever gains I made is fully exempted. So I looked at this and I said fully exempt. I said fully exempt. Hayana. Come on. It says the building was purchased by him for 5,08,052 on 1st April 2018. This is my cost of acquisition. Does it matter? No, because gains was anyway taxable last year. Ignore information. The WDV of the block on 31st March 23 is 3 lakh. This is also not important because you have already sold the building. That too in last year. He has shifted the premises to a leasehold building till the purchase of a new factory building. I wanted to buy a new building, but until I buy a new building, I decided I will use a leasehold building. I'll buy a leasehold building. On 1st April 25, Prakash, 1st April 25, your previous year, Prakash has decided to purchase a new factory building, which is falling under the 10% block for a cost of 15 lakhs. People, now if I understand this data, some cost was given, some WDV was given, something he sold, something got acquired, something got compensated. All happened last year. Then I put some money in CGS. I got an exemption. That too happened last year. Current year, I bought a new building for myself. Doesn't matter because exemption already granted last year. Current year, I bought a building for myself. And the question says the factory building cost is 15 lakhs. Tell me what to do with this information. Tell me what to do with this information. Nothing. CG says nothing, as data is of PY 24-25. Now, people, I am in 25-26. What did I do? I bought a factory building. Obviously, I bought a factory for what? Business activity. Eligible for no additional. Even if it is manufacturing, it is a building. You can only claim additional on plant and machinery. You are going to claim PGBP mein depreciation. Number was 15 lakhs into 10%. Answer came 1.5 lakhs. Answer came 1.5 lakhs. A useless information given with nothing to do with this. Last line was giving you depreciation. That is the only thing this information was all about. ICI suggested answer comes and says, when after writing so much English, 3 lakhs, 5 lakhs, students made an assumption, okay, they probably had to show the full computation. That they showed cost, sale, WDV, gains, exemption dikha ke. Then they said all this is taxable for last year, nothing important in current year. And then what I said is suggested answer, one line says capital gains. As the information pertains to 23-24, not important. This is ICI. One line they wrote and they skipped the whole thing. And then they go to depreciation schedule and there they put 10% depreciation gone over. 2 mark adjustment. 2-mark adjustment, where you sat and wrote 4 different lines, understanding 2 different computations, doing some CGS, doing some compulsory acquisition. You wrote English and all. That compulsory acquisition is taxable in the year of first installment. Did they ask? That is what happened. Yes, horrible adjustment, horrible adjustment. Now I can be very candid to you. The person who prepared the question paper made an horrible error. He actually wanted the date as 15 March 26. He wanted the date as 15 March 26, but he didn't realize it. He by mistake put 15 March 25. The person who set the exam paper was like, "Ayo, we made a mistake. Now we can't go back. Let's change the answer itself." Yes, that is what happened. Nothing was to be done with the information, people. Useless information, but that is what the adjustment came. If it was 26, then you would have had to compute the capital gains, where you would have to say full value of consideration, cost of acquisition. You will take full value of consideration as no, 5,08,000 is your purchase price. Sale value is not given. They did not give you sale value. Cost value was 3 lakhs. Cost value was 3 lakhs. Depreciable assets, cost value is always WDV. Sale value they forgot. Cost value is given to you here. You take the capital gains and then you say you purchased. You assume 50 lakhs is the sale value. You assume 15 lakhs is the sale value and then do a cost of acquisition to get the answer. Horrible question. Precisely, which is why they said skip. Yes, sometimes people, when information is not there, assume the question is wrong and skip. Yes, move forward and simply move it there. Yes, 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 yes. Keep smart people. I cannot do much about it, but that's what the question was, unfortunate enough. Clear? Yes. A question which I have prepared from my perspective, an immovable property question, a very detailed question I have prepared, putting up way too much information. I've ended up putting up way too much information. Let's see if you can figure out what 6 numbers that you need for exam. Yes, you have to figure out what 6 numbers you need for exam. Let's see if you're smart enough. Yes. Question says, Yuvika has bought a vacant land for 80 lakhs in 1989. This is my cost of acquisition. This is my cost of acquisition. Happened in 1989, matlab before 2001. Registration and other expenses have been confirmed as 10% of the cost. People, I had to pay some additional money for me to get the land. This is also my cost of acquisition. So this will also get added to my cost of acquisition, giving my COA as 88 lakhs. Giving my COA as 88 lakhs. Are we clear? Are we clear? Everyone? Yes? Come on. She constructed a residential building for 100 lakhs during 95-96 and then incurred improvement cost of 70 lakhs in the year 1999. People, this 100 lakhs is cost of acquisition. This 100 lakhs is cost of acquisition, new building made. Therefore, this is my cost of acquisition. I made another improvement on it of 70 lakhs in 1999 to be ignored. Why? Because before 2001 COI. Before 2001 COI. Check karo. Everyone, yes, able to follow? Able to follow? Come on, do it yourself. It says in the year 2004, the property was gifted to her brother Yuvraj when the FMV was 450 lakhs. When the FMV was 450 lakhs and then the construction of second floor took place for 50 lakh rupees in 2004. I gave a property to my brother. People, I should look from the perspective of receiver. Look from the perspective of receiver. Yuvraj is my brother. Will he pay tax under IFOS? No. If he's not paying tax under IFOS, cost for Yuvraj will become cost of Yuvika. Apo, now Yuvika is out of the picture. All costs that we discussed will remain the same. Just that now it is Yuvraj on the discussion. Yes. Now Yuvraj ke liye FMB is given 450 lakhs. Is this relevant? Why? Because IFOS is exempt. If IFOS was not exempt, I would have taken this. If IFOS is exempt, nothing to do with this information. Therefore, skip. Correct. Come on. In the year 2004, they constructed a second floor by incurring 50 lakh rupees. This is my cost of improvement. Can I take this one? Because, very good, after 2001. Yes. Next one says, Yuvraj is entering into an agreement for sale of the property to Johar. Johar is not a relative. Johar is not a relative. This happened in April 2013. People, 2013 is before 2014. Matlab pakka Forfeiture is going to happen. See, the sale consideration was fixed at 700 lakhs on 23rd April 2013. Yuvraj received 20 lakhs as advance in cash, executing an agreement. Due to failure on the part of Johar, negotiation did not materialize. Amount was forfeited. One full para, nothing is relevant except for the 20 lakhs, which means I will say minus 20 lakhs from COA. Minus 20 lakhs from COA. Why? Because advance before 2014. Very good. Yes. Next, Yuvraj again entered into an agreement for the sale of the house in Karan in April 2017. This is after 2014. Consideration is 850 lakhs, and in 2017, Yuvraj received 50 lakhs as advance. On the failure of the part of Karan, negotiation was not taken, and therefore I should ignore. People, this would have been IFOS in that year itself. I am in 25-26, nothing to do with me. You can tax it in IFOS, but not for this year. You will say ignore as IFOS in 2017. People, is this information clear? Is this information clear? Yes. Look at it once again. See if you understood. Correct. Is everyone following? Two things. One, it is IFOS, therefore I'm ignoring. Second, it is not even current year. It is 2017. Therefore I'm ignoring. Yes. Come on. It says, finally, Yuvraj again entered into an agreement on 1st May 25 for selling of this house at 1050 lakhs. Hey, this is my sale value. It's not my FOC, it's my sale value. He received 80 lakhs as advance by RTGS. People, I got a confirmation. I got an advance by permittable modes. I am going to underline RTGS. Yes. The stamp duty value on the agreement date is 1150 lakhs. I now have the SDV also. Yes. So this is confirmed as my SDV. Can you check for 110? Is it within 110? Yes. I took 1050 into 110 percentage. Answer hits 1155. It is 1155. SDV is only 1150. Matlab I am a good guy. If you are a good guy, income taxes, forget computation, directly take. Which means I can already confirm this is as my box. I can already confirm this is my FPOC right now. Check karo, see if you understood. People, is everyone following? Don't just write down, people, it doesn't help. I want you to do it and understand it also. Yes. Come on. It says the sale deed was executed and a registration took place on 14th July for the agreed consideration. However, stamp duty value revised the values and the value became 1400. Not relevant because I've already taken the SDV there. I've taken the SDV there. Yuvraj has paid 1% as brokerage on the sale consideration value. This is my transfer expenses. This is my transfer expenses of 10.5, no? It is 10.50 lakhs. Agreed. Come on. It says, after this, Yuvraj decided to make the following investments. He decided to make the following investments. Investments are as follows. He acquired two properties for 130 lakhs and 150 and 50 lakhs on 31st January and 15th December. I should take only 31st. Why? Because this is after ROI. Very good. This is after ROI. I cannot take any information before after ROI unless you did a CGAS. Do you see a CGAS? No. Appo. This 50 lakhs is cross. This 50 lakhs is cross. This is 15 December. I'm going to say after ROI. After ROI. Any doubts? Yes, come on. Next one. I acquired a residential house in UK for 180 lakhs. Why? Very good. Ignoring the part because it is UK, not in India. Cannot claim exemption. Because you invested after due date of return filing. If you wanted to invest after due date of return filing, you should have put the money in CGAS. Clear? Yes, yes. Come on. Next one says, I subscribed to NHCI bonds for 50 lakhs and another 40 lakhs on 9th January. People, when you go bonds, always check for 6 months. When did I sell? I sold on 14th July. 1st May was only agreement date. I literally sold on 14th July only, which means that is the date when I have the money. Going from July, August, September, October, November, December and January. Any data until 14th January can be taken. 14th January can be taken. Check. Both are 14 January. Can I take 50 plus 40? Maximum. Very good. Maximum 50. Maximum 50 lakhs. Question says, compute the income chargeable under the head capital gains. Lucky for you. No tax liability. Don't worry. Next question. Yes. FMV and SDV of the properties on 2001 is given. Is it relevant? Yes, because I bought the property before 2001. People, formula is FMV or SDV, whichever is lower. 400 is not relevant. 400 is not relevant. This 350 will be compared with, what is my actual cost? Very good. Actual cost is 188. It is land ka 88, building ka 100. Answer is 188. Matlab cost of acquisition now becomes 350. Can I confirm 350 as my cost of acquisition? Yes. So confirming 350 as my cost of acquisition, which means this is my box for COA. People, if this information is given, then technically this is not relevant. Technically this is not relevant. Technically this is also not relevant. Tell me what is left.
Yes.
Which means the 50 lakhs from the top is relevant. The 20 lakhs from here is relevant. The 20 lakhs from here is relevant. The 1050 of my FPOC is relevant. And then I have 130 lakhs of exemption. 50 nahi milega. 50 is after ROI, not eligible. Next 50 is eligible. Next 50 is eligible to claim the exemption. To claim the exemption of, and that's how you compute capital gains. Yes, way too much information, but still simple enough if you manage it properly. It's all about reading it patiently. You do it properly, you can always get the right answer. Ayanna. People, can you put out the format for me? Can we put it here itself somewhere? No place, no? It's okay. Let's not risk it. You'll understand everything today. You'll go back home and you'll come and say, what the hell happened? Come on. I'm going to put the heading as capital gains. Yes, question number 2, no? Question number 2. People, tell me, am I doing this capital gains for Yuvika or Yuvraj? For Yuvraj. On the bottom, it says Yuvika. Please cancel and write it Yuvraj, people. My mistake. If it is Yuvika, you can say answer is 0. No tax only. Yuvika gave a gift. Yes. So computation of CG for Mr. Yuvraj for the assessment year 26-27. People, will you have a change in the regime based on CG? Will you have a change in the regime? No, doesn't matter. Leave it as it is. Leave it as it is. Let's see if you can pull out the format for me. Format starts with particulars with an amounts column. particulars within amounts column. We start with FVOC. People, format is, do you have any FMV in this? Do you have any valuation officer? No, you didn't have any valuation officer. Therefore, it was SDV on agreement. I took SDV on agreement since advance by RTGS. Since advance is by RTGS, number was 1150. I think so.
1050.
STV is 1150. Actual sale value is 1050. Is 1050, whichever is higher. Whichever is higher. However, you're going to write a note here. Since SDV is less than or equal to 110% of consideration, FVOC shall be actual consideration. FVOC can be actual consideration, giving me the amount as, very good. Yes, now people, I'm oversimplifying it and writing it due to the shortage of time. You need to make sure you write proper English. If you write proper English, you should say, as per the provisions of the Income Tax Act, full value of consideration is considered as stamp duty value or actual consideration, whichever is higher, except in situations where SDV is within 110% of consideration value, where SDV on the date of agreement and transfer is given, it is taken as date of agreement, where the payment is received by permissible notes. That para is important. You get marks for that. It's a 4-mark question, 2 marks for FVOC itself. Yes, so be careful on that. With this FVOC out of the picture, I can now take my transfer expenses. I can take my transfer expenses. Number is 10.50. I can take it as 10.50, giving me the answer as 1039.50. 1039.50. Call it net consideration. Call it net consideration. Yes. Come on. Next line says minus cost of acquisition. People, this is purchase before 2001. So the format will be FMB of 2001, which is 350. STV on 2001, which is 400, whichever is lower. The amount goes in the middle column, which is 400. Then sorry 350, and then goes actual cost of acquisition. Here you will have to write cost of acquisition of Uveka since transferred as a gift. I'm writing it in the last column, right? Yes. So here the number becomes 80 lakhs plus 10% plus 100 lakhs. Yes, number hits 188, whichever is higher. Whichever is higher. People, keep the number in the same column. Please keep the number in the same column. Don't send it outside. There is a reason, because we have an advanced forfeiture in the question. Yes, yes, come on. Minus advance forfeiture before 1414 advanced forfeiture. Before 1414 number was 20 lakhs. Number was 20 lakhs. This goes to the last column as 330. This goes to the last column as 330. Correct? Come on. Let's go COI. Do it, people. Do it. Minus COI after 2001. Answer is 50 directly on the bottom. Please put them in brackets because we're going to minus 103. Right now, that's okay. You've written after 2001, that's fine. Number is 659.50. Am I calling it long term, short term? Please mention it as long term capital gains under section 112 since POH exceeds 24 months. People, this is a very important line. Not writing this line will lose you half a mark. You have to write this line for sure. Yes. Moving on forward to writing less exemptions. Point number is house property within due date of ROI in India. Go forward. No, you will still have to write it. You'll have to write exemption under 54 only for 130 lakhs since. Correct? Yes, number is 130.2. People, you can write the section numbers. I'm not quoting it because I don't think you remember it. The first one is 54. The second one is 54 EC if you want. Yes. Next one is bonds up to a maximum of 50 lakhs. We wrote no in India. The other one was UK, so we didn't take. The one before that was not taken because after due date. So I wrote one line and I covered everything off. 180. Minusing this out, capital gains hits 479.50 is my LTCG under section 112. Is my LTCG under section 112. See if you understood. Yes. Expect this to be your 4-mark question, people, because the tax liability does not being tested in 4 marks. No, expect this adjustments to be 4 marks, not the whole question. Yes. The adjustments of these are the 4-mark question because the tax liability is not tested in 4 marks. The tax liability is tested as MCQ questions. They moves into MCQ, so therefore it becomes a 6-mark question there. Yes, that is what the template is. Any doubts on this? Are we sure? Yes, good. If you have understood this, people, I think the next one should be far more easier. The only one reason I gave you that adjustment is because I want to see the tax liability. So I've oversimplified this question from your study material. Yes, see if you understand it. It says, shall we? Yes, come on. Why don't you try, people? Come on, give it a shot. Mark stuff. Come on, give it a shot. Give it a shot. Start marking stuff. Tell me which ones are relevant. I'm going to read the question. You're going to tell me what and all you missed. Then we'll discuss. Yes. Question says, money is resident individual, aged 45 years, acquired a plot of land in March 2002 for 12,25,000, paid stamp duty charges of 1 lakh rupees on the registry of the land. From here, what did you identify? My 2002 is my date of acquisition. 2002 is confirmed as a date of acquisition, which means I know this is after 2001. So I can call it date of acquisition, and I say 12,25,000 is my cost of acquisition. Stamp duty is also cost of acquisition because I paid this. Next one. He sold this land on 10th October 25 for 80 lakh rupees. Hey, this is my date of sale and sale value Very good. Next one says the stamp duty value authority decided that the sub register value is 83,50,000. This is my SDV. This is my SDV. Let's check for 110. Within 110, therefore FEOC is sale value. So I'm going to mark my FEOC as sale value. This is the answer for me. Yes, my cost of acquisition also luckily is known to me. It is 12,25,000 and 1 lakh rupee. 1325. Agreed? Everyone? Yes, come on. Question says, advise money about which option of capital gains is most suitable for him as far as his tax liability is concerned. As far as his tax liability is concerned, I want old and new, whichever is lower. I want old and new, whichever is lower, on the assumption that he has no other income and has not opted out of the provisions of 115 BSc. I am going DTR. It says not opted out. I told you not opted out is double knots. Double knots becomes DTR. Yes, but the problem before that, like Bhavik rightly mentioned, is Kaju Katli. I have told you this 101 times. This will never come to you. This will never come to you because one thing you never realize, and I've told you this 100 times, when a tax liability question comes, always follow the steps. When step number 1 was total income, that you can find. Step number 2 is split special and normal. Here it's only special, which means step 3 requires Kaju Katli consumption. Step 3 requires Kaju Katli consumption. Cannot let it go, people. Come on. Yes, yes. Small things makes a huge impact. Yes. This was an MCQ question in exam. This was an MCQ question in exam. Imagine how wrong you could have gone. Yes, 6 marks. Yes, capital gains, computation, and then tax liability. Where you did not choose DTR, gone there. Where you did not choose DTR, gone there. Where you did not, capital gains you would have done properly, people. The only mistake you're going to make is you will see that the capital gains in old is showing lower. And so if the question says compute capital gains, don't end up showing capital gains as per old. Capital gains will be as per new only. Tax alone will be as per old or new, whichever is lower. Careful on that. Yes, come on. Let's do it, people. Question number 3 should be an easy one. I'm looking at computation of tax liability. Computation of tax liability of money under DTR. Under DTR. Yes or no? Yes. With this, people, what you need to do, you need to create 2 columns. You need to create 2 columns, one as per new and one as per old. Correct? Correct? Come on. Full value of consideration is the whole 80 lakhs. The whole 80 lakhs because SDV is within 110% of consideration. Minus cost of acquisition or indexed cost of acquisition. Why? Because we are doing old and new. Yes, people, old, new, I can give you the answer. Answer is 13,25,000. Problem is on the old part. Let's do old. It's ICOA is equal to 13,25,000 multiplied with the biggest number, which is 376, divided by, what is the number saying? When did I acquire? March 2002. Here you have to be careful. People, financial year is 1-2. Financial year is 1-2, which is nothing but 100. Is nothing but 100, and therefore 100 is the right answer. It's not 105. I purposely gave that to you because you don't read financial years. because you don't read financial years careful. It is 376 divided by 100. It's not 105, it is 100. Hits answer 40, 49 lakhs, 82,000. My CGs are which side? 30, 30 lakh 18,000. 66, sir. 75,000. New May, it is 66, 75,000. This is called LTCG under section 112. People tell me if the question would have asked capital gains, answer is. If the question would have asked capital gains, answer is 66 lakh 75,000. That is not going to change. That is not going to change, which means if you get an MCQ question in exam, the MCQ question answer is 6675. It is not 30. It is not 30. Even though the tax liability may come lower, answer is 66 only because it won't be changing the income. We'll do now only. No, Kaju Katli is a tax stage or income stage? It's a tax stage. I am computing income right now. People, is the income done? Is the income done? Is the income done? Can we do tax liability? Yes, come on. Look very carefully because there is going to be a problem here. There's going to be a problem here. First, if I want to compute tax, I will say for the first 4 lakhs, taxes nil on both sides. For the first 4 lakhs, taxes nil on both sides because I am doing. People, now Rahul Bhaiya is writing Kaju Katli. In my, be smart. I should not see sweets and all coming in exam. Yes, simply write basic exemption limit. Clear? Yes. I am shooting this for YouTube. Even I am not sure what online students are going to answer. For online students, Kaju Katli is a theorem. It's not the rule. Yes, balance at the rate of 20% on the left side and 12.5% on the right side. Hit the numbers. It's 26 lakh 18,000 into 20%. 5 lakh 23,600. 784. 375. Are we clear? Are we clear? Yes. People, here you're going to have a horrible problem. Here you're going to have a horrible problem. A question which you have to probably understand clearly. Notice carefully. My total income is 66 lakhs. Person is a rich category. Person is a rich category, making him liable for surcharge. Question, surcharge on what? Left one, right one, both. Is it left or right or both? The answer is anything is fine. Answer is anything is fine. The problem with ICI people is that problem with income tax itself is that income tax never clarified. Income tax is tax as per old, tax as per new, whichever is lower. They never confirm tax matlab including surcharge or cess or excluding surcharge and cess. So which means there are two options right now. Option number one, I can calculate surcharge on both sides, cess on both sides, and then take whichever is lower. Option two, I can say here you compare, and then apply surcharge on left side also. Because on tax level, old is lower. But on an income level, I am liable for surcharge. Which answer works more preferably? First one. I would prefer doing all surcharges, all cesses, then comparing whichever is lower. So help me people. On the left side, will I apply surcharge? No. Left side income is lower. Which is what I'm telling. Income tax is saying compute tax on both the capital gains and then confirm the answer. When you're comparing tax on capital gains meaning on that capital gains. On that capital gains, are you liable for surcharge? No, because the income is only 30 lakhs. Surcharge is on the total income, no doubts. But at the end of the day, when I want tax on capital gains separately, does that capital gains be required for surcharge? No. So I will say don't put surcharge on the left side, which is what I was trying to explain to you. Yes, that is where the problem is. Answer is applying surcharge on the right side alone. Answer is 78438. 862. 813. Adding a cess. Which one? Sorry, 30?
20,944 on the left hand side. Right side with 34,500.
51? 51? 3. 34, 513. Final answers are which one? 897. 897, 330. Left side. 544. 540. 544, 540, giving me the final confirmation tax liability as 544, 540. 544, 540. This is what I would prefer as the right answer. Option number 2, people, is that you will compare on both and you saw old is lower. So then you did old and then applied surcharge on old also. Saying that total income is more than 50 lakhs, so surcharge is applicable. Yes, that can also be an alternate assumption. Now there is no clarity on this. No one has an answer. Do whatever you want. MCQs mein careful. That is what the answer is. Tax plus cess. No income on the top. Income is 30 lakhs less than surcharge limit. Which is what I'm telling you. That is the point. The point is question is asking tax liability on both, whichever is lower. Which means I need the final tax liability on both to check whichever is lower. And final tax liability means without surcharge only. Are we clear? Any doubts on this part? Yes, this was a question more to understand how it works. The total income itself is 6675 only. The tax we have to pay is 5,44,000. Yes. So in this question, people, the income which you are taxable for is 6675. But the tax which you are going to pay is 5,44,000. You will not pay anything more than that. And that's what the understanding is. Are we clear on the understanding? Yes. Good. This leaves me with the only last question before we cut for everything. We are looking at the easiest one. Again, don't appreciate this question because it might not come more for your September exams. Planning for January. No, for the students watching for January. This video is short for both September and January. So ones who are doing January probably. Yes. Question says, Paras has a proprietary business since 1617. I have a business which is running from 1617. He transferred the business on 1st April 25. Tell me people, PY, PPY. PY. For a slum sale and a consideration value of 40 lakh rupees. This is my sale value. Very good. This is my sale value. The fair market value of the property is 35 lakhs. Income tax is whichever is. Answer is 40, confirm. Answer is 40, 35 is not important. Yes, he has incurred transfer expenses of 1,50,000 for the deal. This is my transfer expense. His balance sheet is given to you as on 31st March 25 as follows. Let's look at the balance sheet. Let's figure out some things, people. Right side says building is 18 lakhs. Then it says debtors is 5 lakhs. Machinery is 5 lakhs. Other asset is 3 lakh 60. Fine enough. No problems. Left side says own capital is 17 lakhs. Can you sell own capital? Ignore. Then it says revaluation reserve for the building is 3 lakh rupees. I should minus from 18. I should minus from 18, confirming the number as 15 lakhs. Confirming the number as 15 lakhs. Check. Check. Yes, yes, yes. Come on. It says bank loan is 5 lakh rupees. People right now, no problem. Unsecured creditors is 2 lakh 50. No problem. Creditors is also 4 lakh 10. No problem. All these can be sold. All these can be sold. Let's look at additional information to make some sense out of it. It says bank loan balance includes 2 lakh for personal reasons. Can I ask the other person to pay my bank loan? No. Therefore, skip this. Answer is 3 lakhs. Skip this and the answer is 3 lakhs. Simple. Yes. Come on. Next one. Machinery costing 50,000 has been 100% allowed as deduction under 35 AD. Like a business, I've got 100% deduction. WDV of the other assets is 4 lakh 20. Up people, the other assets which I have, sorry, the machinery which I have, in that machinery, 5 lakh machinery may say 50,000 machinery is 100% allowed. Apo in income tax, does that machinery exist? No. Apo what exists? 450. Machinery exists 450. Yes, but for that 450, income tax is saying WDV is 420. Which means I should take, which means ignore the whole thing and take 420. Other assets of machinery, he means. Because niche wala other assets is different assets. Yes, people, when he said other assets, he did not mean other assets at the next line. Other assets as in machinery other assets. Yes, so I will take only 420. That is the final answer. Final answer. Yes, next one. It says other assets includes self-generated goodwill of 60,000 and a patent acquired in 2023 for 50,000 on which no depreciation was charged off. People, he made a mistake. He generated goodwill. Can I generate goodwill? No. Apo ignoring that number. So first of all, I am going to ignore 50,000 out of it. But let it go. Sorry, 60,000 out of it. Apart from that, I have a patent of 50,000. Can I claim depreciation on patent? Yes. Should I have claimed depreciation? Yes. Apo income tax would have done that. When did I buy the asset? July 23, before Gandhi Jayanti. Rate of depreciation is 25%. So for 23-24, I would have given. So WDV of patent, people. WDV of patent is gonna be 50,000 minus 25% for 23-24. Can I also give depreciation for 24-25? Yes, because I sold in 25-26 only. Yes, so this is another 25%. Answer is 28-125. Now look carefully. People, WDV of patent is confirmed. WDV of patent is confirmed. But the asset total value is 3 lakh 60. In that 3 lakh 60, what will I do? I'll first remove. Very good. So what am I going to do? I'm going to say in that 3.6 lakhs, I'm going to do 3 split. I'm going to do 3 split. Split number 1 is goodwill. Value is 0. For income tax purpose, it's self-generated. A self-generated income tax number is 0 on the patent. On the patent number is now. Very good. On the patent the number is 28-125. That leaves me with other assets. People, now look very carefully and tell me. 360 was the book value. In that, how much was goodwill value? Removed number is 3 lakhs. How much was patent value? Should I remove 50 or 28? I should remove 50 because books may it is showing 50 only. Number hits 2,50,000. People, is this clear? Is this clear? Yes, understand one horrible mistake students make. They will take that 3,60,000 minus 60 for goodwill, but they'll end up minusing 28. Don't minus 28. 28 is as per income tax. I want to minus accounts. Number hits 2,78,125. Hey, is there any change in debtors? Number is, yes ma. Even if it is there, you don't know the depreciation rate. So assume book value only. Get me the total on the right side. Right side, huh? 98. 125. 26, 98, 125. Hey, coming on the left side, can I take opening capital? No. Can I take revaluation? No, already removed. Yes. Can I take bank loan? I've changed. Hey, one more line is there. It says unsecured loans includes 1 lakh for amount payable for ornaments of the wife. Wife ornaments I am booking in my P&L. Personal. Creditors is 410, no change. 8,60,000. So what will I do, people? I will say long-term capital gains is equal to 40 lakhs minus 1.5 lakhs for transfer expense minus 1838 125, giving me the answer as 11,870. 20 lakh 11,875. If I have to put the net worth somewhere, I'm going to put net worth is equal to 2698 125 minus 860. Yes, yes, that is the question. Now, people, why did I put long term? I bought the 16, 17. I sold in 25, more than 36 months to get the answer of slum sale. Yes. Now, the one mistake which ICI made in the exam paper, what they made is they looked the self-generated goodwill. They took the self-generated goodwill and they said Adu also is eligible for depreciation. They ended up giving depreciation for self-generated goodwill. They gave depreciation for 2 years and then long-term capital gains accordingly came down. Because of which none of the options were matching. They did not have any option matching. One option which matched with no depreciation, they unfortunately instead of writing long-term, they wrote short-term. So the answer which was matching, gain is wrong. And the answer which is not matching is showing long-term. And therefore none of the options were correct. And that's how the mistake they had. They took goodwill for depreciation, which apparently is not allowed. Cannot allow depreciation of goodwill. Are we clear? Simple, sweet, beautiful question, people. Nothing great about this. Unfortunately, not for September. Yes, definitely not for September. But yes, do expect 6 marks. Do expect the previous question to be part of your scope. Yes, the previous immobile property is what my gut feeling is on this exams. Be very careful on that. Are we clear? Are we clear? Are we clear? Good. That is how your capital gains end up for discussion. Yes.